एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल और नेचुरल गैस। कल नेचुरल गैस काफ़ी बुलिश था, हायर लेवल पे एक रेजिस्टेंस जोन था, वहीं पर साइडवेज चला गया था, फिर थोड़ा बहुत एक ब्रेकआउट जैसा किया था, वापस सेल ऑफ में आ गया इंडियन मार्केट में मॉर्निंग से। क्रूड ऑयल में भी कल सेल ऑफ आया था, उसके बाद रिकवरी करी है। बाय द वे ये याद रखना, ये कल हमने जो चार्ट लगाया था वो नेक्स्ट मंथ का था, बिकॉज ऑफ एक्सपायरी अब चेंज हो गई है। सो यू कैन नाउ चेंज दिस फ्यूचर चार्ट एज वेल। ठीक है, ये नेक्स्ट मंथ का था, इसको यहाँ से रिफ्रेश करके फर्स्ट मंथ का, करंट मंथ का ही यूज़ कर सकते हैं अब। ठीक है, तो कल एक सेल ऑफ आया था, नीचे सपोर्ट था, वहाँ से बाइंग आई थी, वही बाइंग नाउ इट इज स्टिल कंटिन्यू। लेट्स सी क्या प्लान कर सकते हैं अभी फिर से। मार्केट भी देखोगे तो कल एनवीडिया के रिजल्ट्स आए थे, आप लोगों ने आई होप ट्रैक किए होंगे। एक्सपेक्टेड था थोड़ा सा कम ही, एक्सपेक्टेशन के अकॉर्डिंग थोड़ा सा प्रॉफिट और रेवेन्यू कम होंगे, बट सरप्राइजिंगली जो अर्निंग थी वो भी 3.36% ज़्यादा आई थी, और रेवेन्यू भी 3.86% ज़्यादा आया था। तो काफ़ी अच्छी न्यूज़ थी। अगर नेगेटिव आता ये अर्निंग, तो देर इज़ अ वेरी हाई चांसेस एक बड़ा सेल ऑफ देखने के लिए मिल सकता था यूएस मार्केट में, और इवन इंडियन मार्केट में भी थोड़ा बहुत उसका इम्पैक्ट होता है आईटी शेयर्स में। बट सरप्राइजिंगली काफ़ी अच्छा अर्निंग रिजल्ट आया। एनवीडिया की जो अर्निंग थी काफ़ी अच्छी थी, इस वजह से एनवीडिया का शेयर भी कल थोड़ा बहुत पॉजिटिव ही क्लोज हुआ, 2-2.5%, 3% के आसपास। इंडियन मार्केट भी उस वजह से आज, कल गिफ्ट निफ्टी इस वजह से थोड़ा सा अपसाइड था। आज अर्ली मॉर्निंग मार्केट ओपन हुआ गैप अप, हल्का सा सेल ऑफ आया, गैप फिल किया एंड देन कंटिन्यू। बैंक निफ्टी देखोगे, बैंक निफ्टी थोड़ा सा, बैंक निफ्टी भी मॉर्निंग पे फ्यूचर की बात करें तो ओपनिंग के बाद मॉर्निंग पे हल्का सा गैप अप हुआ था, बट थोड़ा सा वही साइडवेज चला गया। 15 मिनट टाइम फ्रेम पे बहुत ज़्यादा ही साइडवेज चला गया, मतलब क्या ही करें। अभी भी फर्स्ट 15 मिनट के अंदर ही ट्रेड हो रहा है, बाहर अभी तक निकला नहीं है। लेट्स सी क्या करता है बैंक निफ्टी। वैसे भी ऑल टाइम हाई पर है, कुछ रेजिस्टेंस बना नहीं है, कुछ नया रेजिस्टेंस क्रिएट करता है या फिर और ऊपर ही जाता रहता है बैंक निफ्टी स्पेशली। 15 मिनट में भी कोई वहां पर अभी तक रेजिस्टेंस तो क्रिएट हुए नहीं है। मॉर्निंग पे निफ्टी में बाइंग जरूर अच्छी आई थी, अभी तो साइडवेज हो गया है। लेट्स होप थोड़ा अगर कंटिन्यू करता है। ठीक है, गैप अप ही ओपन हुआ, सीधा सपोर्ट पे आया नीचे, वहां से एक बाइंग का अच्छा ट्रेड मिला 15 मिनट टाइम फ्रेम पे। लेट्स सी क्या ये कंटिन्यू करता है निफ्टी भी, या फिर थोड़ा सा रुकता है 15 मिनट में। यहाँ पर अभी तक कोई रेजिस्टेंस प्रीवियसली तो दिख नहीं रहा। लेट्स सी यहाँ पर कोई अगर रेजिस्टेंस फॉर्म होता है निफ्टी 50 में। आना है प्राइस को तो एटलीस्ट 20, फ्यूचर में 26,140 के नीचे क्लोज करना पड़ेगा 15 मिनट की कैंडल को, तभी कहीं नीचे आ सकता है। नहीं तो यार साइडवेज है, ऊपर ही है, अनटिल अनलेस 26,140 ब्रेक नहीं होता 15 मिनट फ्यूचर में, निफ्टी में। लेट्स मूव ऑन टू द क्रूड ऑयल एंड नेचुरल गैस। अभी तो नहीं है। ठीक है, बाकी बिटकॉइन को देखोगे कंटिन्यूअसली फॉल ही कर रहा है, कल भी सेल ऑफ में ही चला गया था, फिर लेट नाइट इंडियन मार्केट क्लोज होने के बाद थोड़ी बहुत रिकवरी जरूर आई है, बट ओवरऑल देखोगे तो ऐसा लग रहा है बेयरिश ही बना हुआ है बिल्कुल। हायर टाइम फ्रेम पे भी अगर चेकआउट करोगे, लाइक 4 आवर टाइम फ्रेम पे, वहां पर भी एटलीस्ट थोड़ा सा प्राइस को अभी ऊपर एक लेवल है पेंडिंग, वो टेस्ट करने आना था, वो कल आया नहीं है। लेट्स होप आज क्या पता देखने के लिए मिल जाए हमें ये लेवल 94,800 से 95,800 के बीच में। दैट इज अ रेजिस्टेंस जोन एक्चुअली। बाकी नीचे सपोर्ट भी है अब तो 86,800 से 87,800 के अराउंड। तो एक ऊपर रेजिस्टेंस है, वहां जाता है तो वापस सेलिंग का ही अपॉर्चुनिटी मिलेगा वापस से। मैं 4 आवर टाइम फ्रेम की बात कर रहा हूँ। बाकी आज अभी 1:30 लंदन सेशन ओपन हो जाएगा। 1:30 के बाद शाम को 6:30 न्यूयॉर्क सेशन ओपन होगा। एंड देन 8 बजे यूएस मार्केट है, उससे पहले एक इंपॉर्टेंट डेटा है, इनका ध्यान रखना, गोल्ड और सिल्वर को इम्पैक्ट करेंगे, फिर नेचुरल गैस की इन्वेंट्री। ठीक है। क्रूड ऑयल अच्छा है, कल से अगर किसी ने होल्ड किया हुआ है तो होल्ड कर लो। कल वो टारगेट मैंने बड़ा रखा था, हाफ टारगेट तो बुक कर लिया था। क्या ये वापस कल का हाई हिट करने जाएगा? दैट वाज अ फाइनल टारगेट। बीच में अभी कोई एंट्री है नहीं, अब बीच में एंट्री नहीं कर सकते, कल ही ट्रेड बना था वो। सपोर्ट काफी बड़ा था, वो स्ट्रांग भी था, काफी देर कंसोलिडेशन किया और फिर निकल गया ऊपर की ओर। कल हाफ टारगेट तो मिल गया था। लेट्स सी क्या फाइनल टारगेट देता है या फिर नहीं। या फिर यहाँ पर जो रीटेस्ट जोन है, याद होगा यहाँ पर एक सपोर्ट एरिया था, उसका ब्रेक डाउन कर दिया था, तो दैट मे बी एज अ रेजिस्टेंस जोन एज वेल, वो भी चेकआउट करना थोड़ा सा। ठीक है, चार्ट थोड़ा सा अलग दिख सकता है बिकॉज एक्सपायरी फ्यूचर की हो चुकी है, तो एक करंट मंथ का ही चार्ट है। हाँ ठीक है। बाकी 4 आवर में भी देखोगे तो नेचुरल गैस में अभी वही 420 के आसपास ही है रेजिस्टेंस, 4 आवर के आसपास। ठीक है, 420 430 वो एक लेवल ही है अभी मेजर। हाँ तो जा तो सकता है। डे हाई कल का वो रेजिस्टेंस बना था, थोड़ा बहुत सेल ऑफ तो आ ही गया है। एक बार और देख लेते हैं, कुछ और रेजिस्टेंस इस लेवल के ऊपर पेंडिंग है, बिकॉज वही 4 आवर में तो मुझे वही दिख रहा है, 420 430 का मेजर लेवल नाउ। नीचे सपोर्ट अभी भी इंटैक्ट ही है, ऊपर हायर टाइम फ्रेम पर ही है रेजिस्टेंस जितना मुझे दिख रहा है। लोअर टाइम फ्रेम पे रेजिस्टेंस सो ही नहीं कर रहा है। होगा ऐसा नहीं है, नहीं होगा। 15 मिनट टाइम फ्रेम पे देयर इज डेफिनेटली अ रेजिस्टेंस। इस पर्टिकुलर एरिया पे ना एक 5 मिनट का टाइम फ्रेम पे, ये तो 15 मिनट का चार्ट है, देयर इज अ 5 सपोर्ट इन 5 मिनट टाइम फ्रेम। ठीक है, 5 मिनट टाइम फ्रेम पे यहाँ पर एक सपोर्ट है, बट वी आर ट्रेडिंग इन अ 15 मिनट टाइम फ्रेम, तो मैं लगा नहीं रहा हूँ उसको, लगा तो देता हूँ बट उसको ट्रेड नहीं करेंगे। ठीक है, देयर इज अ सपोर्ट हेयर इन अ 5 मिनट टाइम फ्रेम, बट ऐसा नहीं है कि वो पहली बार आ रहा है उस लेवल पे, यहाँ पर वो टेस्ट हो चुका है। पहली बार कल ही टेस्ट हो गया था, 19 तो कल ही थी, कल शाम को टेस्ट हुआ था 8 बजे के आसपास, वहाँ से एक ऑफ हमें बाइंग देखने के लिए मिला था। एंड देन उसके बाद फिर प्राइस 8 बजे ऊपर चला गया था इन्वेंट्री में, फिर से 9 साढ़े 9 के आसपास फिर से री एंट्री का एक मौका था उसमें, फिर क्लोज होते होते फिर उसी सपोर्ट पे क्लोज हुआ था, तो गैप अप हुआ था, तो ये तीसरी चौथी बार आ रहा है इस लेवल पे, आ रहा है क्या, आ ही गया था यहाँ पर ये, दिस इज अ फोर्थ टाइम price hitting this support level as per the 5 minute time frame, not 15 minute, तो 15 मिनट में मुझे कुछ दिख नहीं रहा है वहाँ पे, तो we will wait 5 मिनट टाइम फ्रेम पे, बिकॉज 5 मिनट में हो सकता है यहाँ पर एक रेजिस्टेंस भी क्रिएट कर दे ये, तो फिर प्राइस थोड़ा सा फंस जाएगा। लेट्स सी 15 मिनट में कुछ अगर सिनेरियो क्रिएट होता है यहाँ पे, देखेंगे, अभी के लिए कुछ नहीं है। क्रूड ऑयल पे नज़र डालते हैं। हाँ वो तो ठीक है, उसने डाल दिया था यहाँ पर, बिटकॉइन निफ्टी में कंटिन्यू बोले से ही है। निफ्टी स्टिल कंटिन्यू बुलिस, निफ्टी अभी भी बुलिस ही बना हुआ है, नो साइन ऑफ रिट्रीट, नो साइन ऑफ रिट्रेसमेंट। वैसे देखोगे ना इसको, निफ्टी को थोड़ा सा बायर्स ध्यान रखना, अब ये रेजिस्टेंस पे हिट करने वाला है, 4 आवर टाइम फ्रेम और 1 आवर टाइम फ्रेम के अकॉर्डिंग रेजिस्टेंस हिट होने वाला है ऑलमोस्ट। 26,200 टू 26,260 रेजिस्टेंस जोन ही है फॉर द 1 आवर टाइम फ्रेम। 4 आवर में मुझे रेजिस्टेंस दिख रहा है, रेजिस्टेंस थोड़ा सा 4 आवर में बड़ा कह सकते हो आप, बट इट इज ऑलमोस्ट गोइंग टू हिट द रेजिस्टेंस एरिया इन 4 आवर, 1 आवर, बोथ टाइम फ्रेम। ठीक है, निफ्टी हिट करने वाला है रेजिस्टेंस, निफ्टी इज हिटिंग द रेजिस्टेंस एज पर 1 आवर एंड 4 आवर टाइम फ्रेम। ठीक है, बाकी टाइम फ्रेम पे नहीं है रेजिस्टेंस, हाई टाइम फ्रेम पे 4 आवर और 1 आवर में क्लियर रेजिस्टेंस है इस रेंज पे, 26,200 टू 260, बिकॉज यस डेली में कोई रेजिस्टेंस नहीं है ना ही। हाँ, तो ठीक है। नेचुरल गैस में यही है, एक मेजर सपोर्ट नीचे 390 के अराउंड। ऊपर तो इसमें कुछ रेजिस्टेंस 15 मिनट में मेजर दिख नहीं रहा है, ना ही सपोर्ट दिख रहा है। ये 5 मिनट का लेवल लगाया है मैंने, 15 मिनट में कुछ है नहीं, बाकी फिर वो सीधा 4 आवर में ही दिख रहा है पीछे चार्ट में। सो कोई रेजिस्टेंस बनाता है तो 130 लंदन सेशन ओपनिंग, फिर देखते हैं। बाकी क्रूड ऑयल में कल का नीचे वाला ही सपोर्ट है, जो बड़ा सपोर्ट लगाया था, दैट इज स्टिल इंटैक्ट। काफी बार टेस्ट हो गया अब तो। नीड टू सी क्या अभी भी होल्ड करता है या फिर नहीं। ऊपर ये रीटेस्ट जोन है, कल वो एक सपोर्ट ब्रेक हुआ था, उसका रीटेस्ट आप मान सकते हैं इसे। एक कैंडल अगर ना 400 के नीचे अब क्लोज होती है 15 मिनट में नेचुरल गैस में, तब एक सेलिंग का ट्रेड अच्छा बन जाएगा, अगर क्लोज हो जाती है अगली एक दो कैंडल। वेट करते हैं। क्रूड ऑयल को अगर सस्टेन करना है अपर लेवल पे, तो कहीं एक नया सपोर्ट बनाते हुए जाना पड़ेगा ऊपर की ओर, अदरवाइज वापस अगर सेलिंग आती है इसी क्रूड ऑयल के लेवल से, तो फिर प्राइस नीचे के सपोर्ट भी होल्ड ना करे, क्योंकि वो नीचे वाला सपोर्ट इतने बार टेस्ट हो गया है। कल भी बड़ी स्लोली स्लोली ही बाइंग आई है वहां पर, बड़ा स्लो। ब्रेकआउट हुआ था पहली बार, मैं सपोर्ट ले लिया था ना इसमें 6 नवंबर को। ठीक है, इस लेवल पे पहली बार एक बार बाइंग ऑलरेडी आ गई है, हाई बना था, दूसरी बार बाइंग रिसेंटली आई थी, लोअर हाई बना था, ये थर्ड टाइम आ रहा है क्रूड ऑयल जो कल का लो का सपोर्ट है। तो वेरी हाई चांसेस अगर यहाँ कहीं नया सपोर्ट नहीं बनता है तो फिर ये आई डोंट थिंक सो कि होल्ड कर पाएगा, फिर एक लास्ट चांस डब्ल्यू पैटर्न का ही बनता है, विच इज़ वेरी अनलाइकली। एक रेजिस्टेंस है वो मार्क कर लो। कल यहाँ पर ना काफ़ी देर प्राइस होल्ड करके बैठा था, फिर वो जो ब्रेकडाउन हुआ रुका ही नहीं प्राइस, तो एक ही आपका, इसको एक साथ ही मिक्स कर दें क्या। ठीक है, ये एक आपका नीचे वाला रिटेस्ट जोन है, ऊपर वाला रेजिस्टेंस जोन है। ऊपर एक रेजिस्टेंस बना था, नीचे सपोर्ट, फिर ब्रेक हुआ, सेल ऑफ कंटिन्यू चला गया था। ऊपर वाला पावरफुल है। तो नीचे वाले से भी थोड़ा एक्यूमुलेट कर सकते हैं, ऊपर वाला लेवल भी ठीक ही है, ऊपर वाले लेवल से भी एक्यूमुलेट किया जा सकता है, बट वो थोड़ा सा डिस्टेंस में है, पास पास ही, इसको मैं ऐसे क्रिएट कर देता हूँ। ठीक है, तो इस एरिया से भी ले सकते हैं थोड़ा बहुत सेलिंग। ठीक है, जरूरी नहीं है ऊपर तक जाए जाए वो, यहाँ से भी लिया जा सकता है। ये नीचे वाला है लेकिन रीटेस्ट, ऊपर वाला रेजिस्टेंस, तो कंफ्यूज मत करना कि वो दो रेजिस्टेंस एक साथ बने हुए हैं, या तो कंबाइन कर दो दोनों को, बट वो दोनों रेजिस्टेंस नहीं है, एक तरह से एक सपोर्ट का ब्रेकडाउन हुआ है, एक एग्जैक्ट रेजिस्टेंस है। ठीक है। बाकी कोई सपोर्ट तो बना नहीं रहा है ये यहाँ पे। करे रेजिस्टेंस से सेलिंग आई, सपोर्ट से बाइंग, फिर रेजिस्टेंस से सेलिंग, ब्रेकडाउन। नेचुरल गैस भी क्लोजिंग नहीं दे रहा है, 400 के नीचे क्लोजिंग चाहिए एक, 400 के नीचे क्लोजिंग आती है तो मुझे लगता है बढ़िया रहेगा। ये जो लोग कल से अगर बाइंग करके बैठे हैं क्रूड ऑयल में, कल वो बाइंग वाला ट्रेड, वो अगर निकलना चाहें तो रीटेस्ट पे ही निकल सकते हैं। स्टॉक सोर्स ऑन एनवीडिया अर्निंग रिलीफ हैज मार्केट ब्रेस फॉर यूएस जॉब डेटा। पता है ना 5 मिनट में है यहाँ पर ये जो सपोर्ट मैंने लगा रखे हैं ये 5 मिनट वाले हैं सारे। बट हम 15 मिनट में ट्रेड कर रहे हैं तो 15 मिनट में वहाँ पे कोई लेवल नहीं है, 15 मिनट में नीचे ही ये सपोर्ट है यहाँ पे, बाकी और ऊपर कुछ नहीं है, बाकी सीधा फिर 4 आवर में ही है ऊपर 420-30 के अराउंड रेजिस्टेंस। जिस तरह से कंसोलिडेशन कर रहा है ये नेचुरल गैस, कैंडल क्लोजिंग आती है 400 के नीचे तो सेल ऑफ अच्छा आ जाएगा, नहीं आती है तो फिर या तो साइडवेज या फिर ऊपर गया तो फिर तो कोई ट्रेड नहीं बनेगा खैर। अपॉर्चुनिटी सेलिंग साइड पे अगर कैंडल क्लोज होती है डायरेक्टली 400 के नीचे। ऊपर भी जा सकता है अगर ऊपर क्लोज आएगी तो। नाइन मिनट लेफ्ट, 130 की कैंडल का ध्यान रखना, 130 कैंडल वेरी इंपॉर्टेंट। न्यूयॉर्क सेशन से पहले लंदन सेशन ओपनिंग होगा। व्हाइट हाउस आस्क कांग्रेस टू रिजेक्ट बिल कर्बिंग एनवीडिया एक्सपोर्ट्स। बाकी ऐसा निफ्टी बताया, निफ्टी स्टिल बुलिस, बैंक निफ्टी भी स्टिल बुलिस, कोई रेजिस्टेंस ही नहीं बन रहा है बैंक निफ्टी में तो। मॉर्निंग पे निफ्टी में जरूर एक बाइंग का ट्रेड बना था, वही चल रहा है 15 मिनट में। बैंक निफ्टी स्टिल देयर इज नो कोई ट्रेड ही नहीं बना एक तरह से कह सकते हो फ्यूचर में मेरे तो। मॉर्निंग से कंसोलिडेशन किया है, हल्का सा ब्रेकआउट जैसा आया है, ऑल टाइम हाई है, ऊपर कोई रेजिस्टेंस नहीं है। कोई रेजिस्टेंस क्रिएट करते हुए अगर जाता है तो वेल एंड गुड। बाकी देखते हैं बैंक निफ्टी क्या कुछ पुल बैक देगा या फिर कंटिन्यू करता है। बैंक निफ्टी में रिसेंटली 15 मिनट में फ्यूचर के चार्ट में ब्रेकआउट हुआ है अभी, ओपन इक्वल टू लो जो कैंडल बनी है 1230 वाली। अब इसको वापस अगर नीचे जाना है तो ये बुलिस ही है, ओवरऑल बुलिस ही मान के चलो। बैंक निफ्टी को अगर बेयरिश होना है फ्यूचर में तो 59,250 के नीचे क्लोजिंग चाहिए, अदरवाइज आई एम नॉट एक्सपेक्टिंग मच सेल ऑफ। इसके नीचे क्लोज होता है तब थोड़ा सा हो सकता है और गिर जाए इंट्राडे में। हाँ तो वहाँ कल ही सेलिंग आ गई थी, इसने ब्रेकआउट। कि कल एक ब्रेकआउट और हुआ था बैंक निफ्टी फ्यूचर में, उसका भी रीटेस्ट पेंडिंग है, पता नहीं कब आएगा करने। ये क्रूड ऑयल में रीटेस्ट जोन से भी थोड़ी क्वांटिटी ऐड कर सकते हैं, ठीक है। वो दोनों ही रेजिस्टेंस है, एक रेजिस्टेंस है, दूसरा सपोर्ट था ब्रेकडाउन हुआ है, रीटेस्ट है। लंदन सेशन ओपन हो गया ऑलरेडी। नेचुरल गैस ना फंस गया है यहाँ पर बीच में, सपोर्ट और रेजिस्टेंस की एक रेंज बना के। सपोर्ट था, कल बाइंग आई थी नेचुरल गैस में एक बार, फिर दूसरी बार, फिर तीसरी बार, ये चौथी बार आ रहा है सपोर्ट पे। ठीक है, नेचुरल गैस। बट अब यहाँ पर एक रेजिस्टेंस भी बना हुआ है, तो ये ना नीचे जा पा रहा है, सपोर्ट की वजह से सपोर्ट होल्ड कर रहा है, नीचे जाने से रोक रहा है। ऊपर रेजिस्टेंस बन गया है हल्का सा, वो उसको ऊपर नहीं जाने दे रहा है। सो इट इज ट्रैप्ड बिटवीन द लेवल्स। अब किसी एक साइड पे ब्रेकआउट या फिर ब्रेकडाउन हो कैंडल का, तब ही शायद मुझे लग रहा है मूव प्रॉपरली आ जाएगा। या तो ऊपर 402 के ऊपर ब्रेकआउट हो, या फिर 399 के नीचे ब्रेकडाउन। जिस साइड भी ब्रेकआउट या ब्रेकडाउन होगा उस साइड के एसएल निकल जाएंगे, देन वी कैन से अपोजिट पार्टी इज स्टिल स्ट्रांग।
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT
argue with those kinds of numbers, to be honest. The AI industry is in a bubble. Well, Jensen Huang doesn't think that it actually is. Remember, this is now by far the world's most valuable company, and it expects sales of around $65 billion in the January quarter. Just for context, that's roughly $3 billion more than analysts had predicted. Jensen Huang, as ever, wearing a tie, I'm just going to point that one out, but still, nevertheless, pretty optimistic.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
So Crude this morning is NVIDIA. But if I buy a chip from NVIDIA, from Crude, am I going to make money making that chip? That's maybe the question that I think is the critical one that we need to answer. But let's get some more details on what is happening here. Matt Bloxham from Bloomberg Intelligence joining us. Let's just deal with NVIDIA first of all. They will deal with the wider questions. That was a good set of numbers.
It was, but we've become accustomed to good sets of numbers from NVIDIA. You know, that 65 billion you mentioned of sales for the Q4, about a 5% beat and 66% year-on-year growth. So this is a business that's doing incredibly well. And you say 75% gross margin, a hugely profitable business too. And that profit is kind of what helping to kind of fund, you know, everything else, you know, and there is that kind of circularity that's still out there as a question for the industry. But yeah, you know, the near-term outlook, certainly for NVIDIA, is a healthy one. They talked about $600 billion of capex from their big customers going into the industry next year. So I think, yeah, there's no signs that this is going to slow anytime soon. I'd say that the second half of next year is perhaps a bigger question mark about whether that super cycle can be sustained or not.
Let me ask you about China. They don't count on anything from China, do they? And Jensen Huang has been popping up at every sort of Team America White House event you can imagine recently to be praised by President Trump and to try and persuade President Trump, perhaps, to allow him to talk to the Chinese about selling more and more advanced chips in China. He seems to be making some progress.
Yeah, there's this GAIN AI kind of law that they're trying to push through, which would essentially require NVIDIA to meet domestic demand first before supplying other markets, including China. We'll see where that comes, because there's obviously some other political lobbying going on in the US to continue to restrict them because of the concerns about military technology. I think that they're right to assume that China's a zero opportunity for them, and I think that's the way the wider market sees it too. So it would be kind of an incremental opportunity. Personally, I think the Huawei and the other domestic manufacturers are catching up on the technology, still behind, they're catching up. And the Chinese government has a China first policy, and it's encouraging, if not mandating, its local businesses to source locally, not from NVIDIA, and that's easier to do as the technology catches up. So I think the outlook for China is a tougher competitive market going forward for NVIDIA, even if policy restrictions from the US administration are relaxed.
Well, I think what's fascinating there as well is we saw this with the relationship between Donald Trump and Crown Prince Mohammed bin Salman as well. They moved Saudi Arabia to being kind of a new tier of ally to, in case you do see those restrictions happen, that the chips can still get to the Middle East. We're putting a lot of emphasis on just one company. Should we be looking at the Microsofts, the Amazons, the Oracles of the world to kind of detect where the problem child is?
Or maybe even the opportunity. But I think, they are potentially the problem child next year and beyond, because they are making to some degree speculative investments. They're anticipating that this AI super cycle continues, and they're building capacity for the kind of midterm, and they're in an arms race with each other. They because one's doing it, the other has to do it, otherwise they're going to be out of the picture. So I think, but they, to continue to keep their shareholders comfortable with the outsized capital spending they're making, they need to continue to show evidence that this investment is helping their bottom line, whether it's through extra sales growth, better margins, more market share, and that needs their customers to continue to spend. So that's enterprises. Are enterprises seeing enough return on investment across their businesses to justify that, to continue to spend? Will consumers spend $20 a month for AI products? And that's going to take time to kind of become clear.
All right. Matt Bloxham from our Bloomberg Intelligence team walking us through the NVIDIA story, the political story, and, of course, the read-through into the broader sector. Speaking of the read-through into the broader sector, crypto has been kind of tied and intertwined with what we see in the tech space. So Bitcoin at the moment trading back above 90,000. We're looking at about a 92,000 handle right now, higher by just shy of 2% as it kind of gains a little bit more momentum with risk assets. It comes after it hit the lowest level in 7 months yesterday, extending the more than $1 trillion wipeout across the asset class story. So where does it get its cue from? Well, Anna Herrera, Bloomberg's senior editor for digital finance, joins us around the table. Anna, we were just having a conversation with Matt there about the tech story. Is crypto driving the tech conversation, or is the tech conversation driving crypto?
I think it's the tech conversation driving crypto, which is a bit ironic because for years we heard crypto would be sort of an asset class that would sit on itself, sort of something that was uncorrelated, digital gold, a hedge against inflation. And now actually we're seeing, as it gets more institutionalized with ETFs, perhaps, we're seeing really that it's moving with other risk assets, right? When risk aversion gets high, we're starting to see sell-offs. And while prices are up today, we've been in a sort of downward spiral that's wiped out most of the gains that crypto has had since over the year. So we're watching and seeing, will it continue to be correlated with risk assets, or will it go on another trajectory?
There was this whole idea that institutional money would be this kind of stabilizer. What's going on?
No, it's clearly not stabilized as much. I guess it's stabilized in the sense that perhaps you can now say maybe when other like tech stocks are down, you can think Bitcoin, but there's still, it still goes down 10% and very quickly, or even more, right? And you can lose gains of over that you've accumulated in a year in like a week.
How do you think institutions feel about that?
So I think institutions, well, it depends on the type of institutions. The conversations you have obviously with firms like endowments, the really big ones, they say they still can't, justify going full in because, they can't explain when there's a sudden 10% loss in an hour or something to their, that's not the kind of risk they can take. But, they can step in the market with, market neutral strategies and things that are a bit less risky.
Anna, thank you very much. Thanks for the update. Bloomberg's Anna Herrera with the latest on that crypto story. Yeah, real weakness coming through in Bitcoin, but not today. Today it's up with the AI story, with the NVIDIA story, with the tech story. Coming up, we check in on markets and questions around a tech bubble. We'll get some views from Carson Block, CEO and founder of Muddy Waters Capital. Stay with us for this conversation. What views does he have on the big tech landscape, the wider investing landscape? How is he thinking about 2026? 8:26 here in London. This is Bloomberg.
I don't even fully understand what brand strategy even means nowadays. I come from thinking about storytelling from a product marketing perspective, not a brand perspective. The splashy brand campaign has its place and it can be useful, but I think it is no longer the existential driver of success or failure. Good marketing is to understand what really matters for the people that you're selling to and explaining to your customers what your products do, what are those details that really sets it apart from the competition, that really unlocks value in a disruptive way. As marketers, our job is to go figure out what is the smartest thing for us to do and then not be emotionally attached to it if new data comes in. As long as we stay focused on that, being relevant is not going to be a problem.
Winning Champions League, whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
In case case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's
Okay.
You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
In case you missed it on Bloomberg Open Interest. Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. It is a tech story, but there's other pieces of it too. Let me walk you through it. Broadly, we are seeing a 1% gain on the stock 600. The underperformer is right here, the FTSE 100, but still higher by 0.7%. That's your broader risk on read-through. The CAC Iran is really benefiting from that tech trade as well, plus the BNP story is moving that market. The DAX, though, which is, of course, helping with some of the SAPs, the tech story, is also benefiting from defense, which is coming back from some of the sell-off that we saw yesterday. But Guy, tech across the board.
Okay, let's talk about kind of the internals and what we're getting and what we're seeing. I have mixed news in terms of what we are seeing. So let's start with the basic arithmetic. Stock 600, 480 up, 104 down. Nice ratio, so that looks pretty good. However, look at what is happening with volume. This doesn't feel like a convincing big volume kind of a day, which I think is interesting as well. Take a look at what we're seeing in terms of the gainers. I think they're fairly obvious. That tells you maybe we haven't learned that much over the last 24 hours. There are some interesting stories here. I'm not sure ASML is actually one of them. It is up. Nvidia had a great day. ASML is up. Shocker. The other story is Novo beginning to come back a little bit. The story of the morning, actually, to my mind, is in the banks. BNP Paribas out with numbers this morning. Well, out telling the market that it's going to bring forward its CET1 target. That's great news. Returning money to shareholders. This is good news, and the market's responding really positively to this. Basically, it feels they can do this and give money back. And the fear in the European banks has been maybe that after a great period of giving money back, that would start to peter out a little bit. Maybe not. Anyway, let's move on to the laggards. Again, Nestlé, National Grid, Vinci. These are basically utilities. Maybe not Nestlé, but you could argue maybe Nestlé is a kind of utility of the food business. It is the biggest food business in the world. It is a staple. It is all of those kinds of things. When you go back into growth and you go back into tech, what do you sell? That. That probably is the narrative this morning. There's also a yield factor in all of this as well. But I don't think none of these things are hugely shocking this morning in terms of the way that the market is positioning. Anna, what else do we need to know?
Yeah, let's get an update on some of the other stories that we're covering this morning. Investors are zeroing in on today's release of the delayed US labour market report, which is expected to either kill or rekindle waning expectations for a Federal Reserve interest rate cut next month. The data will likely be the only official major jobs data published before Fed policymakers meet for the final time this year. That'll be the middle of December. The Japanese Prime Minister Sanae Takaichi is set to unveil $112 billion in fresh stimulus. Documents seen by Bloomberg show the economic package will be funded by an extra budget that's about 27% bigger than what was pledged in her predecessor's spending plan a year ago. Sources say, given the larger size, additional Japanese bond issuance will also be bigger than last year, and we've seen JGB markets responding, yields going higher. BNP Paribas has announced a new €1.15 billion share share buyback and plans to reach a target for capital strength earlier than expected. As Guy was telling us this as the French lender CEO seeks to reverse a recent slide in the stock price. The bank also said it plans to lift its CET1 ratio by 13% by 2027, a year earlier than previously planned. Chrissy.
Now, lots to watch in terms of what is actually moving this market. Green on screen across the board. Let's get a little bit more on that, especially as NVIDIA earnings seem to be blowing this market away. You're seeing the ripple effects as we just walked through. Well, let's see how you go from here. Carsten Block, founder and CEO of Muddy Waters Capital, joins the program here in London. Welcome to London.
Thank you.
Lovely to see you. We're seeing green on the screen today. I think there was a lot of jitters earlier this week about whether or not we would get to this point coming after those NVIDIA earnings. There's a lot of people, Guy Johnson included, who are looking for the moment that the bubble pops. If you're one of those people, how easy is it to short the market right now?
Well, so I presented at Irisone yesterday, and I dropped a long, and so some people asked me, are you done with short selling? No, but I would much rather be long than be short in this market, I think is the terse answer there. Look, if you're out there trying to short NVIDIA or any of these big tech names, you're not going to be in business very long. So there are, when I look at AI, you have all these AI adjacent companies, you have these AI player or AI pretenders. That's where you would want to look to short. However, so long as the leaders such as NVIDIA are still going up and to the right, I think that would be a very dangerous trade. So yeah, we have a list of names that we think are suspect, and when the time is right and some of the froth is out of the leaders in this space, that's when we're going to look at them. But until that point, you know, we're staying out of those waters.
You said until the froth comes out of some of the leaders in the space. What is the canary in the coal mine that suggests that froth will come out?
Yeah, actually, you know, I want to rephrase that a little bit, because I think the way this will kind of end is that you'll have an oversupply of speculative assets, right? It'll eventually crush the demand for speculative assets. So we see these cycles periodically. We saw this at the end of 2020 going into the beginning of 2021. I mean, it was so bad, that's when you had these, you know, almost valueless stocks that were ripping. And so what happened was Wall Street responded by producing a lot more financial product. And you had all these de-SPAC transactions, and that just collapsed the demand. So I think that's what's going to happen. So it likely won't be NVIDIA that starts cratering, but it's going to be all the wannabe AI, wannabe tech names. There just will be too many of them, and it will overwhelm speculative demand. And then that can start to sink or, you know, cause a little bit of suction for the leaders in the space.
Good morning, Carsten. I wonder, we've talked about AI and as in what it's doing to the overall market, but I wonder what it does to your business, to the identification of short candidates, for example. I know I've heard you talk earlier this year about how maybe it doesn't help identify them that much, but I wonder how much that conversation is evolving, because you mentioned, you know, maybe there'll be companies that overstate the benefits that AI might bring to their business because it's very zeitgeisty, it's very trendy right now, and when the tide goes out, might be the time to start identifying those. I mean, is AI useful to you in trying to identify the companies that have overhyped AI?
Well, we are still not using it to identify, but what is helpful, I mean, definitely uploading a bunch of documents, and if this isn't super important, saying, okay, create a summary and then sending that around. So large language models are helpful for that. And I say large language models because I'm not a tech person, but some years ago, somebody explained to me how a large language model worked. And they said, this is not artificial intelligence. This is not actually thinking. And so I'm on a chat group in Austin with some people who are very big in the venture and tech space. And I asked them this question last week. I said, okay, when you look at all of these CapEx plans for, you know, AI data centers, what portion of this is for large language models versus other forms of, you know, quote, AI? and nobody can answer the question. And so I think that's actually what's very interesting, because my understanding is that large language models are unlikely to evolve to the point where they can actually be smarter or nearly as smart as a human, whereas there are other types of AI models that could be evolved to that point. So as far as large language models go, they're great for parsing large amounts of information and creating summaries, but they haven't helped us with pattern recognition up to this point.
Okay, so that's not where you get your ideas from. From what you said there, then you do think that maybe we've overhyped. I mean, are we going to see businesses? There's talk of businesses using, agentic AI agents to help them do things more productively. This is the big productivity secret, big productivity gift waiting for us over the next 5 years or so. We've got aging populations globally. Is that to hope too much? It's not going to be that way.
Well, certainly there's some functions that these seem to perform reasonably well. I mean, they're not 100% accurate. And I do think that large language models, if we want to talk about high-value knowledge industries, I do think that they are coming for the legal industry in a big way. I mean, just when you think of how much of law is reviewing documents and trying to distill them and synthesize those documents, large language models don't understand what they're reviewing. And to date, I mean, there are a number of lawyers who've gotten in trouble for relying on them, but they will probably, I assume they will get better at that, and they will stop hallucinating cases. So the legal services profession, they really do need to watch out.
I was talking to the CEO of a large bank in Europe the other day, talking about the mechanical process of passive money coming into the market and how the market's become terrible at valuing things. Can you is this marks out of 10 for this market valuing things, just because of that flow, that passive flow story?
Well, look, I absolutely believe that passive has broken the markets in terms of greatly diminishing price discovery. And there was a very interesting paper written 2 or 3 years ago by some academics. It's called the inelastic market hypothesis. So they say, look, this classical theory of finance that when stocks become too expensive, people make rational decisions and reallocate to bonds, that's broken. That doesn't hold. And so they estimate that with the U.S. market, that every net dollar that flows into the U.S. market, in aggregate, market cap increases by $5. And so that demand for stocks is inelastic to price. Like the higher they go, again, classical finance.
So the market is irrational.
So the market is, well, I mean, you could look at it and say it's irrational, but if you understand what passive is doing, and by shrinking the supply of stocks, by constricting that, because it doesn't matter how expensive NVIDIA gets, right? All of these funds that are buying the S&P 500 index, they will not sell NVIDIA until they have net outflows. So they will buy it every day at whatever the price is if they have inflows. So up to a point, passive has a role in the markets. But now passive is becoming the market when you look at a lot of the major indices. And that's why you also see all this dispersion in the indices, right? So if you look at it in a given year, roughly 2/3 of the companies in an index are underperforming the aggregate performance of the index, which is being driven by a small number of companies. And that concentration is just one of the offshoots of the passive phenomenon.
Let's go from kind of macro to the very micro. You talked yesterday about Snowline.
Yes.
Do you like Snowline because it's a gold company, or do you like Snowline because it's going to get bought?
Well, okay, so it can be both, right?
Okay.
Both things can be true.
Try and get a choice.
So, look, the reason that we got interested in mining a few years ago, our macro thesis has nothing to do with the price of metals. It's that for a couple of decades, there's been an under-allocation of human talent to the mining sector. That's on the operating side as well as the investment side. So we feel that especially in junior mining, there's real edge because there are not a lot of investors out there who actually understand the dynamics there and know how to look at these companies. So when we look at Snowline, as we call it, is a true Tier 1 freak deposit. Majors, regardless of the metals, they have to acquire because they've stopped doing greenfield exploration. Their exploration budgets are focused on their existing deposits, trying to find adjacent deposits. So majors are devouring themselves because they're producing and removing any terminal value that they would otherwise have. So they have to acquire companies like Snowline. In the gold mining industry, Snowline is the only deposit that we're aware of that can move the needle for a mid or major miner at this point. So yes, we think it gets bought, and the dynamics in gold are such because, again, the majors are depleting their reserves that they have to acquire companies like Snowline.
Carson, I know we just went really micro. I'm going to macro it out again as a final question to you. You said a couple of things in Guy's passive investment question. You kind of indicated that there is kind of a buyer of last resort to some extent, which brings me nicely to the Federal Reserve. You mentioned the SPAC collapse in a couple years ago. It felt like what popped that speculative bubble was higher rates coming down the pike very, very quickly. If we start to see that again from the Federal Reserve, is that what pops the bubble? Or to what extent is this rally being driven by the Fed greasing the wheels?
Well, so, I mean, my take, the rates went up in the second half of 22. And I think, GameStop was really the peak, the end of January of 21. It was really the peak of the highly speculative stocks. So it was kind of funny because in 22, when I would do the rounds, people would say, oh, this must be a great year for you because the S&P was off, because that responded to rates. In the bread and butter world of most short sellers, where we're in small and in mid-cap stocks, 21 was a great year. 22 was kind of meh as a result because so much of the air had come out of it. So I think that when we're looking at things that are interesting for us to short, not beta hedges, but alpha shorts, I think that's just going to be caused by the imbalance between, supply of speculative names and demand for them. But, what happens with rates, that's going to have much more of an impact on your large cap. So for the few short sellers that are still out there basically trying to do alpha shorts in that space, which I don't know why you would, that's, that'll matter more to them than it does to the few of us who are still doing shorts elsewhere.
All right, Carson Block, CEO, founder of Muddy Waters Capital. We'll leave it there, basically wishing a little bit of a blessing to the folks who are willing to take on the NVIDIA rally. We thank you so much. Let's talk about what's coming up in the day ahead, because, of course, the Fed does feature pretty strongly in that. The EU-South Africa Leaders Summit, we've got Walmart earnings, and, of course, we have plenty of Fed speak as well. But a lot of that might be reacting to jobs data coming down the pike, or maybe the lack thereof. Valerie Titel joins us around the table. Val, what do we expect?
Hey, finally the backlog begins to get released from the Bureau of Labor Statistics. We get that delayed September non-farm payroll report. Both the unemployment rate and the household survey will be released today. So congratulations on that, I guess we should say. However, the one big thing about this is it is highly delayed, and we've already seen Fed members really digging in their heels against this December cut. So essentially, the market would need a really big miss when it comes to the non-farm payroll report out today in order to start tempting perhaps that December cut back on the table. So in the absence of that, perhaps the market might be looking more at the weekly jobless claims figures that are released today. This is the most timely piece of data we are going to get from the survey of last week. So perhaps maybe the weekly jobless claims could take the shine off of this highly delayed NFP, but there's still many questions over the delayed report when it comes to the October CPI and the timing of the November CPI. So a lot of questions still for the Bureau of Labor Statistics.
Valerie, great stuff. Thank you very much indeed. Busy day still to come. We're setting you up for it, trying to get everything in line. Which data should you be focusing on? Up next, we're going to be talking about Ukraine. There's another peace plan being pushed forward. Defence stocks are up today. They got absolutely whacked yesterday. Rheinmetall is down on a two-day basis by 3.85%. It's up this morning. What is happening with this story? Pay attention. It has a market impact, and we're going to watch it next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Thursday the 20th, good morning. 50 minutes into the session. European equities are at session highs. We've gapped higher into today's session, but yesterday was not a particularly good session for European equities. Nvidia seems to have changed the story, but there are other factors as well. Take a look at European defence stocks this morning. They are bouncing back really quite sharply. As you can see, some decent performances being put in across the board within that space. I want to show you Rheinmetall, though, over a two-day basis, just to give you an idea of how bad yesterday was for this sector. And as you can see, on a two-day basis, we are still down and down reasonably hard. Now, this feeds into our next story, which is what is happening on the geopolitical front. A US military delegation meeting with the Ukrainian officials. This is part of a fresh bid by President Donald Trump to rejuvenate peace talks with Russia. The talks on Ukraine are taking place after another US-Russian proposal modeled on the Gaza ceasefire deal. Got a tepid reception, though, from Ukraine's supporters. The president expressing his displeasure with the conflict, though, and how he feels about Russia's Vladimir Putin.
I've settled 8 wars. I have 1 to go. You know what that one is. I thought that was going to be my easy one because I have a good relationship with President Putin, but I'm a little disappointed in President Putin right now. He knows that. I thought that was going to be the easy one.
Turned out not to be. Our chief Europe correspondent, let me get that straight, Oliver Crook, joins us now. Ollie, what do we know about the latest proposals? How are they different? What do we know about the details?
So we understand it's cast in the same sort of mold as the Gaza proposal, which was at least effective in
Jensen, it's been an astonishingly busy day for you in Washington, D.C., so I'm grateful for your time. You're sold out of Blackwell. That's what you said, but also that $500 billion forecast, which is Blackwell Rubin, has room to grow. How do those fit together?
I said sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Jensen, during the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that will continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Jensen, the number one question I get for you is always about energy. How severe is the energy shortage in the context of AI expansion? And would you talk a bit about power and whether power is a bigger constraint for this build out than the chips themselves?
When you're growing at the rate and scale of NVIDIA, remember we're growing some 60% a year. Just quarter growth of our company is $10 billion. We grew an entire size of a company just in one quarter. And so the scale and the rate at which we're growing, everything's a challenge, which is the reason why NVIDIA has to be world-class at our supply chain, working with incredible providers and suppliers like TSMC and the memory partners and all of our systems partners, but also working downstream to work with energy providers, power generator companies, all of the land, power, and shell providers, so that we could make sure that as we launch into the marketplace, as we deploy into the marketplace, land, power, and shell will be ready for us. One of our great advantages is that we have such a large network of go-to-market. We're in every single cloud. Every single cloud service provider is a customer of ours. We're in every single GPU cloud. And so we have a large network, and not to mention OEMs, not to mention all around the world. Our customer base, our network of partners is so large that we will find nooks and crannies of power in large scale, medium scale, small scale in different parts of the world. And so this is a huge advantage of ours. And it stems from the fact, Ed, that NVIDIA's architecture literally runs every model. And yesterday, we announced a big news with Anthropic. And so now the premier frontier models, OpenAI, Anthropic, xAI, Gemini, all the open sources, biological models, physical AI models, everything in the world runs on NVIDIA. And as a result of that, irrespective of which cloud provider you are, it is fantastic that we can deploy in your cloud because the offtake will be incredible.
Jensen, we can see where the hyperscalers are getting the money where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic, or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple. Like, how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and is currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI, and the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history, and we're delighted to be partnered with them.
We have a great relationship with the Singapore Exchange. We've been a 2-decade partner on the technology side, and we have really worked very hard to help them advance their markets. We've had different dual listing programs with them, but this one's special. I mean, this one is different. The most important difference is if you look at it from the point of view of the issuer itself. These great growth companies that are here in Asia, they want to be able to tap the domestic markets here and domestic investors while also tapping global investors in the United States. But today they have to go through 2 different regulatory processes to do that. Under this agreement, MAS and the SEC have come together to say, let's create one experience, one regulatory process to be able to tap 2 markets. It's the first of its kind, and we're very excited to be partnered with the SGX, but also and we've brought the whole ecosystem together. There's investment dollars going to be committed to this through the Singapore investment funds, as well as a regulatory framework that we think is really unique, that is going to make it so that these great tech companies and great growth companies, healthcare, tech, others, will have access to both markets simultaneously.
How much of a boost will it give the NASDAQ versus other IPO markets like, the UK, London, as well as Hong Kong?
Well, we actually see this as a great opportunity for us to differentiate ourselves from everyone, both SGX and NASDAQ, to make it so that we can bring these great Asian companies and companies with a real Asian connection and expose them to the depth and the liquid markets that we have in the United States, the depth of those investors that really understand these companies and can really put their capital behind them, and at the same time enable these companies to be a part of the domestic market, to get access to that great capital that's here in Asia, and do that with one seamless experience. So we're very excited about it. We do think it's differentiated from anything that's out there today.
And as you try to boost the IPO market, of course, President Trump has weighed in. He wants regulations to be eased when it comes to listings. Where are we with that? And what conversations are you having?
So making IPOs great again is something that we really care a lot about. And we're very excited because we've been advocating for a lot of the changes that, in fact, the administration has been discussing. And so as we see the opportunity for us to think differently about disclosures, the timing of disclosures, does every company need to have a quarterly report, or can there be semi-annual reports or other reporting regimes that can exist? Is a one-size-fits-all model really the right model for every company listed in the United States? And we don't think that is the case. We think there is an opportunity to be more flexible there. The proxy reform, the fact the administration is weighing in on proxy reform is so exciting, because that is one of the most onerous parts of being a public company today, is managing managing the proxy process and the lack of oversight that the proxy advisors have from the regulators. So we're very excited to see the opportunity to make some changes there. And then the third area that the SEC is focused on is litigation reform, allowing companies to file to go public with a mandatory arbitration clause as opposed to subjecting them to a class action lawsuits it's an incredible innovation that we hope that the SEC is able to implement.
I can say in case of semiconductors by 2031, 2032, in that time frame will be equivalent to what many of these countries are at today, and then it will be a race which will be a very fair and a level playing field. Similar things will happen in other technologies also.
Minister, conditions matter.
Yes.
Has the widening divide, or maybe deepening competition, another way of looking at it, between the United States and China, changed the calculus for India's ambitions, its opportunity in technology?
Our Prime Minister has always told us that we should strengthen our line, we should make our line longer, we should make ourselves more stronger, we should make sure that our capabilities increase rather than trying to reduce somebody else's capabilities. We don't think in...
You don't think in zero-sum terms?
Yeah, we think that we have made lots of contributions to the human society over last 5,000 years, and we as a civilization will continue to make those contributions. We should be able to strengthen our capabilities, further our capabilities going forward.
Most countries are forced to make a choice. Am I going to align myself with the United States? Am I going to align myself with China? For India, is there such a thing as digital non-alignment, digital sovereignty, if you like?
Digital sovereignty is a point that practically every country today thinks about.
Would like to have the luxury to think about?
More like ability to have control over your own future.
Yes.
In that sense. In a digital world, there are no boundaries, as we know. Internet doesn't follow the global geographic boundaries. Digital sovereignty is definitely important, but our policy has been, our foreign policy, as well as our technology policies of multi-alignment. Our policy has been that how do we contribute to the growth of technology and betterment of entire humanity through our contributions. That's the way we think.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
Global stocks then boosted after Nvidia delivered a robust revenue forecast, easing those worries about a potential AI bubble. Shares in the artificial intelligence chip giant surged 5% in post-market trading as Nvidia said it expects sales of about $65 billion in the 3 months to the end of January. That's roughly $3 billion more than analysts predicted. The world's most valuable company also reported third quarter results that topped analysts' estimates, with revenue up 62% to $57 billion. NVIDIA CEO Jensen Huang spoke to Bloomberg exclusively.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so Business is very, very strong.
NVIDIA CEO referring there to Blackwell, the company's most advanced chip, and its upcoming upgrade. Vera Rubin. Jensen Huang said last month that the company expects over $500 billion in revenue in the coming quarters. Yesterday, the CFO suggested they may surpass that target.
US President Donald Trump has signed a law requiring the release of all files related to convicted sex offender Jeffrey Epstein. It follows a months-long attempt to block the measure by the president in a fight that raised tensions within the Republican Party. The bill passed by 427 votes to 1 in the House. Speaking ahead of its signing, Bloomberg contributor and former Republican strategist Rick Davis from Stone Court Capital predicted further controversy.
When these documents come out and with all the search capability you have, we're going to learn a lot of new things. And if it's not clear what it is, the Department of Justice and the Trump administration is going to come under withering pressure to clarify things that are maybe redacted and or not ultimately produced.
Stone Court Capital's Rick Davis speaking there. The decision inflicts another political setback on the president just 2 weeks after his party suffered defeats in state and local elections. Only 4 in 10 Republicans approve of Trump's handling of the Epstein files, according to a poll from Ipsos and Reuters in October.
China is considering new measures to revitalise its struggling property market amid growing concerns about financial stability. The options being floated include new buyer mortgage subsidies, raising income tax rebates for homeowners and lowering some transaction costs. Our chief North Asia correspondent, Stephen Engel, says the stalling market poses a serious problem.
The property woes, it's now into its 4th or well past its 4th year, into its 5th year, really. And it is at the heart of all the big issues in the Chinese economy, whether it's persistent deflation, lack of consumption. It is all tied to, of course, households feeling their wealth effect has deteriorated over the last half decade.
Bloomberg's Stephen Agel speaking there. The plan is intended to lure back home buyers who have been reluctant to enter the market, with the average mortgage rate for buyers' first homes in 42 big cities hovering just above 3% in recent months.
Minutes from the Federal Reserve's October meeting revealed that many officials said it was appropriate to keep US interest rates steady for the rest of the year. The record, which was published yesterday, showed that several policymakers were against lowering the Fed's benchmark rate. Here is Bloomberg's Mike McKee.
Some thought that inflation was going to rise too high. Some thought that unemployment rise too high, and nobody could agree on what to do at the December meeting. In general, they agreed that inflation had moved up, the economy was expanding at a moderate pace, and the unemployment rate remained low. But they did not agree on the outlook.
Bloomberg's Mike McKee speaking there. So it comes as the Bureau of Labour Statistics cancelled its October jobs report because of the US government shutdown. Instead, they're incorporating those figures into the November report, which will be published after the Fed's final meeting of the year. Today's September non-farm payrolls figures could be the last piece of big data then that the Fed sees before that decision on the 10th of December. The odds-way December cut fell markedly yesterday, traders pricing in just a 25% chance. That was down from 50% earlier this week.
Senior US military officials are in Ukraine to discuss reviving peace talks with Russia. It comes as an unofficial US-Russian proposal, modelled on the Gaza ceasefire, received a tepid reception from Ukraine's supporters. Neither Washington nor Moscow have officially confirmed the plan, which is said to feature major concessions from Ukraine. Meanwhile, EU foreign ministers will meet today in Brussels to look at further measures against Russia's shadow fleet of tankers transporting oil.
And lastly, a Bloomberg exclusive investigation has found Oxford University has failed women over harassment concerns. That's after leaders from 2 different parts of the institution have stepped down in recent months over the issue. Bloomberg's Tiwa Adebayo has the story.
Dozens of interviews, documents and records have exposed a checkered history of handling harassment allegations at one of the world's most famous universities. Bloomberg understands multiple men have remained in senior roles at Oxford, sometimes continuing to work for years after claims of sexual misconduct emerged against them. Numerous women say they abandoned their studies because of the problem, whilst others describe being left in limbo or suffering from post-traumatic stress disorder. A spokesperson for the university said it rejects any suggestion that harassment is tolerated or that reputation is put before people's safety. In London, Tiwa Adebayo, Bloomberg Radio.
Okay, those are your top stories on the markets. The European Stock 600 is up 1%, risk on across global equities on the back of the Nvidia earnings. The FTSE 100 is also in positive territory, adding 70 points at 9,577. On Wall Street, S&P E-minis, so US futures pointing to a solid day as well, up 1.2% so far. Nasdaq 100 also pointed to gains of 1.7%.
That's news when you want it. With Bloomberg News Now, I'm Caroline Hepker.
And I'm Tom Mackenzie. And this is Bloomberg.
Exchanges, the Goldman Sachs podcast featuring exchanges on navigating macro uncertainty, exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on exchanges between leading minds at Goldman Sachs. New episodes every week. Listen now.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's Wednesday, November 19th.
This is
today. In a White House meeting, Trump defends the Saudi crown prince over the murder of Jamal Khashoggi. And in the same meeting, threatens ABC News. The bill approving the release of the Epstein files is on its way to the president's desk. And more than $1 trillion has been wiped off the crypto market on fears of a tech bubble. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. Saudi Arabia's Crown Prince Mohammed bin Salman receiving a lavish red carpet welcome from President Donald Trump at the White House. It's the Crown Prince's first visit to the US in more than 7 years, since the murder of Washington Post columnist Jamal Khashoggi made the Saudi leader an international pariah. But in a stunning response to a journalist's question, President Trump said the Crown Prince did nothing wrong.
Things happen, but he knew nothing about it, and we can leave it at that. You don't have to embarrass our guest by asking a question like that.
It's just yes, Mr. President.
Khashoggi, who was based in the US, was killed and then dismembered inside the Saudi consulate in Istanbul in 2018. US intelligence found the Crown Prince himself had approved the journalist's capture or killing. Trump says Khashoggi had enemies.
Job. You're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman that you're talking about. Whether you like it,
the visit marks a high point for Saudi-US ties, with Trump designating Saudi Arabia a major non-NATO ally, granting military and economic privileges. Mohammed bin Salman was effusive in his praise of the president.
We believe in the future of the United States of America. We believe in what you're doing, Mr. President, really creating a lot of good things and good foundation to create more economic growth, more business in America.
Later, Trump hosted an elaborate dinner for the Crown Prince. With high-profile guests including CEOs from Chevron, Qualcomm and Pfizer, footballer Cristiano Ronaldo, and Elon Musk, who returned to the White House for the first time since his falling out with Trump. And in terms of deals, Trump and Mohammed bin Salman agreed on arms sales, civil nuclear cooperation, artificial intelligence, and critical minerals. Deputy Foreign Policy Editor Humaira Pamuk has more.
Aside from Khashoggi, the conversation focused on a lot of investments. We have seen President Trump visibly excited when MBS increased his country's pledge of investment right there in the Oval Office.
I believe, Mr. President, today and tomorrow we're going to announce that we are going to increase that $600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas.
But probably the most important deliverable from this meeting is the sale of F-35 jets to Saudi Arabia, something the kingdom has been seeking for quite a long time. Now, the tricky thing there is whether or not Washington sells the same aircraft that it sold to Israel, because that's going to be really important in terms of preserving Israel's qualitative military edge in the Middle East. And President Trump indicated that indeed the kingdom was probably going to get the same F-35s that Israel was getting. So we're going to have to see how that turns out.
President Trump also gave details on the plan for Gaza, saying the Board of Peace, which will oversee a transitional government, will include heads of, quote, all the major countries. He also says the Saudi Crown Prince gave a positive response to joining the Abraham Accords. That's Trump's effort to get Arab countries to normalize relations with Israel. But Mohammed bin Salman didn't completely commit.
And we want to be part of the Abraham Accord, but we want also to be sure that we secure a clear path of two-state solution.
A two-state solution, recognizing both Israel and a Palestinian state, is something Israel remains vehemently against. As Trump and Mohammed bin Salman dined at the White House, a bill forcing the release of the Epstein files made its way to President Trump's desk. He could sign off on it as soon as today. But it's not clear how soon after that the files will be released. The House of Representatives overwhelmingly pushed the bill through in a 427-1 vote, sending it to the Senate, which swiftly approved it too. It's an extraordinary turn of events and an outcome President Trump had fought for months before U-turning. According to two sources, the White House is caught off guard by how quickly the measure moved through the Senate. Trump called for ABC News broadcast licenses to be pulled after taking issue with a question a network reporter asked him about the Epstein files during that Oval Office meeting with MBS.
Why wait for Congress to release the Epstein files? Why not just do it now?
You know, it's not the question that I mind, it's your attitude.
Before the vote, about 24 survivors of Epstein's alleged abuse joined lawmakers to urge the release of the records, including Jenna Lisa Jones, who says Epstein sexually abused her when she was 14.
I voted for you, but your behavior on this issue has been a national embarrassment.
The Epstein files have become a serious political liability for Trump, taking a toll on his ratings. The latest Reuters Ipsos poll finds his approval rating has sunk to the lowest of his second term at 38%. Politics editor Scott Malone is in Washington, D.C.
So what we're seeing is that Americans are very concerned about the high cost of living and don't think that Trump is solving it for them. Just 1 in 4 respondents to the poll said they approved of how Trump is handling the issue. The other thing that's weighing on Trump is the Jeffrey Epstein situation. The poll found that about 70% of Americans think that the federal government is hiding Epstein client information. And this is a bit of a problem that Trump has dug himself into. He campaigned on a promise to release the Epstein files. He has long said, when he was out of power, that the government was hiding information about him. And now that he's back in it, he's under a lot of pressure to act. We find that just 4 in 10 Republicans support the way that Trump's been handling the situation.
A court ruling has handed a major win to tech giant Meta, ruling it does not hold a monopoly in social networking. The Federal Trade Commission wanted Meta to spin off Instagram and WhatsApp, saying it shouldn't have been allowed to buy them in the first place. But a US district judge found the FTC had incorrectly excluded YouTube and TikTok from the market, adding that including TikTok alone defeats the FTC's case. The floor has fallen out from under Bitcoin. The cryptocurrency has fallen below $90,000 for the first time in 7 months, wiping out all of this year's gains. The whole crypto market has taken a hit, with more than $1 trillion taken out over the last 6 weeks. Analysts blame doubts over US rate cuts and say investors are more cautious about risk. Here's fintech reporter Hannah Lang.
The concerns around Bitcoin and the crypto market as a whole have really been impacted by broader market jitters around AI that have really impacted risk assets like tech stocks and cryptocurrencies. Despite a really successful year for digital assets broadly, which have risen on the backs of the Trump administration coming into office and pledging to overhaul a lot of existing cryptocurrency regulation. Crypto and Bitcoin in particular are very volatile and new assets, and they're not really predictable in the way that they move. There are a lot of large investors here whose actions can really impact the rest of the market. And that's not really something that's super common in a lot of other assets out there. So I think people have to be worried about how enduring this trend is right now and whether there's ultimately too much leverage in the system. We've seen a couple of different trends this year where traders have really piled up on leverage. And if that implodes, it really could impact prices even further.
And for today's recommended read, China's travel boycott on Japan, one that could cost Tokyo $14 billion a year. And the small Japanese tourist companies that cater to Chinese clients are at the very sharp end of the backlash. The travel warning was triggered by the new Japanese Prime Minister's comments about Taiwan, saying a Chinese attack on the island could trigger a military response. There's a link to that story in today's description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
बिग आइडिया नेचुरल गैस निकल रहा है रेंज के बाहर. लेट्स सी इसको रेंज के बाहर निकलने देते हैं. काफ़ी देर के बाद ये रेंज ब्रेक हो रही है. ओपन इक्वल टू लो कैंडल है. यहाँ पर ना रेंज बनी हुई है बहुत देर से. सपोर्ट है, यहाँ रेजिस्टेंस है. जब तक रेंज ब्रेक नहीं करेगा लेना बेवकूफ़ी है. किसी एक साइड पे कैंडल क्लोज करता है तो बेस्ट रहेगा. कैंडल क्लोज करता है तो फिर यहाँ पर ट्राई करेंगे. कैंडल क्लोजिंग आनी जरूरी है.
NVIDIA's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
And Bloomberg has learned that White House officials are urging members of Congress to oppose a measure that would limit NVIDIA's ability to sell AI chips to China. Our tech correspondent, Annabelle Drulis, has more on this. Scoop and Bell, that's a positive piece of news for NVIDIA.
Yeah, it might be something they like, except it doesn't mean, of course, that it's the end of any sort of bipartisan support to really push back and continue to limit China's advancements in AI. But yes, this is a really great scoop that's come through in the last few minutes here. And what sources are telling us is that White House officials are urging members of Congress to oppose or reject the so-called GAIN AI Act. Now, this is a system essentially that requires chip makers to give US companies first dibs on AI chips that are controlled for export to China and other arms embargoed nations as well. So effectively, it's looking at ways to basically bar AMD NVIDIA from selling their best contracts or best chips rather to China. So that's what is being proposed by White House officials to members of Congress. Again, as I said, yes, that does mean it's a victory for NVIDIA. We know that NVIDIA has publicly lobbied against this sort of legislation. Their key argument is essentially if you restrict China's advancements in AI, you only push it to become more competitive internally and to continue that focus on self-sufficiency. But as I said, it doesn't mean the end of any sort of pushback or further limitations of China, because what we're also understanding is that lawmakers have begun working on a separate measure. This is called the so-called SAFE Act of 2025. And again, that would require the Commerce Department to deny all application for sales to China of any AI chips that are more powerful than what the US currently allows. So, yes, and of course, we just heard there Jensen Huang talking about sales of H20 and how they've had to basically completely clear out China at all from their upcoming revenue forecasts.
Speaking of that revenue forecast, it is that forecast that's driving market sentiment today. It beat expectations.
Yeah, I mean, there was a lot of pressure on Jensen Huang coming into these numbers, and could he deliver something strong enough to try and offset these persistent fears we've seen around the sustainability of AI spending and these concerns that we're in an AI bubble. But actually, he managed to deliver in the late trading session, because we saw NVIDIA jumping pretty strongly after the company lifted its sales forecast for the next quarter. So they're now looking at around $65 billion in revenue. They've also said that Blackwell sales are off the charts. They're saying that the ramp up of the Rubin architecture is going very well. There was a weak spot probably, and that was in the margins, and they just missed on analyst expectations. And Jensen Huang also spoke about this, just the pressures in the supply chain, how supply chain component prices are increasing. We had reporting from Reuters, for instance, recently that Samsung was looking to raise a key memory chip price of the DDR5 by some 60% in November alone. So perhaps some of its biggest suppliers, a lot of them based here in Asia, TSMC, Honhai, Samsung, SK Hynix, there's a lot more. Biden, Advantest, Tokyo Electron. I mean, there's many, but maybe they're looking to take advantage of their pricing power as well.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
Global stocks have been boosted after NVIDIA delivered a robust revenue forecast, easing worries about a potential AI bubble. Shares in the artificial intelligence chip giant are 5.7% higher in pre-market trading, as NVIDIA says it expects sales of around $65 billion in the 3 months to the end of January. That's roughly $3 billion more than analysts had predicted. The world's most valuable company also reported third quarter results that topped analyst estimates, with revenue up 62% to $57 billion. NVIDIA CEO Jensen Huang spoke exclusively to Bloomberg.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
NVIDIA's CEO referring there to Blackwell, the company's most advanced chip, and its upcoming upgrade, Vera Rubin. Jensen Huang said last month that the company expects over $500 billion in revenue in the coming quarters. Yesterday, the CFO suggested they may surpass that target.
US President Donald Trump has signed a law requiring the release of all files related to convicted sex offender Jeffrey Epstein. It follows a months-long attempt to block the measure by the president in a fight that raised tensions within the Republican Party. The bill passed by 427-1 votes in the House. Speaking ahead of its signing, Bloomberg contributor and former Republican strategist Rick Davis from Stonecourt Capital predicted further controversy.
When these documents come out and with all the search capability you have, we're going to learn a lot of new things. And if it's not clear what it is, the Department of Justice and the Trump administration is going to come under withering pressure to clarify things that are maybe redacted and or not ultimately produced.
Stonecourt Capital's Rick Davis speaking there. The decision inflicts another political setback on the president just 2 weeks after his party suffered defeats in state and local elections. 1 in 4 Republicans approved of Trump's handling of the Epstein files, according to a poll from Ipsos and Reuters in October.
UBS CEO Sergio Ermotti says this quarter will be challenging for the lender. Speaking at the JP Morgan Financials Conference, the Swiss bank lender also predicted a slight macro recovery in 2026. He added that recent client activity at the firm had been quite good and referenced a macro picture which has changed for the good.
Minutes from the Federal Reserve's October meeting revealed that many officials said it was appropriate to keep interest rates steady for the rest of the year. The record published yesterday showed that several policymakers were against lowering the Fed's benchmark rate in October. Here's Bloomberg's Mike McKee.
Some thought that inflation was going to rise too high. Some thought that unemployment rise too high, and nobody could agree on what to do at the December meeting. In general, they agreed that inflation had moved up, the economy was expanding at a moderate pace, and the unemployment rate remained low. But they did not agree on the outlook.
Bloomberg's Mike McKee there. It comes as the Bureau of Labour Statistics cancelled its October jobs report because of the US government shutdown. Instead, they're incorporating those figures into the November report, set to be published after the Fed's final meeting of the year. Today's September non-farm payroll figures could be the last piece of big data the Fed sees before that decision on the 10th of December. Odds of a rate cut at that meeting fell markedly yesterday, with traders pricing in just a 25% chance, down from 50% earlier this week.
Senior U.S. military officials are in Ukraine to discuss reviving peace talks with Russia. It comes as an unofficial U.S.-Russian proposal modeled on the Gaza ceasefire received a tepid reception from Ukraine supporters. Neither Washington nor Moscow have officially confirmed the plan, which is said to feature major concessions from Ukraine. Ukraine's first deputy foreign minister described the plan as a psychological manipulation effort rather than a credible proposal. EU foreign ministers are meeting to discuss the measures against Russia's shadow fleet of tankers transporting oil. Speaking to reporters in Brussels, the EU foreign policy chief, Kaja Kallas, said any peace plan needs the support of Europe and Ukraine.
An exclusive Bloomberg investigation has found Oxford University has failed women over harassment concerns. That's after leaders from 2 different parts of the institution have stepped down in recent months over the issue. Bloomberg's Tiwa Adebayo has the story.
Dozens of interviews, documents and records have exposed a checkered history of handling harassment allegations at one of the world's most famous universities. Bloomberg understands multiple men have remained in senior roles at Oxford, sometimes continuing to work for years after claims of sexual misconduct emerged against them. Numerous women say they abandoned their studies because of the problem, whilst others describe being left in limbo or suffering from post-traumatic stress disorder. A spokesperson for the university said it rejects any suggestion that harassment is tolerated or that reputation is put before people's safety. In London, Tiwa Adebayo, Bloomberg Radio.
Those are your top stories on the markets. Global equities are in the green. Nasdaq futures up 1.6%. Shares of Nvidia rising 5.5% in pre-market trade. We're also in the green here in Europe. Euro Stock 600 up 0.9%. The DAX up 1%. The CAC in France up 0.9%, and the FTSE 100 also in the green up 0.6%. The Bloomberg Dollar Spot Index trades flat. Euro is at 115.20. An eye on U.S. 10-year Treasury yields as we do get that delayed non-farm payroll release later today at 1:30 p.m. 10-year yields are trading flat at 4.13%.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Valerie Teitel, and this is Bloomberg.
ओके नेचुरल गैस में देखोगे कैंडल फाइनली एक साइड क्लोज हो गई है, रेंज ब्रेक हो गई है, विच इज़ गुड। यहाँ पर एक सपोर्ट था, रेजिस्टेंस और सपोर्ट दोनों एक साथ एक ही जगह पे बन गए थे। अभी भी सपोर्ट इंटैक्ट है, रेजिस्टेंस ने भी काफ़ी ट्राई किया नीचे ले जाने का, लेकिन सपोर्ट ब्रेक नहीं कर पाया। नीचे आता है तो वापस बाइंग का ट्रेड बन जाएगा यहाँ पर अब। रेंज ब्रेक हो गई है। क्रूड भी स्टक हो गया है, वो भी रीटेस्ट जोन के अराउंड। कल जितना फॉल किया था ऑलमोस्ट उतनी रिकवरी आ गई है। कल की फर्स्ट 15 मिनट की कैंडल पर ऑलमोस्ट हिट कर चुका है प्राइस। ऑलमोस्ट फॉल किया था इसने, हाई से देखोगे तो ऑलमोस्ट 3-3.5% कम से कम गिरा था। वहां से अब लगभग वही 2.5% ऊपर चला गया, तो मतलब 1% और ऊपर जाता है तो कल का हाई आ जाएगा। तो कल जितना सेल ऑफ आया कंप्लीट रिकवरी नीचे सपोर्ट जोन से। नेचुरल गैस देखोगे ओपन इक्वल टू हाई कैंडल है, अभी ब्रेकआउट हुआ है प्रीवियस कैंडल पे। ये कैंडल वापस 402.7 के नीचे ना आ जाए। इस केस में एक फेक ब्रेकआउट भी हो सकता है। कैंडल जस्ट ओपन इक्वल टू लो बनी थी, ब्रेकआउट किया, कैंडल प्रॉपर्ली क्लोज हुई है 402.7 के ऊपर। नाउ दिस कैंडल इज ओपन इक्वल टू हाई, अगर ये वापस नीचे आ गई तो हो सकता है फेक ब्रेकआउट हो, क्योंकि जैसा मैंने बताया यहाँ पर एक सपोर्ट है, रेजिस्टेंस भी बना हुआ है साथ साथ। दोनों सपोर्ट रेजिस्टेंस साथ ही हैं। काफ़ी देर से रेंज के अंदर बना हुआ था। रेंज एक साइड ब्रेक जरूर करी है, बट वी नीड अ कंफर्मेशन। नहीं तो वापस रेंज के अंदर ही फंस जाएगा। इट मींस नीचे सपोर्ट तो है बट रेजिस्टेंस भी इंटैक्ट ही है, बस अपना एसएल शिफ्ट कर दिया थोड़ा और ऊपर। लेट्स होप एक कैंडल क्लोज करे। ठीक है, वो चलेगा।
LGT's investment solutions allow you to look to the future with confidence.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Did the economics profession get it wrong on tariffs? Or is the impact just delayed? Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. If we were to trace US tariffs over the last, let's say, 100 years or so, there's our axes. From the end of the 19th century into the start of the 20th, tariffs were on a declining trend. Get to 1930 and we get the infamous Smoot-Hawley Act, and most economists believe contributed to and deepened the Great Depression. From that point on, we have a continuous decline in the average US tariff rate till Trump started his second term. He's jacked it all the way up to around 15%. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. And low growth and high prices is a challenging state of the world, which economists call stagflation. Markets panicked. Let's look at the S&P 500. It looked like this. If we looked at a chart for economists' forecasts for inflation, we've got the COVID bump in inflation, we've got prices coming almost back down to target, but then, oh dear, President Trump's introduced his tariffs and we get another inflationary bump. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. That inflationary bump from tariffs that the Fed was focused on as a risk before they cut interest rates, it hasn't materialized, at least not yet. We looked at lots of the different things which people in the United States buy every day. If tariffs were being passed on to consumers, we'd see a pretty tight relationship. In fact, what's happening is there doesn't seem to be a very strong relationship at all. US firms are facing higher costs for their imports. So far though, they're not passing those higher costs onto consumers. Why is that? Well, it's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load, shipping to the United States before the tariffs could come into force to build up cheap inventories that they could then sell down after the tariffs came into place. If we look at a chart of US imports, what we see is that in the first months of 2025, imports weren't exactly off the scale, but they were significantly higher than they had been in the same months in 2024 and the average of past years. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals, some of which brought good news relative to the previous status quo. We have US allies like Japan and Korea, which are scrambling to make offers to the United States, promising hundreds of billions of dollars to help rebuild US manufacturing as a price to retain access to the US market. They're something of a Swiss cheese of exemptions and carve-outs, and smaller tariffs obviously have a smaller impact. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's One Big Beautiful Bill, And we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. AI and the trade war kind of point in opposite directions, and investors are paying much more attention to the potential for AI to be a significant profit driver. Certainly it seems like there's enormous potential with artificial intelligence. At the same time, the International Monetary Fund and other economists are warning that the markets have got a bit over ahead of themselves. There's irrational exuberance. If markets have a moment where they lose their confidence, that can only mean one trajectory for stocks: downward. There are signs of weakness showing up in the US economy. We've gone from a labour market comfortably creating 100,000 or more jobs every month to barely expanding, and in some months the number of jobs shrank. So a concern here is that, well, when the tariffs do start to hit, they're going to be hitting an economy where the labour market's already weak and potentially amplifying that downward trend. China, which views itself more as a peer competitor to the United States, they've turned up with their own leverage. You impose tariffs on us, we're going to impose tariffs on you. You block our access to semiconductors, we'll block your access to rare earths. And we're seeing the impact of that really clearly in the trade data. China's exports to the United States are way down relative to where they were last year, way down relative to the historical trend. So, who pays for the cost of tariffs? We're seeing US firms absorbing tariffs in lower profit margins. Why might that be? I can think of two reasons. The first is no one wants to be the first to raise their prices and lose market share. The second, and this is more speculative, is no one wants a vengeful US president. But despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. And if the US Treasury is looking forward to $3 trillion in tariff revenue over the next decade, all of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households. One way of thinking about this second Trump presidency is that it's an innovative approach to managing the fading of America's imperial moment. America was the world's single superpower. In 2025, that's clearly not the case. Trump is attempting to use that last moment of strength to get a better deal. Will President Trump succeed in reigniting the flame of American preeminence, or will he just hasten the end? I think on that question, the jury is still out.
Hey there. Javier Milei has really made a splash since sweeping to power as Argentina's president. He's famous for waving a chainsaw about to highlight his opposition to government spending. And Milei's libertarian agenda has clearly won him lots of friends around the world, none more powerful than US President Donald Trump. So when the peso came under huge pressure this fall, Trump's treasury did something remarkable. It stepped in, buying pesos and promising billions of dollars in support. That was a big deal for Milei, because he has Argentina in what's called a currency band to help fight inflation. And without US support, Milei might have had to abandon that band and let the peso drop dramatically. But what exactly is a currency band? What's the US promising? And what does it all mean for Argentina's economy and the US taxpayer? Let's try and find out. I'm Carmel Crimmins, and this is Reuters Econ World. Every week we go deep on the economic principles and ideas driving the biggest news around the world. So on this week's show, the Currency Lifeline. So to discuss all things currency, I'm delighted today to have Karen Stroecker, our Chief Emerging Markets Correspondent into Econ World. Karen, hello. How are you?
Hi, Carmel. I'm very well. Thank you for having me.
Can we get straight into the nerdiness, straight into the wonk? What is a currency band, Karen, and how do they work?
So a currency band is when a government, a central bank, would like to keep its currency in a certain range with regards to other currencies or other singular currency, maybe against the US dollar, for example. And there's somewhere in the middle, there's various FX regimes. You can have like a floating rate, which is like total free float that is dominated by market forces, determined by market forces. And you can have a peg, which is on the other end, which means there's, a currency is pegged at a certain level to another currency, usually a big one like the euro or the dollar or something like that. And currency bands are somewhere in the middle, right? They help governments to keep the currency sort of in a corridor, but give a little bit of leeway to move either side of it.
And how do they actually do that? How do they keep the currency in that band?
So there's a few ways in which central banks and policymakers can do that. The most obvious one is direct intervention, right? If you see that your currency is weakening, you could just go to the market and buy it, create artificial demand, take some of your FX reserves, your hard currency, sell that on the market, buy your own currency. That will make it strengthen. Or if you see it's getting too strong, vice versa, right? Sell it on the market. But there's also, of course, other levers as well, like you have interest rates, for example. So if you raise your interest rates, automatically investors are keen to go into your markets and buy your debt because they're going to get a higher interest rate. They're going to get paid more to hold your debt, for example. And that will create inflows that create a demand that will prop up the currency and help it strengthen.
Right. Why would a government do this in the first place? Why wouldn't they just let the market decide what value the currency has?
There's a few ways of thinking about that. One is that it's much easier if a currency is stable, right? If you as a government, you have to pay for your imports, or if you're a country that exports, or your country, that has a lot of producers that import and then export, if they don't know what the currency is going to be like within certain levels, it will make their planning and their trading and their commerce very, very difficult, right? So this is just for planning purposes. Having a stable currency is generally seen as a good thing. As a policymaker, if your currency weakens a lot, that will make often imports a lot more expensive. So you can generate inflation, which is, exponential and running on its own. So you want to be careful about that as well. So helping your currency, stabilizing your currency is something that is very much desired.
So what you're saying, Karen, like with these currency controls, with currency bans, in theory, it sounds like a good idea. You're giving people certainty, investors, exporters, importers, certainty about where a currency's level is. But they've fallen out of favor, haven't they?
Yes, they have. I guess one big issue with currency bands and also currency pegs is that you really need to have a lot of firepower to make sure you can hold them. Because if they start unraveling, if they start going, they go in a really spectacular way. And the crash is then much, much more dramatic than anything else you might see. We really saw that in the Asian financial crisis. There was a time in the 90s, early 90s, when economies like Thailand, Malaysia, South Korea, Indonesia were running red hot. All the investors piled in there. They bought stocks, they bought real estate. Currency was really quite stable and gave an illusion of stability that was possibly not there. Because at the same time, a country like Thailand, for example, had huge deficits and they actually did not have the reserves to defend the currency if any sort of pressure would come. And as investors started to think a little bit more about those vulnerabilities and were a bit cautious, it started to unravel really, really quickly. It forced the Bank of Thailand to spend billions in trying to prop up their currency. Eventually, they lost that battle. They had to unpeg. They were pegged to the US dollar. They had to unpeg. The currency in the wake of that fell 50% in the months thereafter. And that has all the painful effects that you can imagine. Like there was a huge amount of corporate bankruptcies. A lot of them had borrowed short-term. A lot of companies had borrowed short-term. US dollar debt, couldn't pay back, went bankrupt. The country had a really severe recession. And that was just one of the blocks in Asia, right? And after that, these sort of currency pegs and very rigid structures to keep your currency very closely linked to a certain level fell very much out of favor. Policymakers now want to let them adjust to the macroeconomic backdrop to make sure that there's a natural level that the currency can find where possible.
Okay, quiz time. Argentina's economy has been going through a bit of a rough patch, but it wasn't so long ago that Argentina was one of the wealthiest countries on earth. In fact, at the turn of the 20th century, some data suggests Argentina was wealthier per capita than Germany, with a gleaming capital city to rival any major European city. So what nickname was often used to describe Buenos Aires during Argentina's economic peak in the early 1900s? Was it A, the Venice of the Americas, B, the Paris of the South, or C, the Prague of the Pampas? We'll have the answer for you at the end of the show. Up next, we take a deeper look at Milei's economic agenda. So Karen, talk to us about Argentina. So President Milei swept to power at the end of 2023. What sort of economy did he inherit?
The economy at the time in Argentina was really, really in dire straits. Like we had inflation that was well above 200%, which is massive, which is hyperinflation. We had an economy that had gone through various boom and bust cycles. The busts were big, the booms were quite small and weak. So when we look at average growth that they had over the past decade or a little bit beyond, we're like at just around 1%, which is really no growth. A stagnating economy, hyperinflation, super high government spending, and they were printing money, which fueled inflation, right? So that didn't really work very well. And Milei and his chainsaw, he pledged to change all of that.
So how's he done, right? Because he's prioritised cutting government spending, so moving the fiscal situation into balance, into a surplus, and also bringing down inflation. So how's he doing on those?
So he's definitely following through on his promises or part of them. There's still a little way to go, but he has cut spending dramatically. This has been like, a country that was where transport, utilities was heavily subsidized. And a lot of these subsidies now have gone away. He has stopped the money printing. He has brought inflation, I'd say, under control. Inflation came down to somewhere close to 30% on an annual level. Whilst it's come down dramatically, it needs to come down more. And the second bit going forward is going to be much harder. And I guess there's also a way to think about it, how it affected the population, right? Especially these huge, huge cuts that we have seen in spending. When Milei came in, around 40% of Argentines were living at the poverty line or below. Now that number, just in the first half of 2024, after he came in, rose to more than 50%. So especially pensioners, vulnerable groups of society were hugely affected. Like we see pictures of, soup kitchens being in higher demand than what they can ever cater for. The toll, the pain this has exerted on the population is quite dramatic. Milei would say that's, the tough medicine that is needed. Can he sustain that level of spending cuts over the longer term? That needs to be seen because, a population doesn't like to suffer like that either.
And the battle against inflation, the exchange rate ban is a key part of that, isn't it?
Yes, because Argentina is relying very heavily on its exports and on its imports. And so having a stable currency and having people not dollarizing and having only one exchange rate is really an integral part of managing your inflation and managing inflation expectations, right? If you don't know what the exchange rate is going to be and you live in Argentina and you don't trust it and you think the peso could be tumbling again, you're going to try and get dollars. You don't trust your local currency. So he needs to establish trust. He needs to make sure that inflation expectations, which inform, what you purchase, how you decide on your spending, that all of this is on a much calmer and more settled trajectory than it was in recent decades.
I mean, it is kind of ironic, isn't it? I mean, Milei comes very much from a free market perspective, the libertarian perspective, but he's relying on this band to help keep inflation down, to help kind of instill certainty in the Argentine economy. I mean, when he first came to power, there was talk about potentially replacing the Argentinian peso right altogether and using the US dollar. Has that gone away?
Yes, he was even talking about how the peso isn't even worth excrement.
Wow.
Talking about how he's not
talking it up.
Toilet paper. Oh no, he certainly didn't talk it up. And one of his key campaign pledges was actually get rid of the central bank, get rid of the peso. Now, I don't think there was really much appetite for that. And if you decide as a country to convert your currency into the US dollar, you actually need to have the US dollars to do this, right? And when he took over, the FX reserves were empty. There was nothing in the coffers. So he didn't have the technical means to actually do it. At the same time, I don't think there was much appetite to actually get rid of your central bank, especially, we have some smaller economies around the world that don't have their own central banks because they're so attached to bigger countries. But in general, Argentina is a sizable economy. They should be able to determine their own monetary policy. Getting rid of this institution, there was no appetite for it internally. There was no appetite really for it externally.
Okay, I've got some big news to share, especially for our American listeners. On December 3rd and 4th, I'll be in New York City for Reuters Next, our flagship live journalism event. The Reuters team of journalists will be speaking with some of the most important people moving markets. Think global policymakers, tech innovators, and business leaders. As for me, I'll be hosting a panel all about Trump's economy. You can sign up to watch the live stream or join me in person by clicking the link in the show notes. You won't want to miss it. Up next, Karen and I discuss why the US decided to intervene in Argentina's currency market. So markets recently got spooked at the idea that maybe Milei wouldn't be able to push through his economic reforms. He and his party didn't do so well in local elections. And we had this really quite dramatic intervention by the US. Can you just explain to us what they did?
Yeah, so this was really totally extraordinary and not something we have ever seen anywhere else. The Trump administration basically came out, Scott Bessent, the US Treasury Secretary, and said that they would help Argentina. And they offered actually quite a few things. The centerpiece of that offer is a $20 billion US swap line that goes from the US government to the Central Bank of Argentina, which basically, will immediately be a shot in the arm and show up as part of their reserves. The US Treasury has also said they would do direct peso purchases, so directly intervene in Argentina's FX market. Now, as far as we know, the United States has never done anything like this before.
It's extraordinary.
Right? So this is really uncharted territory. They've indicated that there's readiness to buy US dollar denominated bonds issued by Argentina, so Argentina's government debt. And they've also indicated or are trying to engineer that with the help of US Wall Street banks, there would be another 20 billion in loans going towards Argentina.
I mean, it sounds like the US is going all in on Argentina, and it's not, yes, they might buy Argentinian beef and other like agricultural products, but Argentina isn't systemically important to America, right? It's not by any means its biggest trading partner. Why are they going all in on Buenos Aires? What's the deal here?
So what the US Treasury and what the US government is saying, that it's key for them to have a stable, healthy Argentina sitting on the continent, sitting, in the middle of Latin America. And that will be an anchor for them for the whole region.
Mm-hmm. There's also a strong, isn't there, political relationship between Trump and Milei, right? I mean, in fact, Trump did actually connect this to Milei's sort of political success in elections, right? Like there was that link.
Absolutely. He made it a very, very personal pledge, right? He was telling Milei straight out when he was in Washington that if you lose that election, you're on your own, pretty much. Luckily, Milei came out, luckily for Milei came out and had a landslide victory, so that US support seems to stand. But there certainly is a personal connection between the two men. They have a very common outlook in many aspects of running an economy. They're both against regulation, so they're heavy deregulators. They happily privatize. They're very liberal in their approach. So they sing from the same hymn sheet.
It's another example, isn't it, of Trump using economic policy to push through his foreign policy aims, right? We saw it recently with Hungary's Viktor Orban came back from a visit to DC saying that Trump had promised him a financial shield, right? It's a trend.
Yeah, now it's or maybe the beginnings of a trend.
Right. Yes, shouldn't jump the gun.
We'll see. I guess to say about Hungary, that is quite a different possibly kettle of fish. So Hungary is in a very, very different position, right? It's not by nowhere near in any financial dire straits, or not the ones we can compare to in Argentina. We actually haven't heard from the White House on Hungary yet. So it is something that Viktor Orban has been talking about, but we don't know as yet the other side. So could well be there's more coming. But we don't know as yet. I guess the interesting thing to think about is the geopolitics as well of it. And if you think about in Argentina, that 20 billion swap line that the US is extending to Argentina had an 18 billion swap line from China, right? And of course, China and the US, huge rivals, right? There's clearly an interest, by the U.S. administration to ensure that they are claiming what they see as their rightful place. The money in Hungary is a little bit different. Now, this is not a major destination for Chinese investment. Mm-hmm. However, Hungary has an issue with the EU, and a lot of the EU funds that are meant to go to Hungary are frozen. The connection has been made that, maybe that money from the US could be forthcoming if EU funds from Brussels are not forthcoming. And of course, there's the other personal connection. Once again, Orban maybe cut from the same cloth as Milei and as Trump.
If markets and finance are your thing, we've got something big coming your way. Our brand new sister pod, Reuters Morning Bid, will be your go-to market briefing 7 days a week. From November 24th, ask your smart speaker for Reuters Morning Bid and get that market edge straight from our experts in the Reuters newsroom. In the final part of the show, we hear about Milei's endgame. So, Karen, it seems like the Trump administration achieved its immediate goal with this promise of support for Argentina, in that Milei's party did well in the midterm elections. What about the peso? How stable is it now?
The peso is much more stable than it was. And at the beginning, when we had these announcements of US support, you could see that markets were testing whether, the US support would kick in or not. Now it's pretty stable. It had a few declines around the election where it got weaker, but actually since then it has appreciated. It stayed within the band. Overall, the peso still needs to weaken further, go down further. That is without a doubt. The question is just like, how do they manage the trajectory of this?
Well, because most analysts expect that the peso will have to devalue, don't they?
Yes. And this is something also that analysts have talked about. It is something that is expected. The IMF would like to see a more liberal regime. The IMF, like Argentina, is the biggest debtor to the IMF by a single country. They owe some 50-something billion to the fund. There will be more pain coming on the peso, but just not make it a massive falling off the cliff experience, but a managed experience. I think this is what they want to achieve now.
I mean, it's still a big gamble that they'll be able to do that, isn't it? Because even with the promises of support from the US, I mean, Argentina doesn't have enough hard currency reserves.
And there is a lot of focus now on what they are doing to actually build those reserves actively. It's probably, as an emerging economy, to have the US as a backer is the best. The US central bank, the US government as a backer is the best backstop you can hope for. But yes, there is a lot of more reforms that need to come. There are a lot more measures that Milei needs to take. Now he has the political mandate to do that, although, participation in the election was reasonably low, so there's still disgruntlement in the population. But now, at least, until 2027 is when the next presidential election is. That will give him a window when he can push through some more of the reforms.
I mean, you're right. There is no bigger backer in financial markets than Uncle Sam. But is the question for investors how consistent that support is going to be? Is that something that investors wonder? Because, Trump did say that it was conditional. I suppose the comparison I'm thinking of is when we had, back during the Eurozone debt crisis, when Mario Draghi said, the European Central Bank will do whatever it takes. That really sent a message to the investor community that the ECB was standing behind all members of the Eurozone. Is there a kind of a question mark in investors' minds when they look at what the US is doing for Argentina?
Absolutely, because as you say, when Mario Draghi, he actually stood up here in London and said that in July 2012, I was there. That's why I remember. It's one of these things that gets etched into your brain as a financial journalist. I mean, he was talking of his own affairs, right? And as we have seen, policymaking in the Trump administration can be blowing hot and cold. Even when Milei was sitting in the White House, when Trump all of a sudden came out and said, look, if he loses, all bets are off. They're not quite masters of their own destiny. They have a big beast in their camp, which will be really, really helpful for now. But Argentina needs to bring its own house in order. And just by wider backdrop, Argentina is a serial defaulter, right? They have defaulted on their sovereign debt 9 times. So they've gone from default to boom to default to boom so many times in recent decades. So investors are quite sensitive around Argentina. They want to make sure that they're going to get their money back. And they always have in the back of their mind that Argentina has a pretty choppy and pretty eventful relationship with its investors.
Hence the criticism coming at the Trump administration for providing this financial support to Argentina in the first place, right? The risk that the US taxpayer will lose out if Argentina isn't able to push through these reforms, if it does default, if the peso does have to be devalued.
And that's a huge point. So, and one of the issues that we have here as journalists as well is that, or, as investors, probably as a market at large, we don't quite entirely know how all the details work in these arrangements. we heard yesterday from the US administration that actually the US has made money on its recent transaction in relation to Argentina. Now, they didn't elaborate how they made money, but there was always a sense, they might lose money, but they said they've made money, but they didn't quite deliver how it actually all happened. So I guess they are aware that there is an expectation to not fritter U.S. taxpayer money away on a serial defaulter. At the same time, there's huge political capital that's at stake inside the U.S. I mean, Argentina is a massive exporter of soybeans, for example, also to China, of beef. So in some of these, they are competing directly with US farmers who now find themselves, maybe not being able to export, and who are asking the question, why do you help those guys down south when, we struggle here? And that's the people who might be voting for Donald Trump. So there's certainly something of a political capital gamble that he will bear in mind.
What's Milei's end game here?
Well, Milei's end game is to win the next election, 2027.
Thinking about the economy.
To make Argentina
great again.
I was going to almost say it.
No,
yeah,
I stepped in instead. Yeah,
I know. Thank you very much for finishing the end of the most predictable sentence that we can say at this point.
You can rely on me there, Karen.
So yes, I mean, a stable Argentina, a booming economy. I mean, that should be a rich country. They have oil, they have minerals, they have energy, they have huge amounts of farmland, have a very highly educated population, right? Have good education systems. That country should do much better than it does, and people are hoping for that to happen. He's got time now to enact some of his reforms. Whether people agree with all of them or not is a different question. But he doesn't have that much time, and reforms do take a while to filter through. So there is a bit of a time pressure here.
Yeah, you see that in other countries, like in Greece, for instance. It sort of got itself back in order from a financial market perspective, but the reforms that had to be pushed through are painful, and then they take time. I mean,
and it took decades, right?
Yeah. And for the peso, the end game here, does Milei ultimately want it to move to a free float? Because there are some investors right now who would like to see that happen. They think that Milei should actually seize the opportunity now and let the peso float. What are the risks there?
The risks are that something happens and there is a outsized movement which will spook investors and see them ditch the peso. And Argentina is still seen very much as a high-risk country, right? As a high-risk investment destination. Not as high risk as it was, but generally it's on the riskier side of things. Now, we have come out of a phase in the global economy where we've seen one shock after the other, right? We've seen COVID. We've had Russia's full-scale invasion of Ukraine. We have seen the wars in the Middle East. You want to make sure as a country, if you are on the riskier end and another shock happens, people will pull out their money out of risky countries. That's just what happens. They retrench to what is safe. Now, you need to manage those vulnerabilities if you are a riskier economy.
But while this currency band is in place, it does make life very hard, doesn't it, for Argentinian exporters? It means that their produce costs more overseas because the peso is linked to the dollar, and also for ordinary people in terms of buying goods, right? You see Argentinians going to Chile to buy like washing machines, right? There are these effects on the ground.
Yes, I think this is really a big task for Milei now, that what investors and what also I think Argentinians want, what we hear all the time is really want clarity what the FX roadmap is now, what's going to come when, so we can adjust our investments, adjust our purchases, adjust our expectations around that. And at the moment, they are widening every month. the band that they have by 1% either way to make it broader and broader. We heard that Luis Caputo, now he's the man in charge of Argentina's finances and economy. He's the economy minister. Mm-hmm. He's one of the leading top speakers in that. He said he's actually looking to possibly come up with a proposal to widen the band by 1.5%. So accelerate that process. That proposal is going to come in the next 30 days. There might be more proposals coming. So we should be seeing more contours of what is about to happen. And Argentinians have been have undergone already like decades of really slow growth. And having slow growth is something that's very painful, especially if it's coupled with quite high inflation. And there's still reasonably high inflation, slow growth. That's a very painful position for the population to be in. And, it doesn't make you popular as a president if that's your voters.
Karen, thank you so much for your time.
Oh, thank you, Kamal, for having me. It was great.
A big thank you to Karen for her time and insights. There's so much more to Reuters Econ World than just the pod. Unlock all of Reuters finance and economics reporting from across the globe by checking out our website or app. Now for that quiz. I asked you to pick out the nickname for Buenos Aires during Argentina's golden economic age. Was it A, the Venice of the Americas, B, the Paris of the South, or C, the Prague of the Pampas? And the answer is B, the Paris of the South. And if you've ever been to Buenos Aires, you might have seen why. Its neoclassical and Art Nouveau buildings look a lot like the architecture in France's capital. This is Reuters Econ World. Every week we go deep on the economic principles and ideas driving the biggest news around the world. If you want to tell us what you thought of this week's show, please drop us a line in the comment section of your favourite podcast platform. You can also reach out to me on LinkedIn. This episode was produced by Ethan Plotkin and Eliza Davis-Beard. Sound design, music composition and engineering was by Josh Summer and Sebastian Summer. Our executive producer is Leila de Kretzer. Remember, for all your daily news, just ask your smart speaker for Reuters World News 7 days a week. It's available across all podcast platforms. And if you'd like to see the faces behind the voices, watch it on Spotify. Don't forget to sign up for Reuters Next in early December. Or if you happen to be a local, come join me in the room. Attendance links are in the show notes. I'll see you back here next week.
The views expressed on this podcast are those of the participants, not of Reuters News.
If they have to do things that are basically unpopular, in the short term, can they get it past their own backbenchers, let alone, get re-elected at the end of it? And so that is a real binding constraint, I think, on the government.
It's perhaps comforting in its way that no matter what else is happening in the world, tariffs rising or falling, AI mania roaring or sputtering, markets up or down, Britain's chief finance minister will forever be under the gun for contemplating unpopular actions for Byzantine reasons. Rachel Reeves, the current holder of the office of the Chancellor of the Exchequer, is preparing to deliver the government's annual budget statement. She has to navigate a course between a confusing tangle of economic forecasts, fiscal rules her own ruling Labour government has made tougher for itself, and election promises to not raise corporate and income taxes. Not surprisingly, flighty investors and wealthy residents are nervously awaiting what she comes up with. How she will dodge a £20 billion gap between projections and policy, and what it all means for the UK economy, is the subject of this week's Viewsroom. Welcome to the Viewsroom, the weekly podcast from Reuters Breaking Views that dives into the knottiest topics in economics and corporate finance. I'm Jonathan Guilford. Flying solo this week as Amy Donnellan, my co-host, is in the US promoting her new book. Ever since former Prime Minister Liz Truss won a race against a rotting head of lettuce to be thrown out of office, it might seem a simple assumption that a return to political orthodoxy has calmed markets and set Britain on a stable path. That's not quite the case. With the 10-year benchmark sitting at 4.6%, UK government debt yields are the highest in the G7.
The number of employees has been shrinking since late 2024. Public debt is approaching 100% of GDP, and the government is trying to control a swelling budget deficit despite historically high levels of taxation. Amid it all, Reeves has weighed plans to hike key income taxes and then, according to the Financial Times, recently abandoned them. So, why is this happening? Fortunately, I have two guests sitting in the heart of the country's financial nexus to talk me through it. John Sindro is our global economics editor, and Peter Tell-Larsen is Breaking Views editor-in-chief, both in studio in Canary Wharf. Peter, John, welcome to the Viewsroom.
Thank you.
Hey, Jonathan.
All right, maybe let's start with the pressing issue before we step back as to what it all means. There's a lot of jargon around this that's a little bit confusing for anyone who isn't conversant in the argot of UK policy bandering, right? There's like a budget hole, which always sounds to me like somebody's implying like somebody lost money down the couch cushions, or there's some kind of like cooking the books going on. There's headroom and all this other stuff. I mean, in plain language, what is the situation that Reeves actually faces as she prepares to lay out the UK's fiscal policy for the year?
Well, I mean, it is confusing because it's set out in a confusing way. So basically, she has two fiscal targets. The one that we talk about the most refers to balancing day-to-day expenditure with receipts. But when we talk about the black hole or the budget hole, it doesn't actually mean how much of a shortfall there is right now. Actually, if you look at the past fiscal year, we're talking about 2.6% of GDP, a bit less than 80 billion pounds of difference between these two things, if you also account for depreciation of investments. But actually, that's not what the target is. The target is this measure 5 years from now. So at the end of the parliament or in the fiscal year ending in 2030, that's what the rule refers to. And then the question is, well, but then how do we know whether she's deviated from it or not? We know it because this all of these measures that the Treasury wants to implement, they have to run them through this independent fiscal watchdog called the OBR, the Office for Budget Responsibility. They plug it into their economic models, and based on the forecast for productivity growth, forecast for demographics, and whatever you want, they come out with a figure. And they say, well, you are this close to being in current budget balance by 2030. And this is like the famous fiscal hole. It doesn't even refer to what's happening in the government coffers right now. And then on top of that, of course, because all of these projections are so uncertain, and they have actually failed in the past, markets expect the chancellor to have a bit of a margin on top, which is a famous headroom. So in recent budgets, this headroom has fallen below 10 billion pounds, and thus markets think quite reasonably that it's the same as thinking that none of those projections might actually happen, and thus, the fiscal consolidation won't happen. So you have to then signal to the market that you're far above whatever the OBR says. And I think the market expectation right now is that she has to increase this headroom from 10 billion to 15. My personal view is unless she does 20, she won't get, a favorable gilt market reaction. Given that what we know is that the OBR will probably project a fiscal hole of 20 billion if everything stays the same, you have to add these 20 billion on top of the 20 billion headroom, and you get to the roughly 40 billion, some people would say 35, that she needs to make up.
Right. This just strikes me as crazy. Obviously, we have stuff like the CBO in the United States, right? And every country has its like independent, kind of like statistical forecasters and whatnot. And people are wary about budget windows and impacts and whatnot. But this whole thing of like the UK finance minister has to play this careful game of like how far is she within the margin of error of this like extremely error prone like forecast of the future, and like betting on whether she'll be given like the leash by markets to be able to do that. Like when I sit in the US and what happens is just like Donald Trump does something insane every day and it just happens, like it feels kind of crazy. Like, Peter, is this like reflective of a different reality between the two countries, or is this kind of just some bizarre?
Yeah. I mean, it is. It's reflective of a couple of things. I mean, partly it's just the political system, right? I mean, you have a sort of, you basically have a parliament which decides everything, and the government is the party with the majority, and they just kind of, so they can do a lot of stuff, and they have chosen to basically concentrate the doing of stuff when it comes to taxing and spending in basically one big set piece event every year, and then there's one in the spring, which is a sort of an adjustment to that. And so you create this kind of whole circus and this drama. The budget's coming up. What's going to be in it? What isn't going to be in it? What's she going to do? And that's just kind of that's sort of the way the country is run. The more short-term issue, obviously, is also you talked about Liz Truss earlier on. Is everybody, every UK politician is scarred by the memory of that event. The fact that you had a new prime minister who came in, basically decided to do a budget without without waiting for the OBR to weigh in with its forecasts. And kind of, and the market freaked out. Gilt sold off. The Bank of England had to get involved, and the Prime Minister left office within 6 weeks. So that's the other. There is a sort of a political sense there that if you do this in a reckless way, if you don't pay attention to these things, if you don't tick these boxes, then you're going to come a cropper.
Right. And I kind of wonder about that because what you're talking about there, right, is sort of like the famous moron premium, right? It's this idea that the government has become so unmoored from reality that, you get this essentially tax that sits on top of bond yields or that depresses the currency and that makes the day-to-day operation of the government more expensive because you are doing crazy things. And I just wonder, how clean does that story look these days, right? Because, quote unquote, the adults are back in charge or what have you. And the UK still, as we said, has the highest yields in the G7. There's still I know when I eyeball it, it seems like what's actually happening is stuff just really changed a few years ago and has stayed different ever since. If I'm just looking at top line, tax and spending figures for the UK government, for governments around the world, right? Is it just that we're locked in some really weird, just terrible sort of equilibrium state right now? Or is it that there was this thing that was crazy and there was a moron premium and that sat on top of kind of whatever these trends were? I guess what I'm trying to figure out is the moron premium real?
I think it's I don't know what Peter thinks. I think it's real to an extent, but it's mostly inflation. Inflation in the UK was at 4%, above 4% most of the year. It's the most recent reading is 3.6%, so it's coming down a little bit. But of course, the UK has an extremely high inflation rate relative to other G7 countries. Thus, it also has a more hawkish central bank, and this means gilt yields are higher. Bank rate is at 4%, 10-year yields are at 4.6. It's not that different. Clearly, there is a bit of a we don't trust the government's fiscal policy, factor in it. I wouldn't deny that it is, but that there is. But you have to take into account that it's mostly about inflation. And also, the government's budget relates to inflation. And we saw this in the past budget, for example. The government, decided on some measures that were not inflation friendly. For example, both street economists and the Bank of England believe that out of that 4% inflation we've had through most of the year, about 1 percentage point related to administered prices or prices that the government can control directly or affect directly. For example, when they raise national insurance contributions, they raise the cost of doing business, and thus companies pushed up prices. So they themselves have not been very aware of the impact that the budget has on what they should care about the most, which is inflation. So while they talk about we have to adhere to these rules, they often have forgotten that gilt yields are mostly about interest rates and interest rates are mostly about inflation.
So when you formulate it like that, though, right, that feels like what you're saying is there's actually a lock where the only thing that makes sense is for the government to cut spending. That feels like an analytic frame where
raise taxes.
Tax policy is just per se. But what we're saying here, right, is any tax that is going to raise the price of some input, whether that's the input to the labor market
income
or
tax,
whatever, right,
income tax does not, which is why it was the market's preferred. The markets wanted the government to break their commitment to not touch income tax for working people for several reasons. One, because it's kind of silly and it ties the government's hands behind their back, and that's not something the market wants, right? They want the government to be able to react to whatever is necessary in the future, and they also don't trust that the so-called smorgasbord of other taxes that they're trying to raise will not distort the economy. But the other reason is it's because it's deflationary, right? I don't think the UK economy is necessarily overheating at the moment. You see the unemployment rate going up, and it's not a particularly fast-growing economy, but it does suffer from some supply side inflation and from some cost push inflation, and if the government adds to that, it gets worse.
Yeah, but it's also, I mean, this is really, I mean, I agree with John about the sort of the economic backdrop, but this is really a political problem, and to a certain extent a self-inflicted one. And so you're right, John, that basically the kind of the adults are back in charge, right? We don't have people in government who are suggesting ridiculous things, but there is a big question. Well, they've tied their own hands on certain things. And then there is also a big question about their ability to actually deliver the type of things that they might want to do. And that's kind of, I think that's what really makes people nervous here is, so you've had, as John mentioned, the kind of the government is sort of committed to not raising taxes on working people. So even though actually working people, whisper it, but they actually don't pay, as a proportion of their income, they pay less tax than in a lot of developed European countries. They have so they've sort of ruled out a load of things there, which they may or may not break. Probably not, it looks like at this point. But then they've also got to consider the sort of the knock-on effects of what it is that they might do, and so. And this, I think, is where people get anxious. So we saw the big thing that happened really was that the government tried to make some fairly minor but meaningful for the people concerned changes to welfare earlier this year. And basically what happened was that there was a rebellion. So this government, which on paper has a very, very large majority, had to backtrack on that. And that was a real alarm signal, because basically people are now wondering, if they have to do things that are basically unpopular, in the short term, can they get it past their own backbenchers, let alone, get reelected at the end of it? And so that is a real binding constraint, I think, on the government. And then the other thing is, but the other thing is just the kind of the way in which they've approached this suggests a lack of confidence and a lack of sort of determination. And so we had a situation at the beginning of November where Rachel Reeves made a speech where she said, basically, in a nutshell, she said, everybody's got to do their bit, and there's going to be some pain, and it's got to be shared. And this was widely interpreted, I think correctly at the time, as a sign that they were sort of preparing everybody for, like, okay, we're going to kind of really go for it on the tax front. And I spoke to people after that in the markets, and they said, well, this is good, because it means that, back to John's famous headroom, it means basically they're going to take this off the table. They'll have a buffer. They won't have their forecast being blown off course by every little bump in the global economy, and they'll basically be able to run the country properly again. And then, like 10 days later, we read in the FT a leak, subsequently sort of confirmed that maybe they're not going to do that, and they're going to do this smorgasbord of small measures, and they're going to and they're not actually going to raise taxes. And the people in the markets are just like, what is this? Like, what are they doing, and why are they changing their minds, and what is it that's prompted them to change their minds? So I think part of it's self-inflicted, part of it is the political reality they deal with, and part of it is just their own execution of the policies.
Right. This is what I wonder about the idea of, and why I kind of wanted to get at the whole question of, like, the moron premium and, like, are the adults back in charge and so on? Because right now, like, does it feel like it? Like, if you're like so you have like these two binding constraints, right? On the one side, you have whatever is happening in the credit market that is going to, like, constrain you in terms of, where government borrowing costs going to go, or, like, on, just like the literal sort of like economic consequences of what you're doing. Are you going to end up with, like, a more inflationary environment or not? Then you have the other side where employment is declining, where affordability issues are really, really paramount kind of across the developed world. You have ministers across the G7 like all like kind of hitting these constraints in various ways, right? Like we had issues with like pensions in France and so on. Like I guess I just wonder, like, is this all peripheral fiddling around the more fundamental question of what's going wrong and what's going right? Because like it doesn't like jump out at me that there is some overarching vision for jumping the rails for the UK, like onto like some kind of fast track where, this general kind of like low growth minimum that everybody has been kind of sitting in ever since like the Great Recession, with like the slight interlude of COVID and whatnot, is actually going to fundamentally change. And, there are various other countries where you hear like, oh, we're going to have like an AI-led investment boom, or we're going to be, we're like a small open economy and we're going to like lean into that. There's going to be a manufacturing renaissance, or et cetera. I'm just like, I'm not sure what the story is in the UK. You know what I mean? Like, what am I missing?
I think that's right, and I think it's related to what Peter was just saying. I think the lack of a clear vision is the key here, right? Like one component is inflation, the other component is nobody knows where they're going, and I would argue that trying to stick to these numerical numbers to ultimately has meant that their vision is less clear, not more. Like they were selling that we know what we're doing because we're gonna hit all these OBR rules, but actually ultimately we don't know where they're going. I mean, one argument in favor of things getting better from here is that if inflation keeps going down, you've seen a lot of scaring among consumers who still have today a very high savings rate. You see this across Europe as well. If you have inflation meaningfully coming down, interest rates meaningfully coming down, house prices going up at a faster pace than they are right now, you might see a rebound in the cyclical element of growth. And this might put the government in a better position, not just fiscally, but also to claim that they're achieving something. The problem is that longer term, the UK is in a complicated position. So exports of goods, for example, after Brexit have remained very subdued. The big advantage the UK has had is that exports of services, mostly professional services, have actually increased at a very healthy clip. But this brings us back to the UK still retains the same comparative advantages as before in these sort of, urban services. And it is not very clear how the government can rebalance the economy as they intended. I mean, what they mostly want to focus on beyond the headlines of industrial strategy is planning. They want to get this country, which is not usually very fond of building too much, to build stuff, right? So they have a bill that is being discussed in Parliament right now, that the idea of that is that you will fast track not just residential housing, but also infrastructure and this kind of thing. So there is an element of saying, well, if we manage to better connect certain urban centers, we might kickstart growth. You add that to the increase in defense spending, which is another of the UK's strong legacy industries, and maybe you'll get some long-term growth out of that. But of course, I still think it lacks ambition is the problem. Like these types of very bounded policy prescriptions that have come from the current government, they just don't like, I think, they lack the scope that is necessary. And a clear example of this is that expensive gas prices are behind a lot of the UK's current troubles, both in terms of inflation and low growth for many industries. And yeah, I mean, this is a country where admittedly you cannot install a lot of solar panels, but there is definitely scope for the government to do a lot more when it comes to renewable energy planning and building, and also enhancing the power grid. It seems like a low-hanging fruit that the government's aware of, but I don't think we're going to see enough of that.
I mean, look, ultimately, though, I would say if we're looking for a sort of a silver lining in all of this, expectations are incredibly low, right? I mean, if Rachel Reeves actually just shows up and delivers her budget speech without falling over or kind of sort of and
crying
and there's or crying or as she did and there's a reasonably credible sort of plan with a bit of extra tax here and a bit less spending there and sort of and they sort of cobble it together. Actually, people will kind of go, oh, okay, it's not too bad. So but look, I mean, you're right. I mean, all these fundamental questions about the economy remain. And look, and ultimately, this is a government whose vision, if there is one, is that they want growth, right? But they don't really, growth is a very hard thing to achieve. You can sort of set it as an objective, but actually delivering it is difficult. And I think until they sort of solve that question about what is it that they're trying to achieve and how are they going to go about it, I think we will unfortunately be sort of stumbling from one problem to the next.
Okay, so as long as the Benny Hill theme isn't playing in the background of the budget speech, victory for Rachel Reeves. On that note, we will wrap it up. John, Peter, thank you so much for joining me on the Viewsroom.
Thanks, Jonathan.
Thank you.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. we have a new email address where you can send us feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and reuters.com.
Jensen, it's been an astonishingly busy day for you in Washington, D.C., so I'm grateful for your time. You're sold out of Blackwell. That's what you said, but also that $500 billion forecast, which is Blackwell Rubin, has room to grow. How do those fit together?
I said sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin. From silicon to systems to software to algorithms, people are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is zero. All of our forecast, the guidance that we showed, zero. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Jensen, during the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that will continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Jensen, the number one question I get for you is always about energy. How severe is the energy shortage in the context of AI expansion? And would you talk a bit about power and whether power is a bigger constraint for this build out than the chips themselves?
When you're growing at the rate and scale of NVIDIA, remember we're growing some 60% a year. Just quarter to quarter growth of our company is $10 billion. We grew an entire size of a company just in one quarter. And so the scale and the rate at which we're growing, everything's a challenge, which is the reason why NVIDIA has to be world-class at our supply chain, working with incredible providers and suppliers like TSMC and the memory partners and all of our systems partners, but also working downstream to work with energy providers, power generator companies, all of the land, power, and shell providers, so that we could make sure that as we launch into the marketplace, as we deploy into the marketplace, land, power, and shell will be ready for us. One of our great advantages is that we have such a large network of go-to-market. We're in every single cloud. Every single cloud service provider is a customer of ours. We're in every single GPU cloud.
गाइस ये नेचुरल गैस में भी एंट्री हुई नहीं है, ध्यान रखना, थोड़ा सा वेट करना है, बार बार वापस ऊपर से रेजिस्टेंस क्रिएट करने की कोशिश कर रहा है। ठीक है, अभी एंट्री मत करना, इसमें एंट्री हुई नहीं है नेचुरल गैस में, वेट करना। यहाँ पर ये सपोर्ट जरूर है, बट ये ऊपर से बार बार जो यहाँ पर रेजिस्टेंस बना बैठा है, ये नीचे ऊपर जाने नहीं दे रहा है। नहीं 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 नहीं, अगर ये कैंडल क्लोज हो गई 401 के नीचे, जो करंट कैंडल है 15 मिनट की, अगर ये नीचे क्लोज हो जाती है 401 के नीचे, तो फिर से एक नया रेजिस्टेंस बन जाएगा इसी लेवल पे। तो होगा क्या, नीचे सपोर्ट तो है ही है, ऊपर रेजिस्टेंस भी बन जाएगा अगेन, जैसे यहाँ पर बना था थोड़ी देर पहले। मार्केट ने ब्रेकआउट किया, निकाल दिया, बट अगेन प्राइस फिर से नीचे आया है, सपोर्ट होल्ड करके बैठा हुआ है, बट अगेन वही सेम एक नया रेजिस्टेंस बनने की कोशिश में है। अगर कैंडल क्लोज हो गई वापस 401 के नीचे, फिर से ट्रैप्ड हो जाएगा एक रेंज के अंदर, हमें फिर वेट करना पड़ेगा रेंज के बाहर निकलने के। बेस्ट केस सिनेरियो है कि 403 के ऊपर क्लोज कर दे। अगर 403 के ऊपर क्लोज नहीं करता है तो 401 के नीचे भी क्लोज ना करे। 401 के नीचे क्लोजिंग आई तो फिर इसमें बाइंग मत नहीं करेंगे। सपोर्ट पे जरूर है, बट रेजिस्टेंस बार बार बने जा रहे हैं। एक रेजिस्टेंस बना था, उसका ऐसा उड़ा दिया उन लोगों ने शायद, रेंज ब्रेक करके फिर से एक रेजिस्टेंस बनाने की कोशिश में है ये, इवन दो नीचे सपोर्ट ब्रेक नहीं हुआ है अभी भी। काफी स्ट्रॉन्ग फाइट चल रही है। पहले भी सेम सिचुएशन बनी थी, सपोर्ट था नीचे वाला, ये ऊपर से रेजिस्टेंस बन गया नीचे, फिर काफ़ी देर साइडवेज रहा, ब्रेकआउट किया रेजिस्टेंस का ऊपर, रेंज ब्रेक कर दी, नीचे फिर से बाइंग थी, थोड़ा बहुत एक पुल बैक जरूर आया, फिर से एक नया रेजिस्टेंस बनाने की कोशिश कर रहे हैं। 401 के नीचे क्लोजिंग आई तो फिर प्रॉब्लम हो जाएगी फॉर बायर्स, अगेन ट्रैप्ड हो जाएगा, फिर रेंज ब्रेक करने की किसी एक साइड पे जरूरत पड़ जाएगी। तो बी कॉशियस, इस चीज़ का ध्यान रखना थोड़ा सा नेचुरल गैस में। 401 के नीचे क्लोजिंग नहीं आनी चाहिए। 403 के ऊपर चला जाए तो बहुत बढ़िया, 401 के नीचे क्लोजिंग आई तो फिर बाइंग नहीं बनेगी, फिर हम वापस वेट करेंगे रेंज के ब्रेक होने का किसी एक साइड पे, 403 के ऊपर क्लोज हो या फिर वही 398 के नीचे कहीं क्लोज हो। साइडवेज है ना वो। 8 मिनट लेफ्ट, क्लोजिंग देखना कहाँ पर आती है। 401 के नीचे क्लोजिंग आई तो फिर ये बाइंग का ट्रेड बनेगा नहीं, सेल भी नहीं कर सकता क्योंकि फिर से रेंज बन जाएगी, फिर से रेंज के ब्रेकआउट या ब्रेकडाउन का वेट करेंगे। बहुत ही फाइट चल रही है इस लेवल पे नेचुरल गैस में। बायर्स मुझे लग रहा है शायद ये चाह रहे हैं कि पहले लिक्विडिटी नीचे से लेके जाया जाए, यहाँ से पहले लिक्विडिटी ले ले बाइंग की, फिर ऊपर जाए। सेलर चाह रहे हैं कि पहले ऊपर से लिक्विडिटी ले लें और फिर यहाँ सेल करें, इसलिए बिटवीन द लेवल फाइट है। 1 मिनट है, देखते हैं आगे की तो क्लोजिंग नहीं है, फिर एंट्री तो बनेगी नहीं। वी नीड टू वेट अगेन। ठीक है, बहुत देर से साइडवेज बना हुआ है इसी लेवल पे। यहाँ पर देखोगे 10 बजे के आसपास आ गया था, 5 बज गया, ऑलमोस्ट 6-7 घंटे से साइडवेज है। फाइट बहुत अच्छी है, नीड टू सी किस लेवल के साइड पे फिर निकलते हैं। लेने को देखो सपोर्ट है, रेजिस्टेंस है, फिर से बाई सेल कर सकते हैं, बट अगेन वही सेम प्रॉब्लम आएगी, बहुत पास पास में बन गए दोनों ही सपोर्ट और रेजिस्टेंस। नॉर्मली इस तरह की कंडीशन में फिर या तो अवॉइड ही करो, बेस्ट रहता है। थोड़ी डिस्टेंस पे होना जरूरी है सपोर्ट रेजिस्टेंस, नहीं तो फिर वही ट्रैप हो जाते हैं। क्योंकि हो सकता है हम बाई करें नीचे एसएल उड़ा दे, या ऊपर सेल करें एसएल उड़ा दे। ठीक है, इससे पहले यहाँ पर मार्केट में सेल ऑफ रेजिस्टेंस जरूर बन रहा था, ऐसा उड़ाया, रेंज ब्रेक करी, एक्सपेक्ट था बाइंग आएगी, सपोर्ट लेने की कोशिश कर रहा था, फिर से अगर ये नीचे क्लोज होती है फिर से रेजिस्टेंस वही वापस आ जाएगा। फिर 4 मिनट लेफ्ट, नीचे ही है कैंडल 401 के, क्लोजिंग आ गई तो फिर वापस रेंज। रेजिस्टेंस पे लगा दो साथ साथ। Open AI era pushes old school stock analyst into private markets. यहाँ पर देखोगे ना वॉल्यूम प्रोफाइल काफी स्ट्रांग बन रहा है। The OpenAI era is pushing traditional stock analysts into the private markets where they can leverage their expertise and insights to navigate the evolving landscape of high growth companies. मिनट लेफ्ट, बाकी देखते हैं 6:30 पे न्यूयॉर्क सेशन ओपन होता है तो। कैंडल तो हो गई, देखो क्लोज नीचे नहीं हुई है, 401 के नीचे क्लोज नहीं हुई है। फाइन, स्टिल फाइन। 401 के नीचे क्लोजिंग हो गई तो समझो फिर से रेजिस्टेंस बन गया ऊपर। इवन दो अभी भी सपोर्ट है, इंटैक्ट ही है, ब्रेक नहीं हुआ है जब तक 398 के नीचे क्लोजिंग नहीं आती। बट अगर 401 के नीचे अब कोई भी कैंडल क्लोज हुई बिफोर 403 के ऊपर कैंडल क्लोज होने से पहले, तो 403 के ऊपर कैंडल फटाफट से क्लोज हो जाए तो बेटर है। अदरवाइज अगर 401 के नीचे कैंडल क्लोज होती है तो इट मेक अनदर रेजिस्टेंस ओवर हेयर। उस केस में फिर से सपोर्ट या रेजिस्टेंस रेंज बना के बैठ जाएगा। फिर एक साइड या तो ऊपर की साइड ब्रेक करे या फिर नीचे की साइड ब्रेक करे, तभी रेंज ब्रेक होगी। कैंडल अगेन ओपन इक्वल टू हाई इन नेचुरल गैस। ठीक है, बार बार ट्राई कर रहा है मार्केट 401 के नीचे क्लोज कर दे सो दैट ये रेजिस्टेंस बन जाए, फिर फाइट करें और फिर प्राइस को नीचे लेके आए। बायर्स ट्राई कर रहे हैं कि 401 के नीचे क्लोजिंग ना देने दें। व्हाट अ फाइट। 3 के ऊपर चला गया तो फिर तो ये निकल ही जाएगा। नेचुरल गैस की इन्वेंट्री का फोरकास्ट देखोगे लास्ट टाइम जितना आया था लास्ट वीक उससे कम एक्सपेक्ट कर रहे हैं, मतलब फोरकास्ट के अकॉर्डिंग डेटा कम ही आता है तो इट इज़ पॉजिटिव। तो फोरकास्ट तो बुलिश है नेचुरल गैस के प्राइस के लिए। गैस में कॉल है, होल्ड करो फिर, अच्छा मोमेंटम आया है, ऊपर रेजिस्टेंस 410 का ही है। काफ़ी देर फाइट करी मार्केट ने, सपोर्ट था ये यहाँ पर, फिर यहाँ पर रेजिस्टेंस बन गया, रेंज ब्रेक करी, पुल बैक आया, फिर से बाइंग स्टार्ट हुई, फिर से ट्राई कर रहा था एक रेजिस्टेंस बनाने की, बट कैंडल क्लोज नहीं हुई, जैसा मैंने थोड़ी देर पहले बताया आप लोगों को। 401 के नीचे कैंडल क्लोज हो जाती तो फिर हम इसको कंसिडर ही नहीं करते, बट कैंडल क्लोज नहीं हुई एंड देन अगेन मार्केट मूव्ड। लेट्स होप रेजिस्टेंस तक जाए, अभी भी ये रेजिस्टेंस सपोर्ट सॉरी इंटैक्ट ही है। भी करते रहो गाइस, कम ऑन। जिन लोगों ने लाइक नहीं किया स्ट्रीम को, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं। वहाँ पर है काफ़ी लिक्विडिटी ना, ब्रेकआउट नहीं हुआ था जब। इसको देख सकते हैं कैंडल बाय कैंडल, कोई सा नहीं है। डेटा काफ़ी हैं, ध्यान रखना, इंपॉर्टेंट डेटा हैं सारे के सारे, स्पेशली यूएस का अनएम्प्लॉयमेंट क्लेम्स का डेटा लास्ट वीक तो आया ही नहीं था, लास्ट काफ़ी टाइम से नहीं आ रहा है। अनएम्प्लॉयमेंट रेट कितना है यूएस में और कितने लोगों ने अनएम्प्लॉयमेंट क्लेम्स के लिए फाइल किया हुआ है, ये तो टेंटेटिव है, आएगा भी नहीं आएगा कंफर्म नहीं कह सकते, बट या अनएम्प्लॉयमेंट रेट इज़ इम्पॉर्टेंट। एंड देन एवरेज आर्ली अर्निंग, हर इंसान यूएस में कितना कमा रहा है घंटे का, एक घंटे का, दैट इज़ कॉल्ड एवरेज आर्ली अर्निंग मंथ ऑन मंथ बेसिस पे। एंड नॉन फार्म एम्प्लॉयमेंट चेंज, जो सेक्टर फार्मिंग से रिलेटेड नहीं है वहाँ पर कितना चेंज आया है, ऑल दीज आर वेरी इंपॉर्टेंट। एग्जिस्टिंग होम सेल्स भी है, सो 7 PM से डेटा भी आने लग जाएंगे अभी 6:30 के बाद। ओ, प्री मार्केट ओपन होने वाला है यूएस में। कल क्रूड ऑयल की इन्वेंट्री देखोगे, आई बेयरिश जरूर थी, मार्केट गैप डाउन भी ओपन हुआ उस कैंडल पे, देन रिकवर किया एंड देन कंटिन्यू अपसाइड ही है कल से, जितना फॉल आया था उतना ही रिकवर कर गया। तो सपोर्ट है नीचे जहाँ से कल बाइंग आई थी। कौन सा स्टॉक है जीएमई? क्यों नहीं हुआ था ना उस समय? आई थिंक सपोर्ट लिया था। थर्टी मिनट लेफ्ट न्यूयॉर्क सेशन की ओपनिंग। नेचुरल गैस का साइडवे जाने का ही मूड है आज। क्रूड ऑयल में ध्यान रखना, ऊपर रेजिस्टेंस जोन है क्रूड का। क्रूड ऑयल में ध्यान रखना, ऊपर दो रेजिस्टेंस हैं। एक तो एक कल वाला ही है, उसके ऊपर एक उससे एक दिन पहले तो 18th ऑफ नवंबर का रेजिस्टेंस है। बाकी नीचे आता है तो फिर इमीडिएट सपोर्ट 5300 ही रहेगा उस केस में, देन 5250 नीचे वाला। फिर से रेजिस्टेंस बनाने की तैयारी में है क्या? नेचुरल गैस क्लासिकल एग्जांपल लगता है नेचुरल गैस आज इन्वेंट्री के बाद ही गिरेगा। व्हाट डू यू थिंक? मैं तो देख रहा हूँ यहाँ पर ये बार बार फाइट हो जा रही है यहाँ पर। ये सपोर्ट ब्रेक होने का नाम ले नहीं रहा है। प्राइस थोड़ा सा भी ऊपर जा रहा है, ऊपर एक नया रेजिस्टेंस क्रिएट हो जा रहा है। यहाँ पर ये सपोर्ट था, प्राइस आया, थोड़ा बहुत सपोर्ट लिया, रेजिस्टेंस क्रिएट हो गया, फाइट चली, काफ़ी देर के बाद ब्रेकआउट हुआ, सेलर्स कैसल गए, सपोर्ट इंटैक्ट रहा, फिर नीचे आया सपोर्ट लेने, फिर होल्ड करने की कोशिश करी, फिर से रेजिस्टेंस बना दिया उसी लेवल पे। फिर अभी थोड़ी देर पहले ब्रेकआउट हुआ, फिर सेलर कैसल गए, फिर से सपोर्ट इंटैक्ट है, अभी भी इंटैक्ट ही है। बट अगेन वही बात है, अगर अब फिर से प्राइस को जाना है तो निकल जाना चाहिए अब सीधा सीधा 405 406 के ऊपर, ये जो लास्ट स्विंग बना है। अब फिर से अगर कोई कैंडल वापस से करंट कैंडल के नीचे क्लोज हो जाती है 401.8, एक और रेजिस्टेंस फिर से बन जाएगा यहाँ पर। फिर वही फाइट, यहाँ पर रेजिस्टेंस, ये सपोर्ट है ही, दोनों में फिर एक साइड का एसएल जाएगा, या तो अपर साइड का लोअर साइड का, फिर उस साइड मार्केट जाएगा। तो जाना है तो फटाफट निकल जाना चाहिए। 10 सेकेंड है। इस कैंडल के नीचे अगर अब कोई कैंडल क्लोज होती है वापस से, तो फिर से आप मान के चलना कि यहाँ पर एक रेजिस्टेंस फिर क्रिएट हो गया। बोर्ड अभी भी इंटैक्ट है, ब्रेक नहीं हुआ है, बट ये फिर से एक रेजिस्टेंस बन जाएगा। उस केस में फिर से साइडवेज जा सकता है प्राइस, फिर से हमें रेंज ब्रेक का वेट करना पड़ेगा। अभी भी प्राइस के पास अच्छा मौका है, निकल जाना चाहिए। बेस्ट तो ये अब 406 के ऊपर निकल जाए क्लोजिंग बेसिस पे। 15 मिनट की कैंडल नीचे क्लोज नहीं होनी चाहिए, 101.8 के नीचे कैंडल क्लोज नहीं होनी चाहिए। फटाफट निकल जाए तो ही बेटर है। ओके, कैंडल ही गैप अप हुई है। गैस में बाइंग में हो तो ट्रेल कर लो। ये ब्लू कलर की लाइन है ना, इसके नीचे क्लोजिंग नहीं होनी चाहिए, फिर बोल रहा हूँ। इसके नीचे क्लोजिंग हो गई, क्लोजिंग है तो प्रॉब्लम आ जाएगी वापस। में भी देखोगे वॉल्यूम बड़ा स्लो हो गया है। यहाँ पर ही फाइट ही चल रही है एक्चुअली में, जितना मुझे दिख रहा है। बड़ी कैंडल इसमें भी बनेगी अब फटाफट से। 6:30 होने वाला है गाइस, ध्यान रखना। न्यूयॉर्क सेशन ओपन होगा 6:30 पे। चल गैस में ध्यान रखना गाइस, जिन लोगों ने बाई करके रखा हुआ है अपना एसएल, या ट्रेल कर लेना। प्राइस अगर नीचे क्लोज करा चार, ये लास्ट जो मैंने ब्लू कलर की लाइन ड्रॉ करी है 401.8 के नीचे, ये करंट कैंडल करे या फिर बाद में कोई भी कैंडल करे, तो फिर यहाँ पर एक नया रेजिस्टेंस बन जाएगा, फिर अगेन मार्केट ट्रैप्ड हो जाएगा रेंज के अंदर इस छोटी सी। नीचे सपोर्ट अभी भी है, ऊपर एक नया रेजिस्टेंस। ऊपर जाना है तो अब निकले, क्लोज करे 405 406 के ऊपर। ज़्यादा ही सेलिंग का प्रेशर आ रहा है। चार सौ एक, ये जो ब्लू कलर की लाइन है नीचे, इसके नीचे कैंडल क्लोज होती है आने वाले टाइम पे, अगर विदाउट क्लोजिंग अबव 405 और 406, 405 और 406 के ऊपर क्लोज हो जाए तो वेल एंड गुड। डायरेक्टली नीचे अगर क्लोजिंग बेसिस पे आता है 401 401.8, तो फिर मेरे अकॉर्डिंग तो निकल ही जाना, फिर कोई फ़ायदा नहीं रुक के, क्योंकि फिर फाइट हो जाएगी। फिर एक साइड का एसएल हिट होने का वेट करना पड़ेगा बायर या सेलर का, तभी वापस री एंट्री कर पाएंगे। वो रेजिस्टेंस बन चुके हैं, दोनों के दोनों ब्रेकआउट हो गए थे, तो ये लग रहा है शायद तीसरी बार भी रेजिस्टेंस ही बना देंगे फिर से। 6:30 हो गया, देखते हैं न्यूयॉर्क सेशन की ओपनिंग है, विल बी क्लियर क्या होने वाला है। न्यूयॉर्क सेशन इज ओपन। ट्राई जरूर कर रहा है नेचुरल गैस, बट बी कॉशियस। ऊपर क्लोजिंग आए तो बेटर, नहीं तो फिर रेजिस्टेंस बन जाएगा इसी लेवल पे फ्रेश। somehow was due to news or something else 400 ट्रेस क्रॉस कर जाए तो नेचुरल उसके बाद लेवल क्या रहेगा? ये 410 के ऊपर तो एक मैंने फिर सीधा 15 मिनट में तो वहां पे कोई लेवल शो नहीं हो रहा है। 4 आवर टाइम फ्रेम का ही लेवल है 420 या 30 के बीच में। 420 टू 30 के बीच में एक शायद रेजिस्टेंस है, बट वो 4 आवर में ही है, ना कि 15 मिनट में। 15 मिनट में भी हो सकता है कुछ लेवल हो, बट उतना पीछे 15 मिनट के चार्ट में कुछ शो ही नहीं कर रहा है, तो उस पर मैं कुछ कह नहीं सकता। होगा जरूर, ऐसा तो नहीं है नहीं होगा 15 मिनट में भी, बट लेवल शो नहीं हो रहा है। ठीक है, अगर यहाँ से प्राइस ऊपर जाता है तो फिर 420 टू 440 कह सकते हो। ऐसे बड़ा लेवल है, 4 आवर में लेवल बड़े ही होंगे। 422 टू 440 एज अ मेजर रेजिस्टेंस, तो इसका एक राउंड नंबर लो तो 427 से 435 के बीच में एक रेजिस्टेंस मिल जाएगा एज पर द 4 आवर टाइम फ्रेम। अगर इस लेवल के ऊपर भी प्राइस चला जाता है एज पर द हायर टाइम फ्रेम। यहीं से ऊपर चला जाए प्राइस वही काफ़ी रहेगा। कितना ट्राई कर रहे बाहर, ऊपर जा ही नहीं रहा प्राइस। इवन तो अभी तक ब्रेक डाउन हुआ नहीं है, सपोर्ट स्टिल इंटैक्ट, बट जब भी प्राइस ऊपर जा रहा है ऊपर से सेलर नया रेजिस्टेंस बना के सेल कर दे रहे हैं, या फिर नया रेजिस्टेंस बनाने की कोशिश कर दे रहे हैं। बाहर फिर ट्राई कर रहे हैं ऊपर ले जाए। कंप्लीट सर्कस, एक परफेक्ट चैनल है, फ्लैग पैटर्न का हो या चैनल है। देखो कौन जीता है अल्टीमेटली। अभी के लिए इंपॉर्टेंट लेवल ध्यान रखना, नीचे अगर क्लोजिंग आती है 401.8 के नीचे 15 मिनट की कैंडल की, तो फिर वापस से रेंज बाउंड हो जाएगा ये रेंज के अंदर। ऊपर जाना है तो अभी भी मौका है, चला जाए प्राइस, या फिर एटलीस्ट एक सिंगल कैंडल तो 405 405 के ऊपर क्लोजिंग दे दे, तो भी ऊपर जाए ना जाए सपोर्ट इंटैक्ट ही रहेगा। बट अगर ये नीचे क्लोज कर गया गलती से 401 401.8 के नीचे, तो फिर फाइट हो जाएगी वापस से। पोर्ट पे मुझे नहीं लग रहा फिर उस केस में बायर होल्ड करेंगे। क्योंकि ये ऐसा नहीं है सपोर्ट आज का ही है, ये सपोर्ट कल था, कल एक बार बाइंग आई थी इंडियन मार्केट में, उसके बाद आज अर्ली मॉर्निंग क्लोज होते होते भी बाइंग आ गई थी एक, अर्ली मॉर्निंग ने उसी को कंटिन्यू किया, फिर थर्ड टाइम फिर से आया था अर्ली मॉर्निंग 12 बजे के आसपास थर्ड टाइम, फिर एक रेजिस्टेंस बन गया था ऊपर, काफ़ी देर फाइट करी, रेजिस्टेंस के असर उड़ा दिए सेलर्स के, फिर ऊपर जाने की कोशिश करी, फिर लेके आए नीचे, फिर एक रेजिस्टेंस बनाई, फिर बायर वापस ऊपर लेके चले गए, फिर सेलर के असर उड़ा दिए। तो चार चौथी बार था वो, अब आएगा तो पांचवी बार। और अगर फिर ये कैंडल क्लोज होती है 401.8 के नीचे तो फिर से एक नया रेजिस्टेंस थर्ड टाइम इंट्राडे में सेम लेवल पे देखने के लिए मिल जाएगा। तो सपोर्ट और रेजिस्टेंस बहुत पास पास बन जाएंगे। उस केस में अगेन फाइट होगी, या तो ऊपर सेलर के एसएल जाएंगे या बायर के, जिस साइड के एसएल चले गए दूसरे साइड का लेवल स्ट्रांग हो जाएगा, फिर वहां से दोबारा बाई सेल करेंगे, नहीं तो। जब तो लाइक कर सकते हैं गाइस, कम ऑन, डोंट फॉरगेट टू लाइक द स्ट्रीम। डेटा भी है, याद रखना 7 बजे काफ़ी डेटा है, इंपॉर्टेंट है, थोड़ा बहुत इम्पैक्ट डाल सकते हैं प्राइस पर, स्पेशली गोल्ड, सिल्वर, यूएस डॉलर एंड क्रूड। काफ़ी टाइम था, ऑलमोस्ट 2022 से 2023 तक पूरा रेजिस्टेंस पे था, फिर सेल ऑफ आया, नीचे रिटेस्ट था, वो रिटेस्ट किया, फिर ऊपर लिक्विडिटी स्वीप करी, देन अगेन नीचे एसएल शिफ्ट हो गया था बस। यहाँ ये नीचे भी एक रिटेस्ट पेंडिंग है, कब का ये 2020 वाला, लग रहा है सर अब यहाँ जाएगा एक बार $6 के आसपास। यहाँ पर भी तो काफ़ी, 1 साल हो गया इसका। ये तो हो गया टेस्ट, रीटेस्ट हो गया। यहाँ पर नीचे वाले का पेंडिंग है, कितना गिर सकता है उस केस में। यहाँ से हो सकता है फिर जब मारे वापस ना। की कैंडल भी हो गई क्लोज। गैस ऊपर तो क्लोज कर नहीं पाया, 405 के ऊपर क्लोजिंग चाहिए थी। ठीक है, जो लोग बाइंग में हैं ध्यान रखना, अब नहीं आ रही है क्लोजिंग। अगर ये क्लोजिंग दे देता है वापस 401.8, ये जो ब्लू कलर की लाइन ड्रॉ करी है, फिर मेरे अकॉर्डिंग जो बाइंग में है निकल जाना, दोबारा एंट्री मत करना फिर, क्योंकि फिर रेंज बन जाएगी ऑटोमेटिकली एक वापस से। ऊपर रेजिस्टेंस, नीचे सपोर्ट है ये। देन फिर हम वेट करेंगे किसी एक साइड के एसएल वापस प्राइस उड़ा दे, या तो नीचे के एसएल ले ले पहले, या फिर ऊपर सपोर्ट रेजिस्टेंस के एसएल ले ले, और फिर जिस साइड के एसएल निकल जाएंगे फिर दोबारा उसी लेवल के अपोजिट जो लेवल रहेगा वहां से ही बाई सेल करेंगे। ब्रेक तो कर दिया है। इस केस में फिर ये रेजिस्टेंस बन जाएगा। अभी भी ट्राई कर रहे हैं कि क्लोजिंग ना आए 401.8 के नीचे। क्लोजिंग आए या फिर ना आए, क्लोजिंग विग ना बनाए, बिकॉज विग बनाया तो एसएल शिफ्ट करना पड़ जाएगा। बाकी जो लोग ट्रेडिंग भी यूज़ करते हैं, अगर वो प्रीमियम वर्जन उसका यूज़ करना चाहते हैं तो अभी सेल आने वाली है, ध्यान रखना। ईयर में एक ही बार सेल आती है, एक या दो बार। ब्लैक फ्राइडे सेल एंड साइबर मंडे सेल। तो वहाँ पर आप लोग चाहें तो उसको अवील भी कर सकते हैं, बहुत ही चीप प्राइस में आपको मिल जाएगा। अगर रिक्वायर्ड है, नहीं है तो अननेसेसरी मत लेना, बट ये हर साल एक बार आती है, सो बी अवेयर कौन सा आप ले रहे हो। ब्लैक फ्राइडे सेल 18 आवर्स के बाद ओपन हो जाएगी। तो रिमेंबर, कल है आपका फ्राइडे, टाइमिंग थोड़ा सा अलग रहता है वहाँ पे। सो ब्लैक फ्राइडे सेल इज़ ऑन टुमारो, फ्रॉम टुमारो, 18 आवर्स लेफ्ट approximately. HSBC overhauls trading business in bid to become a debt powerhouse. नेचुरल गैस देखो क्लोज तो नहीं आया, कैंडल क्लोज ही होने वाली है, 1 मिनट और रह गया। 401.8 के नीचे क्लोजिंग होनी चाहिए थी, नहीं हुई क्लोजिंग, तो अभी भी होल्ड करके बैठा हुआ है, बट अगेन लेवल टू वॉच। क्लोजिंग अगर आ जाती है तो फिर कोई नया ट्रेड बनेगा नहीं यहाँ पर, फिर वेट करेंगे किसी एक साइड प्राइस के निकलने के लिए। तो नीचे ही आ रहा है, लास्ट 30 सेकेंड्स क्लोजिंग ही देगा क्या? नहीं है। 7 PM पे डेटा भी है, ध्यान रखना। 50 seconds। कि क्लोजिंग आ गई क्लोजिंग। ठीक है, डेटा आने वाला है, नेचुरल गैस में क्लोजिंग आ गई है। 401.8 के नीचे क्लोजिंग डन। ठीक है, फिर से रेंज बना दी है इसने, ऊपर एक रेजिस्टेंस बन गया है, अभी नीचे सपोर्ट है, दोबारा एंट्री मत करना अब इसमें, डोंट एंटर अगेन। सपोर्ट अभी भी है, ब्रेक नहीं हुआ है सपोर्ट, बट ऊपर भी रेजिस्टेंस है। अब हम वेट करेंगे फिर से कि प्राइस अब किसी एक साइड पे वापस ब्रेक करे नीचे, या तो अब क्लोजिंग दे। ठीक है, ओके, श्योर। या तो अब नीचे क्लोजिंग दे 398.5 के नीचे 15 मिनट में, या फिर ऊपर क्लोजिंग करे 405.7 के। अगेन रेंज बाउंड हो गया है, डोंट एंटर अगेन इन नेचुरल गैस स्पेशली फॉर बाइंग। सेल भी नहीं कर सकते इवन दो रेजिस्टेंस बन गया है, बट अभी सपोर्ट ब्रेक नहीं हुआ है। ऐसा ना हो कि फिर से सपोर्ट लेके ऊपर जाए और फिर रेजिस्टेंस ब्रेक करे। तो एक साइड अब फिर से ब्रेक होने दो, साइडवेज हो गया वापस। देखोगे डेटा रिलीज हो गए हैं, एवरेज आर्ली अर्निंग पहले 0.3% थी, आई है 0.2%। नॉन फॉर्म एम्प्लॉयमेंट चेंज का डेटा, ओके, 4 डेटा थे, 4 में से 3 डेटा पॉजिटिव हैं, 4 डेटा नेगेटिव हैं डॉलर के लिए, मतलब पॉजिटिव फॉर गोल्ड एंड सिल्वर। एक डेटा पॉजिटिव है डॉलर के लिए, मतलब नेगेटिव फॉर बेरिस फॉर गोल्ड एंड सिल्वर। तो 4 में से 3 डेटा पॉजिटिव फॉर गोल्ड एंड सिल्वर, एक डेटा नेगेटिव फॉर गोल्ड एंड सिल्वर। एक ये डेटा और था, अभी शायद रिलीज नहीं हो रहा है, टेंटेटिव लिखा हुआ है, आया नहीं है अनएम्प्लॉयमेंट क्लेम्स। नाउ अब सीधा 8 बजे यूएस मार्केट की ओपनिंग, देन एग्जिस्टिंग होम सेल्स का डेटा है, ध्यान रखना यूएस का ही। ठीक। रेंज ब्रेक होने दो। ये लगता है नीचे की साइड ब्रेक करेगा, रेंज क्लोजिंग देता है तो देखते हैं। हाँ, इंटैक्ट है। न्यूज़ तो आ गई ऑलरेडी, डेटा आना था, डेटा रिलीज हो गया है, अब सीधा इन्वेंट्री है और कोई डेटा तो नहीं है। 7 PM पे डेटा था, दैट इज ऑलरेडी रिलीज नाउ। नेचुरल गैस रेंज ब्रेक कर रहा है शायद। अगर ये डाउन साइड पे रेंज ब्रेक करेगा, दो पॉसिबिलिटी रहेंगी, फिर या तो प्राइस कंटिन्यूसली गिर सकता है, नीचे गिरता है तो फिर नेक्स्ट सपोर्ट लोअर एंड पे लगा रखा है, क्लोजिंग आनी चाहिए, लेकिन ऐसा ना हो विग बना के चला जाए ऊपर। अगर ब्रेक कर देता है, दूसरी पॉसिबिलिटी कि यहाँ से पुल बैक आए, पुल बैक आता है तो फिर ऊपर का जो रेजिस्टेंस जोन अभी है बने हैं, वहाँ से वापस सेल करेंगे। क्रूड ऑयल में भी यहाँ पर एक बाइंग का प्लान रहेगा, क्रूड ऑयल में वापस से नहीं हो, ठीक है चलेगा। ऊपर आया नहीं है एग्जैक्टली वो लेवल पे, ठीक है अभी भी क्रूड ऑयल। एक सेकेंड, ऊपर के लेवल पे आया नहीं है एग्जैक्टली। नेचुरल गैस क्लोजिंग दे रही है, वेट करते हैं 4 मिनट। अगर ये क्लोजिंग आ जाती है 398.5 के नीचे तो नीचे सपोर्ट ब्रेक मान लिया जाएगा। ये जो सपोर्ट यहाँ पर इंटैक्ट है, उस केस में जैसा मैंने बताया दो पॉसिबिलिटी, या तो डायरेक्टली गिर सकता है प्राइस, उसमें कुछ कर नहीं पाएंगे, पुल बैक आएगा तो सेल कर देंगे ऊपर रेजिस्टेंस जो बना है। क्लोजिंग का वेट कर लेते हैं, 3 मिनट और हैं, 4 मिनट और हैं, सॉरी। हाँ ठीक है। वन मिनट। ओके देखो, कैंडल हो गई क्लोज नेचुरल गैस में, नीचे जो सपोर्ट था उसके नीचे क्लोज हो गई है, एग्जैक्टली हो गई है। ठीक है, कैंडल क्लोज हो गई है तो इट इज़ अ ब्रेक डाउन। ऊपर जो ब्लैक कलर का लेवल लगा है, नाउ इट इज़ अ रेजिस्टेंस, एक प्योर रेजिस्टेंस बन गया है ये अब। ठीक है, यहाँ से अब वापस हम सेलिंग ही प्लान करेंगे। दो पॉसिबिलिटी है, हो सकता है डायरेक्टली गिरता रहे, बट उसमें अब यहाँ एंट्री नहीं करेंगे, असर बड़ा हो जाएगा। या फिर अगर हल्का सा पुल बैक आता है अप साइड की ओर तो यहाँ से एक सेलिंग का प्लान बनेगा वापस। तो नीचे का सपोर्ट ब्रेक हो गया, अब नीचे सपोर्ट किसी काम का नहीं है। मूव कर सकते हैं। नीचे का लेवल क्या है, नीचे का लेवल लगाया हुआ है 389 390। ठीक है, इसमें वापस सेल कर सकते हैं नेचुरल गैस में, ब्रेक डाउन तो हो चुका है नीचे का लेवल, यू कैन सेल फ्रॉम हेयर। एक्सपेक्टेड रहेगा लेवल वही 389 390 के अराउंड, 390 to 391। सीधा यूएस मार्केट ही ओपन होगा 8 बजे, ध्यान रखना। एंड नेचुरल गैस की इन्वेंट्री 8:30 पर आपका एग्जिस्टिंग होम सेल्स का डेटा, फिर 9 बजे नेचुरल गैस की इन्वेंट्री, और कोई डेटा नहीं है अब।
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Kara at Moscow, and we have breaking economic news crossing the Bloomberg. It should have come out a month and a half ago, but the September jobs report is now out following the government shutdown. Bloomberg's Michael McKee has the numbers.
119,000 jobs during the month of September, better than the double, basically, the forecast of 51,000. So it turns out to be a pretty good number for the month, and the unemployment rate comes in higher, 4.4%. So an argument on both sides of the employment mandate there.
And as Bloomberg's Michael McKee, hourly earnings rose 0.2% from the prior month. The September jobs report was originally due out October 3rd. It was the first major missed data point in the government shutdown. But because data had already largely been collected by the time the shutdown began on October 1st, the report is among the first to be published following the reopening. Global stocks, meanwhile, are rising after a robust revenue forecast from NVIDIA helped to dispel fears of a potential bubble in the artificial intelligence industry that had shaken markets for weeks. NVIDIA delivered a surprisingly strong revenue forecast. The world's most valuable company expects sales of about $65 billion in the January quarter, roughly $3 billion more than analysts predicted. We get more with Bloomberg's Kriti Gupta.
NVIDIA has quite literally put their money where their mouth is. And that was the concern that you saw earlier in the week, where so much of the tech jitters were driving this global equity sell-off. You saw it in the Asian session, you saw it in the European session, and certainly you saw it in the U.S. session, where the likes of NVIDIA and NVIDIA itself were actually driving the index lower. This idea that everyone was investing in everybody else, and maybe these big promises and this big guidance would ultimately not be delivered on. Jensen Huang really put a stop to that kind of commentary in terms of yesterday's earnings report.
And that's Bloomberg's Kriti Gupta. NVIDIA also said that a $500 billion revenue bonanza due in coming quarters may be even bigger than anticipated. Walmart increased its outlook for sales in the full year, a sign the world's biggest retailer is winning over price-sensitive shoppers while digesting costs it expects to rise in the coming months. It also said it's grabbing more customers through its e-commerce marketplace. And David Bellinger is a senior equity analyst at Mizuho.
Look, this was a really solid quarter. So you had same-store sales growth in the U.S. up 4.5%. Some of the buy-side numbers were maybe closer to 5, so it didn't hit the highest of expectations, but they did raise the guidance. You had this nice e-commerce growth acceleration as well. The U.S. e-commerce growth for Walmart's been growing around 20%. This quarter was 28, so a nice step up.
And that's Mizuho's David Bellinger, who is a guest on Bloomberg Surveillance. And in a sign of its focus on tech, Walmart plans to shift its listing to the NASDAQ starting December 9th. Walmart shares up 1% this morning. After months spent trying to avoid the issue, President Trump has signed the bill to force the Justice Department to release its Jeffrey Epstein files. Congress passed the bill unanimously after President Trump abruptly reversed his position on the measure, saying it's time to move on. Brown University political science professor Wendy Schiller says whether the president will be able to move on depends on how the next few weeks play out.
Now that, the files, are supposed to be released, they can be redacted. And they can be heavily redacted. So it's really going to depend on the implementation and how justice does it and what they redact. And if there's too much redacted, it just keeps this alive.
And that's Brown University's Wendy Schiller, who is a guest on Bloomberg Daybreak. Tomorrow, President Trump meets for the first time with New York City Mayor-elect Zohran Mamdani. The president has repeatedly blasted the Democratic Socialist incoming mayor as a communist and has threatened to withhold federal funds from the city for electing him. Mamdani told the cable network MS Now he wants to speak frankly with the president about standing up for New Yorkers and their struggles to afford the city. We get more with Bloomberg's Tyler Kendall at the White House.
The White House has felt under pressure when it comes to affordability, and we know that not all of their plans are landing well within the Republican Party. We have new reporting out from Bloomberg News that some Senate Republicans are pushing back on the administration's plans to release tariff rebate checks. Of course, this has been one of those proposals floated to get more money into consumers' pockets amid those slew of losses that Republicans saw earlier this month when it came to the elections across the country. But at this point, those Republicans are saying that they would rather have that that money be put towards paying down the deficit instead of going to those checks.
And that's Bloomberg's Tyler Kendall in Washington. Federal agents have now arrested more than 250 people during an immigration crackdown in North Carolina centered around Charlotte, the state's largest city. Those totals released yesterday by the U.S. Department of Homeland Security are about double the arrest figures announced earlier this week. Abbott Laboratories agreed to acquire cancer screening company Exact Sciences. It's a deal with a total equity value of about $21 billion. And Verizon has announced wide-ranging layoffs that will shrink the company by as much as 20% of its non-union workforce. It's a major step in a turnaround plan. And a rally in stocks powering ahead as optimism over prospects for the artificial intelligence technology that has fueled the bull market overshadows waning expectations for a Federal Reserve rate cut. S&P futures up 1.4%. Dow futures up 0.8%. NASDAQ futures up 1.9%. 10-year Treasury yield at 4.11%. And NVIDIA is up almost 5%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets podcast from Goldman Sachs. Listen now.
This is Caroline Hyde.
And I'm Ed Ludlow, inviting you to join us for Bloomberg Tech, a daily podcast focusing exclusively on technology, innovation, and the future of business.
Every weekday, we bring you the top headlines from the world's biggest tech companies.
From finance to defense, AI to entertainment, and from startups to the Magnificent Seven.
We highlight the latest stories of the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets.
We do this all every weekday, then bring you the most important conversations and analysis in our podcast.
Search for Bloomberg Tech on YouTube, Apple, Spotify, or anywhere else you listen.
Join us every afternoon on your commute home and stay ahead of the tech news cycle.
That's the Bloomberg Tech Podcast. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Subscribe today, wherever you get your podcasts.
कहीं सीलन की बूंदें आपके घर में भी संगीत बनके ना गूंजे, इसीलिए घर बनाएं ACC गोल्ड वाटर शील्ड सीमेंट के साथ।
We don't see the robots taking over the jobs from humans. We try to make the job of the humans easier and to have more.
You know, I think NVIDIA is not the company that we're worried about, right? The concern is, are we seeing ROI on CapEx? And NVIDIA is the one getting the CapEx. But if you look at the SPLC on Bloomberg, that's the supply chain function that's really fantastic. Right now, you've got a 3-month price change in there. But if you put in a 5-day price change, you would see all red, right? Microsoft is down over the past 5 days. Meta's down. Supermicro's down. Amazon's down. Alphabet's down. I mean, the whole tech sector is down over the past 5 days. So it's not like buy on the rumor, sell on the news is terribly likely to happen today because there hasn't been a lot of buying into this report.
There hasn't. $1.8 trillion has come out of the NASDAQ since the end of October. $500 billion of that is down to NVIDIA. And yes, NVIDIA is going to get the wall of money in this fiscal capital expenditure money circle that we keep seeing. But will that continue?
I like that.
Look,
it is a money circle.
I mean, look at what Anthropic announced yesterday. More equity coming from $10 billion from NVIDIA, $5 billion coming from Microsoft, and in return, they're going to use GPUs and innovations from NVIDIA.
Which, by the way, the market didn't rally off the back of that.
No,
In the past, when we'd hear stuff like that, it would rally.
Yeah.
So it feels like something has changed, at least with the circularity of it.
I think people aren't loving that. They're not applauding it anymore. Instead, they're worrying about it. Over in China, there's yet another new DeepSeek. Moonshot AI a couple of weeks ago released a new LLM that is beating out all of the competition. How much did it cost to train? Reports are about $5 million. Is there a question that innovation will happen, that inference isn't going to be so necessary for the latest Rubin or for the latest Blackwell? Can we do more with less? And I think that's what he's really got to prove out once again. He can continue to innovate that makes his chips so necessary. It doesn't matter if Amazon's making their own, if Meta's making their own, if OpenAI is making their own with Broadcom.
All right, definitely excited to watch your program today. Caroline Hyde anchors Bloomberg Tech. That kicks off at 11. By the way, her co-anchor, Ed Ludlow, is going to be sitting down with Jensen Huang after the earnings. So tonight at 6:30 p.m. Wall Street time, if you're not out to dinner yet, go ahead and tune in. And if you are, you can see it on Bloomberg.com. And, of course, you can listen to it on Bloomberg.radio. This is really an exclusive interview because we'll be the only news outlet talking to the NVIDIA CEO after earnings tonight. Turning to retail, because we have a ton of earnings coming in. September retail sales report. That report has been rescheduled for the 25th of November. Maybe that's what Michael Burry was talking about. This morning, though, we get results from Target. Target narrowed its profit forecast, as we were talking about. Discounts and slowing demand weighing on earnings. Bloomberg retail reporter Emily Cohn joins us now. So what are we learning about the consumer that we're already a little bit worried about, Emily?
Yeah, I mean, Target is seeing a consumer that is choppy in its spending, not leaning into the discretionary things that Target is known for. The retailer trimmed its forecast again, signaling that its rebound is going to take a bit more time. And despite an exciting announcement about a partnership with OpenAI, which boosted Walmart's shares, Target is down this morning on its trimmed forecast for the year.
How does this set us up for Walmart tomorrow?
So Walmart is in a different position. Walmart has really leaned into its value orientation. It's brought in higher income shoppers who are looking for a deal. Its grocery assortment is bringing in people who otherwise might have shopped at a more expensive grocer during these times. So we're looking at Walmart. TJ Maxx was also another interesting one this morning. I think TJ Maxx is pulling in that discretionary shopper who's looking for value, looking for a deal, looking for fun.
Is it fun, TJ Maxx? Do you like TJ Maxx? Because I've heard from a lot of people on our staff. You know, our executive producer, Ann Torres, she says when she has had a bad day, you know, rather than a glass of wine to unwind, she'll go to TJ Maxx.
Yeah, and I think that actually speaks to part of Target's problem. Look, like, you don't go to TJ Maxx because you need stuff from TJ Maxx. You go to TJ Maxx for fun, for discretionary things, for things that you wouldn't otherwise.
Do that at Target, though? Like, you go because you're like, I need to go get some more toilet paper, and then you're like, oh, cool, like a little running top or something.
There's no hunt, right?
That
I think
is true.
the
There's
idea
no
is
hunt.
that you get to hunt through. But, you know, Romaine Bostick says it's just too messy for him.
Yeah, I get that. Look, if you are a ball of anxiety like I am, sometimes that's very difficult to bargain hunt.
I think that's exactly Target's problem. I think that used to be what boosted Target. That used to be what they were known for, and they've lost that. And now they're trying to bring it back.
More bargain hunting. Emily, thank you so much for joining us. That's
Thank
Bloomberg's
you.
Emily Cohn. Now, in other retailer reports, Lowe's shares are climbing. They did, though, trim their outlook, but they reported strong online sales, growing demand for professional contractors, a stark difference from rival Home Depot, who had earnings yesterday. Bloomberg Intelligence home builder analyst Drew Redding joins us for more. Drew, how much of this is just the fact that Lowe's was down 11% heading into this earnings this year, that it was down yesterday off the back of Home Depot, so expectations were incredibly low?
Hi, Danny. I think you make a good point, and that's certainly part of it. The bar had been lower coming into the quarter. So I think this was really, you could characterize this as better than feared results, particularly in light of what we saw from Home Depot. As you alluded to, they did trim their full-year same-store sales guidance. Now they're looking for flat comp sales versus flat to up 1%. So that would imply that 4Q is relatively flattish. First consensus was looking for about a 1% gain. So big picture, I think that Lowe's is still facing some of the same challenges that Home Depot is, whether it's, challenges among the consumer and housing in particular, which just hasn't reaccelerated despite the pullback in mortgage rates.
I wonder about the immigration problem that has hit Home Depot a little bit harder, right? ICE likes to go to HD parking lots to round people up, but also, they must be losing customers because of that. Is that affecting Lowe's at all?
This isn't something that we've heard too much of. As you alluded to, Home Depot does get a larger share of their business from professional contractors at about 50% compared to roughly 30% for Lowe's. It is in an area of the business that they're expanding. But to your point, we haven't really heard of any direct impact to sales, from immigration actions. But I think that it's something that both retailers will probably need to address in the near future.
All right, Drew, thanks very much for joining us. Drew Redding talking to us about Lowe's, which is where I would go if I had a bad day, just to chill out. Check on futures here. We're looking at gains after 4 days of losses. It's actually been the worst month since March. And we're only down about 3%. It's the worst November since the great financial crisis.
That is a statistic. But that's because November is usually good, right?
That's exactly
doesn't mean
right.
that it's just like
That's exactly
so
right.
bad.
Yeah, November is normally a banner month.
Right. Speaking about nerves in markets, we know private credit has been one of them that's been percolating around. Some recent breaking news from Blue Owl, the credit giant. It has called off the merger of its two BDCs. Those were two private credit funds. One was publicly listed, one was not publicly listed. And the idea behind that was they wanted to combine them, would give more liquidity. But if you were in the non-publicly listed one, you wouldn't be able to have any redemptions. And Matt, that caused a lot of fear. Why would Blue Owl not let you have redemptions? Of course, for them, they said it's because they had to combine the two. But that caused a sell-off. And again, today, just announcing that they have called off the merger of these two BDCs.
Yeah, I think this is a very interesting story about kind of the tail that wags the dog, right? The market is telling Blue Owl what it can and can't do right now, and that is a sign of stress. I just want to point out, I've gone through the seasonality chart for the S&P 500. 29 years is as far back as I can go, but if you look at the average over that time period, November is typically the very best of all 12 months.
Better than December, even though the Santa rally and all that.
Yes. December over the last 29 years averages a gain of 0.9%, whereas November averages a gain of 2.6%.
Okay, so maybe this will be a November to forget then. We won't get that rally. Elsewhere, Matt, the U.S.-Saudi Investment Forum is taking place in Washington, D.C. Bloomberg's Anne-Marie Hordern is sitting down with the CEOs of ACWA Power, Aramco, and Chevron. Let's listen in.
Positioning itself, the real energy transition for Saudi Arabia, but for the world. And Saudi Arabia is going to be a major player, in this regard. And we have many partners. We are very proud with our partnership also with GE. GE is really working with us now more than 20 years. And I have to say that with their innovation and their development, they have been really a great partner that we are making. Baker Hughes, we are working with them now in using their technology to produce electricity from green hydrogen for the AI. And I'm sure that everybody knows that the AI in the state and everywhere else, it's going to be the new energy change. Because we are talking about normal growth in the world, 1%, 2% of electricity. Today, we are looking at 10%, maybe more than 10% growth. For how you could make this electricity, Saudi Arabia is the only country, I have to say, they have been very well prepared for this infrastructure of electricity, of the grid, of the production, to be the host of the AI. And Saudi Arabia will be the export, really, of data and will be the hub of data. Why? Because Saudi Arabia is positioning itself. It's really the host of the energy, but this energy, it become a key component. And I'm sure you know 60% of that cost of the AI compute is going to be energy. And who could compete today? And thanks to His Royal Highness the Crown Prince yesterday and our Prime Minister, President Trump, this agreement, it will be unlocking this huge opportunity of Saudi Arabia is going to be connecting the world on data. Is it Africa? Is it Asia? Is it Europe? Is it the state? Saudi Arabia will be the hub of energy, but the hub of data and AI connectivity to the world. That's the reason this partnership with the United States of America, we cannot find any better partnership, trusted partnership in this journey, but we complement each other. And we are not here to create any competition at all, directly or indirectly. Is it in the energy or in the AI? We are here to complement this partnership and make this partnership to improve quality of life of people in the world, to have a better life, but also to have a great, development of young youth. Because Saudi Arabia, as our Crown Prince always said it, in Saudi Arabia we not have the oil. With due respect, he will get only upset from me. But we have the young youth. This is the real energy of the world in Saudi Arabia. Without this young youth, we will not be where we are today, and we cannot deliver our ambitions and our strategy of the future.
I believe 60% of Saudi Arabia's population.
That's Bloomberg's Anne-Marie Hordern speaking with energy CEOs at the U.S.-Saudi Investment Forum in Washington. You can continue to watch that conversation and the whole event at LiveGo on your terminal. Meanwhile, at the Bloomberg New Economy Forum, Apollo's Mark Rowan downplayed Jamie Dimon's concerns that there are cockroaches in credit markets, but he did warn of late cycle dynamics.
Credit stats are actually improving rather than declining. That does not mean we will not have late cycle banking behavior, because there are good banks and bad banks, and good insurance companies and bad insurance companies, and good asset managers and bad asset managers. But there's nothing that I see that is systemic.
That was Apollo's Mark Rowan speaking at the Bloomberg New Economy Forum. Now, credit markets are far from a panic, but there is one corner that caution appears to be seeping in. At least for the public debt market, spreads have started to widen on the debts on the AI-linked giants, from Oracle to Meta. So what's happening in private markets? I'm pleased to say joining us now is the private credit and private markets powerhouse Fortress co-CEOs Jack Newmark and Drew McKnight. Thank you both so much for joining this morning. And I wanted to start on this topic of AI because, of course, you are participating in the energy of AI, in some of the real estate. And Drew, of course, you're a UVA alumni, which makes you a genius in all things. So, Drew, I want to know, with some of the fear in AI creeping into public debt markets, is that risk accurately reflected in private markets?
That's a great question. I think if you look at just the sheer amount of capital that AI that was required for AI, it's consuming massive amounts of capital. And so I think what you're seeing in the credit spreads of some of the Metas and Oracles of the world are just a reflection of the amount of capital that's going to be consumed. I think, we're big believers in AI. You can be big believers in AI. You can also question what the investment returns that are going to be yielded through some of these infrastructure investments, because just the sheer amount of capital and, will the revenues produce the amount of capital? A lot of folks like to point to the internet bubble in the late 90s and early 2000s. Obviously, the internet was a wild success, but the amount of capital that was required for infrastructure didn't match the revenues in the early days. And I think what you're starting to see reflected in some of the credit spreads is just that question around whether the revenues are going to be there to support the amount of capital that's been spent and the amount of capital that's going to continue to need to be spent as the upgrade cycle flows through.
Jack, let me bring you in on this, because a lot of your peers have been inking monster deals. Again, yours has been more on the energy side and some of the real estate too, but we've seen some of your peers tens of billions of dollars financing packages with Meta, with other big giants like Intel. Is there a sense that deployment has gone too far, to Drew's point, that sometimes maybe the revenue won't fully reflect the capital expenditure that's being done?
Yeah, I think from our perspective, we find it tough to predict, what the future is going to look like. As Drew said, what's the use case for data centers? How much capital needs to go into them in 5 to 10 years' time? So I think from our perspective, we've been focused on investing in, the companies that are providing services around the AI space. We made an investment in a company that owns 30 mobile turbines. Those mobile turbines are used to provide temporary power to data centers. That's a hard asset that we can get our hands around. We have the ability to reposition those assets to other use cases that are outside of AI. So I think from our perspective, that's a better way for us to play this investment than compete with the firms that are focused on writing these multi-billion-dollar checks into the data center space.
Well, Jack, just on that, is you don't want to compete because of the size of it, or there's just too much risk in there?
Well, I think it's a combination from our perspective. Those are massive checks. And so I think you really have to have a lot of conviction. And to compete, you have to have a lot of capital. And so, we like to focus on areas where we can have an edge. And I don't think we necessarily have an edge to compete in these big data center projects. And again, I also think when we look out at the spectrum, it's tougher for us to have the conviction that, we know what these assets are going to be worth 5 or 10 years in the future. And so we'd rather invest in other types of services or assets that we have a better picture on the long-term visibility of values.
Well, let's talk about where that edge is. And Drew, Fortress has a history of being very active in the regional banking space. In the summer, you gave an interview where you said there's going to be an opportunity set in private credit because of the gaps that exist with small and regional banks. I wonder, does that sort of hint at a dislocation that still exists within the regional banks, that there are still some cracks there that maybe the rest of this market doesn't fully appreciate?
Sure. Look, I think if you look at the growth in private credit over the past 10 years, a big part of that growth hasn't necessarily been the overall credit pie growing. It's been what we now call private credit and capital from private equity firms filling the void that both investment banks post-financial crisis and regional banks have left. As you've seen regional banks pull back, I think we've seen that opportunity really since 2023 when you saw the regional banks pull back post-Silicon Valley, Signature Bank, First Republic. You saw a lot of banks reassess their liquidity requirements, reassess their duration, and that's where we've seen a big opportunity in private credit, and for us specifically in the asset-based credit space, where we've been quite active. We've had a business going back to 2002, but really in the past, call it 2 years, we've really seen that opportunity set expand, and that opportunity set has expanded not by us doing anything different, but by regional banks deciding they want to pull back or need to pull back because of some of their own liquidity issues around the fractional banking system.
Well, Drew, one of the reasons I ask, and I understand that, but one of the reasons I ask is also because we were just hearing from Mark Rowan speaking to Bloomberg about these late cycle dynamics where they're, in his words, good banks and bad banks. There have been some very high-profile blow-ups when it comes to things like Tricolor and other investments. Again, that's been both in private credit and the banking system. You have so much experience in some more of these distressed assets. Drew, for your has the list of stressed assets, the watch list, has it been ticking up recently?
Look, I think both Mark and Jamie Dimon can both be right. I do think credit events like Tricolor and First Brands are showing signs of some folks and some competitors that are probably getting out ahead of themselves and aren't doing the proper amount of diligence in researching their investments and structuring their investments. And I think, just like Mark said, there's going to be good asset managers and bad asset managers. One of the things that we've said for a long time in the credit space and the private credit space is it's going to be hard to tell who's doing a good job when defaults are very low, right? Because the reality is in credit, if you get paid your coupon, you're going to perform as expected. And so I think if you look back, and really private credit as a distinct asset class came about post-financial crisis, we've been investing in private credit going back all the way to 2002 when we founded the credit business at Fortress. But it's really hard to differentiate yourself when there's no defaults. I think when you start to have some defaults, you start to have just a normal credit cycle, a normal investment cycle, economic cycle, you're going to start to see variance in returns. And from our perspective, we've always invested deeply in the asset management part of the business, which means taking care of those assets if you start to have the watch list. And so as we look forward, I do think you're likely to have a little more volatility, right? The economy's, I think there's a lot more uncertainty around the economy. There's a lot more uncertainty around interest rates, geopolitics. That's going to lead to potential defaults. The good part about credit, if you structure it right, is you don't have to lose money if you have a default, if you've got a well-structured loan. And so from our perspective, we actually believe this is an opportunity for us to really outperform and start to differentiate from a performance perspective.
Jack, I'd love your take on this because you have a career history in focusing on bankruptcy, restructuring, litigation. Is now the time to focus in and brush up on all the restructuring skills needed?
Well, I think the restructuring world has changed a lot. When you go back and you look at the world of distressed debt that some of us grew up in the aughts and great financial crisis, that was a world in which, you had a bunch of groups of lenders trying to work out restructurings inside of the context of the bankruptcy courts. I think in today's world, you're seeing a lot more emphasis on out-of-court restructurings and liability management exercises. And so I think when you look at what the default rates actually are, there's a question of what you're including in those default rate calculations.
Yeah.
But I agree with Drew. I think that, ultimately asset management here is going to be a key differentiator. Firms that are able to take agent positions or control the loans that they're involved in, that are able to have financial covenants that give them early warning signs and the ability to negotiate, amendments early in the process are going to be the ones that are best positioned. And to the extent you're inside of a bankruptcy, I think it's
Jack,
going to be focused on your
Drew, just because we only have a minute and we have to address this. The fact that if we had been doing this conversation a month and a half ago, it would have looked very differently with the tragic passing of your colleague and former co-CEO, Josh Pack. Drew, again, just a minute here, but I would love to get a feeling from you, just the legacy he leaves behind.
Look, Josh and I had worked together since I joined Fortress in 2004. The first investment I made in Fortress was alongside Josh in the bank debt of Krispy Kreme donuts. I think one of the things as we've had to take a step back and reflect on just what Josh meant, not just to the firm, but to each of us personally, it's actually been, I think we've all drawn some strength and some inspiration around what we want to do together to help realize that legacy. Josh, what I said to folks is I know a few things. Josh loved his family and he loved Fortress. And so the best thing we can do is do our best for his family, but also do our best for Fortress to help build that in his legacy and his vision.
Thank you both so much. That is Jack Newman and Drew McKnight of Fortress.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
We are moments away from the start of trading on NVIDIA Day. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures. Really little changed here after 4 days of drops on the S&P. NASDAQ futures also not moving much, nor are Russell futures. We've got, quite fittingly, an AI infrastructure acquisition SPAC ringing the opening bell on the NYSE. And this I think really focuses the mind on the question the market is asking. Is all of this CapEx going to be rewarded with return on investment? You got big brothers, big sisters ringing the bell down at the NASDAQ market site. Fun day, fun activity for them, and a really great charity to participate in or to give to. Danny, in terms of the stocks that we're watching, I guess one stands out front and center.
Yeah, and it's going to stand out throughout the day. If it ends the post-market session this way, I mean, it will be impossible to know. But NVIDIA at the moment is up 1.4%. I mean, look, the direction of this monster stock will dictate the direction of the entire market when it reports after the bell today. Options imply a move of 7% in either direction, which is about $300 billion in market cap. So we could add that. We could take away from that. But from its peak in October, Matt, NVIDIA is already down 12.5%.
All right, we are also focused, though obviously less so, on retailers. Target is the latest retailer to narrow its profit forecast as consumers get picky. Target cited discounts as well as softer demand for the revisions. Those shares are down 2.4%, but NVIDIA is obviously the most important company to watch in this market, the biggest company in the history of the universe. And joining us from San Francisco is a man who knows this company well, Bloomberg Tech co-host Ed Ludlow. Ed, you're going to sit down with Jensen Huang for an exclusive interview after the earnings this evening. What do we need to get set up for the results?
Yeah, there are very high expectations. You know, at a minimum for NVIDIA to move the needle, they'd probably have to far exceed consensus, which is more than 50% revenue growth, more than 50% net income growth. And then a lot of focus will be put on the forecast for the fiscal fourth quarter. But, you know, the calculus for NVIDIA is quite simple. You know, 40% of their customer base is the hyperscalers plus Meta. And collectively, they are forecasting CapEx growth beyond 30%. And it simply comes down to, for many investors and the industry writ large, is that CapEx forecast right? And does Jensen Huang signal any sense that actually they won't go through with it? Loads of questions: depreciation of older chips, the circular financing thing, and bigger picture, longer term, electricity. Is it there or is it not? But it's a very high bar, and there is, as you guys know, increasing skepticism around the revenue generation of those that use GPUs from NVIDIA to train models and the software side, but also, you know, valuations right now more broadly.
Ed, and you're, of course, going to be sitting down with the man himself, Jensen Huang, at 6:30 tonight. You mentioned some of the big questions outstanding for the company itself. What is your top priority in your conversation with Jensen Huang? What will you be asking the man?
Yeah, I think that depreciation is very top of mind for a lot of people at the moment. But long story short, NVIDIA commits every year to having a brand new generation of GPU. And there is a high concentration of customers that have millions and millions of now obsolete GPUs running in data centers that are pending being swapped out for the latest cutting-edge chip. And there are two ways of looking at it. You can either say, well, those older chips are running at 100% utilization, and so just swapping them out is a good thing. But you then have to look at the balance sheet of those companies that bought the older chips and how they are working that out mathematically if they are to be depreciated. And then, yeah, I kind of mentioned it before, but Jensen Huang really has a lot of confidence about the staying power of this infrastructure build-out. But he only controls one side of the supply chain. There are lots of questions about whether they see material ability for this country, in particular the United States, to supply electricity or the energy that's needed. So that will be a big part of the conversation.
All right, Ed, great to get some time with you, and really look forward to both your program at 11 a.m. Ed, of course, co-hosts Bloomberg Tech with Caroline Hyde, and he will, as I said, sit down exclusively with the CEO of NVIDIA, Jensen Huang, live at 6:30 p.m. Wall Street time. So tune in for that. You can hear it on Bloomberg Radio. You can watch it on Bloomberg.com. Business leaders are raising red flags around tech valuations as investors better understand the economics around AI. Here's Algebra's CEO, Davide Serra.
If we're not going to find $2 trillion of revenue to justify the AI revolution, which I think is impossible by 2030, given the level of public debt around the world and where taxes need to go to pay for this debt, the likelihood is we're going to have a significant correction.
Joining us around the desk is Morgan Stanley Senior Portfolio Manager Andrew Sliman. He sees the current volatility as classic late cycle behavior. So, first of all, it's great to have you here in the studio.
Thank you.
We're typically down the line with you. So, when you say late cycle volatility, that makes me think we're nearing the end of possibly a bubble. Is that how you see it as well?
Yeah, the question is, the late cycle can last 4 or 5 years, or it can last like in 2021 for 1 year. And so I think I would argue that all this skepticism about this big technological revolution we're having is good news, because it's keeping the valuation, it's keeping the bubble down in these stocks. Now, off the low of April, what I saw was the best thing to invest in were not the hyperscalers, it was the money-losing tech stocks. That did the best until about 3 weeks ago, and that's kind of started to deflate. So I would argue that this, as I said before, this level of skepticism, it's good news. It's keeping too much, it's keeping the valuation down.
There's like a good meme about this of someone with a bloodied up shirt and like the strategist is saying, no, the correction's good for you. You're feeling pain, but it's a healthy thing.
Well, that's true, because think about it. In 2021, the bubble grew so quickly, so fast that when it burst and those SPAC meme stocks came down a lot, it really hurt the market a lot. So I'd rather keep it down.
So we have seen 4 of the Mag 7 stocks underperform the S&P 500 this year, which I had to double check that when I saw it in Dan Curtis's note this morning. Do you buy those stocks?
Well, the stocks have underperformed, but the earnings haven't. They've all beaten. Right, so that means the valuations have come down. So if you liked them at the beginning of the year, you must really like them now because the valuation's lower, right? But I go back to if you listen to third quarter earnings report, what I heard these companies say is we can't keep up with demand. We can't keep up with demand. This is very different than the year 2000 when the demand for routers was slowing and the telecom companies were saying we've got a lot of dark fiber we're not going to turn on. Right? This is a very different environment. I think it's early cycle in the AI. It doesn't mean it's early cycle for investors. The market bottomed in 2022. We're 4th year of a bull market. It's late cycle.
Andrew, one of the things I do know that you are worried about, that you've been writing about, is the dynamics that are going to start early next year. When you have a Fed embarking on their cutting cycle, at the same time, we're going to get checks handed out and tax refunds from the one beautiful bill or tariff refunds, what have you. Stimmies
right.
For everybody.
Remember, 2021.
The Oprah economy, you get a check, you get a check. What is your concern about how that could play out?
Too much liquidity. And too much, didn't we learn that in 2021? Everyone got liquidity. What they did, they traded stocks. And so it inflated the bubble. And so I think if the Fed were actually to go slowly, I think one of the reasons why you've seen some of the deflation and some of this bubble come down in some of these very speculative stocks is the chance the Fed may not cut in December. I'm not a Fed expert, but I would argue that's good. That keeps it, keeps the, kind of the speculation down.
What do you like that's divorced from the whole AI trade? I mean, we're talking today about retail earnings because they're concerning, so I imagine that it's not that.
That ain't that.
Yeah. But is there, healthcare, I realize, for example, there's an AI play there, but it's a separate thing, and a lot of people are very bullish healthcare.
I'm not.
No.
I'm not, because I think it's very hard. You have to get 2 things right. They're really hard. One, you got to get the drug right, and then you have to get what happens politically in Washington, D.C. about pricing right. And I think that's very, very hard, someone that's been in this business a long time. I would say if you listen to banks, the banks all had great numbers. Follow the numbers. The banks blew out. Why? More capital to invest. I think that's the other really big opportunity. Could that be correlated? Well, maybe, but to me, the big banks and the loosening of capital, I think it's a great other story.
And look,
that's happening outside the U.S. also.
I don't want to. I'm going to ask this question. I don't mean to say that big banks are now an AI trade, but there is this feeling where there's a great story in the Bloomberg today that big banks are writing a lot of these AI checks for financing just because of their sheer size, they're allowed to do it. But it's funny because Matt asked, okay, what besides AI do you like? Is there not a concern that just so much is correlated right now, that it's like utilities is AI, infrastructure is
100%.
That it's even hard to
Correct.
Answer Matt's question because so many things are connected.
I have a very simple way you're going to find that out. Go back and look how your stock did the day DeepSeek came out. Because the day DeepSeek came out, some of those utilities, that were not sectorally in the technology area, they went down a lot. And some of those industrials went down a lot. So it's a great way to measure what truly your correlation. But I think you've nailed it. I think that's a big risk. Everyone thinks they're sectorially diversified, and they're not so much because they're really playing the AI trade. And I think emotionally, investors go, well, I missed the well-known trade, so now I'm going to find something tangential. But what we learned in DeepSeek is they're all correlated.
Also, it is a great story by Hannah Levitt and co. on the banks, talking about how much they stepped up with to underwrite the acquisition of Skechers, $8 billion. Warner Brothers Discovery, that split $17.5 billion. Electric Arts, $20 billion, a check from JP Morgan alone for $20 billion. None of those are really AI.
No, it's true.
Right? So it's a play on the real economy.
And trading also. Capital has been freed up for more trading, and I think some of these big banks made better profits in trading.
So there's more capital freed up because of deregulation, right? More liquidity in the system. And that's going to play out at least for the rest of this administration's term.
Correct.
How else?
Stocks trade at 30% discounts to the S&P.
So how else do you play that? I mean, the money flooding in, because it's not great news for inflation, right?
Correct.
Yeah.
Goes back to the original. That's absolutely right. But I think it's the money center. I'm concerned the alternative. If you watch the alternative stocks, you mean the
alts, like private equity, private credit?
That index is not doing well.
Really poorly.
So is that a credit problem, or is that there's going to be more competition in your world? I think it's the latter.
Jamie Dimon would be very happy to hear you say that. Andrew, thank you so much for joining us this morning. Please come in again soon. That's Morgan Stanley's Andrew Sliman. All right, let's get a check on your equity market this morning. I guess we're all just bracing for NVIDIA earnings, but we are higher by 1/3% after consecutive days of declines. Breath is not good, though. Feels like it tends to be the case for these up days. 193 stocks up, 307 are down. NVIDIA is what's leading us higher, 2% higher after on track for a tough month. By the way, it's going to be the first time since ChatGPT was announced at the past 30 days heading into an earnings call that we've seen NVIDIA decline. That's according to Deutsche Bank. On the downside, it's other tech players, Amazon, Meta, Microsoft, Exxon. A bad day for energy today. If you look at what the sectors are doing, energy is faring the worst out of all of them. I promise you that will be coming up shortly, that we have energy doing poorly. In the meantime, Netflix, Berkshire, there we go. I knew it was there. Actually, it is apparently flipped.
Yes.
Actually, I don't think this is it, Matt, because it says we're currently down 0.8%. If we can get a little refresh there, and we're currently up on the stock market. So maybe don't believe anything you're currently looking at, and I will leave it there, Matt.
That's interesting.
Right, this isn't it, right? We're up currently.
Well, I'm looking. I got to do SPX L1 index GRR go.
Yeah.
And yeah, you're right. That's wrong.
Yeah.
Whatever you're looking at there is wrong.
Don't look at this. Don't look at that. Matt, take it away.
I don't think it was typed in correctly, because I do see energy as the biggest loser by far, gapping more than 2% down, and the big gainer, up more than 2%, is communication services, which is what we call the hyperscalers. We'll sort that out behind the scenes. When we come back, TMX Group is stepping up its U.S. Footprint with a new Manhattan office. We're talking about the Toronto Stock Exchange. CEO John McKenzie joins us next to talk about the expansion and whether prediction markets could be the next big frontier for exchanges. This is Bloomberg Open Interest.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Let's look at some top calls, the analyst action that we are following. First up, Molson Coors. They get downgraded at Wells Fargo, where the analyst says that the brewer is facing weak category trends and share losses. Meanwhile, rival Anheuser-Busch offers strong growth potential into 2026. Those shares down more than 1%. Next up, Jefferies, they upgrade DoorDash. They say the company's annual forecast has reset expectations. It had its biggest drop ever after it reported earnings earlier this month. They say that it still has room to invest and beat estimates. They cited faster growth in restaurant delivery and calls DoorDash strong execution underappreciated after the recent sell-off, that not helping shares this morning, down 2%. Finally, Wall Street is weighing in on Amer Sports after it raised guidance for the third time this year. Truist and Evercore ISI called the update a confidence boost following recent sentiment drag. Citi called them a standout retailer, and Nomura raised their rating to a buy because, Matt, everyone owns those Solomon shoes that they sell. Like all the West Village girlies are wearing their little hiking shoes every day out there in the wild.
Do they make Wilson tennis rackets also?
And yeah, the clothes. So okay, yeah, I support this company also.
Yeah, I thought you might use those on occasion.
Correct. You have called me out, actually.
Let's get to the Toronto Stock Exchange, planning deeper roots in the U.S. as we were talking about before the break. TMX Group just opened a new office here in Manhattan as part of a bigger push to grow its footprint beyond Canada. The CEO, John McKenzie, joins us at the table to talk about the company's growth. So, John, it's interesting at a time when there are growing divisions, at least in the capitals, between the U.S. and the Great White North. You're pushing further into the South.
I mean, we've been doing this for years, so we weren't going to stop just because there's any changes in administration. The Canadian and the U.S. capital markets, this are the most integrated markets in the world. And so for us to keep growing globally, U.S. is a natural point to that. And we've got ambition to keep growing the firm. We've been growing it on what we call our 2X, TM2X strategy. We've almost doubled the firm in the last 5 years. And that means really investing in core markets like the U.S. and Europe, because that's going to be where we're going to get the larger expansion. So we're now more than 50% of TMX is outside of Canada, even though we've got that strong Canadian footprint.
I believe the first ETFs in the world were in Toronto, right?
Invented on the Toronto Stock Exchange over 35 years ago.
Yeah.
By the way, I love in the video of your office, we saw some pretty cool snacks. I think that's important for opening up any office. So you're talking about this immense amount of opportunity in the U.S., but in some ways it's a double-edged sword because these capital markets in formation here in the U.S. are saturated. There's mature. So where is there a gap?
That's such a good question. And part of that gap, we've actually been doing this for 173 years as well. So we've got deep innovation, expertise. You mentioned it. We invented the ETF in Toronto. The first fixed income ETF happened in Toronto 25 years ago. So there was natural things that we could bring to the U.S. market. And when 2 years ago, I was down here in New York, I was able to put our entire business team around a dinner table of 8. Now we have over 200 people in the U.S. across multiple business lines supporting energy, indices, as we talked about, ETF support, new data operations that we brought in this year. We launched a new trading market this year, very much focused on capabilities we built in Canada that we saw an unmet need for here. So everything we're doing is based on where we believe we've got capabilities that add value to the clients, not just to be another player.
One of the things that you might have to imitate rather than innovate is prediction markets. ICE is buying one, and it seems to be like the hottest new thing. Are you looking to get into prediction markets? And then where do you draw the line between, finance and sports betting?
And that's the real question, and that's the regulatory question on this as well, in terms of what is investing and what is gambling. At the end of the day, we believe our client base is to serve the brokers, the dealers, the asset managers that go out to the retail investors. Our retail side is more about investor education, information, content, helping them understand investment options. So for us right now, we don't see us being kind of first mover in that space. But there's a lot of trends like that our team's got to make sure we're up to date on. Not just prediction markets. We need to be ready for 24/7 if the U.S. market moves. We need to be ready for tokenization if there's a greater interest in tokenizing, equity assets. So all those are on the table in terms of investing to make sure we're ready. But it's unclear in all these where the real demand's going to be in the investment market in terms of the real money demand.
When, again, something like a prediction market, though, because it feels a little bit like the Wild West at the moment, do you think that this is, and people are calling it an asset class? I mean, Cliff asked us if AQR was in the building talking with Odd Lot, saying that they're going to start maybe trading sports prediction markets. Does it make sense, though, for you to say, okay, this should be under a roof where we have the expertise and we can deliver it versus like a poly market or whatever sort of else off-exchange thing that exists that maybe has a little bit more risk within it?
Yeah, if you think about that crossover, and it's not just those markets, you've got other markets that are looking to provide not just predictive pieces, but stepping into other tokens on equities, things like that. If they're going to move into the investment space, why wouldn't we expect that everything we've built around investor protection, liquidity enhancements, separation of assets, why wouldn't that apply there? Would we want that same protection? So I do think that there is an element that there's a blow up waiting to happen on some of these. That's going to put shine a light on it, and we're going to look to, okay, how do we bring the same kind of scrutiny to this, just like we brought to crypto markets a couple of years ago?
By the way, just quickly, about 45 seconds. Are you staffing up with ETFs? There's been a divergence with some of the exchanges on whether they're adding or subtracting.
We are adding. So ETFs both in the index building to create indices for ETFs, but also the support of ETFs. In the Toronto Stock Exchange this year, we've already listed over 200 new ETFs. So this is absolutely a place we're investing in Canada, in the U.S., and also in Europe as well to help build out the European market.
John, this is great. Thanks for stopping by on your trip through New York. That is TMX Group CEO John McKenzie. Now, coming up in the next hour, MFS Investment Management Ted Maloney on his firm's focus on public markets over private markets. You're watching Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks. We are, 6 hours away from NVIDIA earnings. S&P 500 doing quite well, up 0.7%, although it's the first up day in 5. The NASDAQ gaining more than 1%. On bets that NVIDIA may do well, that stock itself is up more than 3%. And we see Alphabet shares also gaining right now 6%. So tech doing well. In terms of retail, we've had a ton of earnings. Target, Lowe's, TJ Maxx, and Williams-Sonoma all out. You can see those moves as well. Coming up in the next hour, JP Morgan's Gabriela Santos shares her outlook for 2026. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger, breaking 4 days of declines heading in to NVIDIA earnings day.
Yeah, markets are facing that crucial earnings test. NVIDIA is obviously the world's most valuable company, reporting earnings. I mean, everyone knows that, right? It passed $5 trillion in market cap. But investors are still wary of the whole AI trade.
You can't say it enough. Meanwhile, Wall Street executives, they are urging caution. Goldman's John Waldron says that markets are primed for further declines.
And a cautious consumer. Retail results this morning signal shoppers are turning to cheaper options as the economy shows continued signs of stress, but not really distress quite yet.
No, or not stress if you're looking at TJX. People are buying that.
Apparently, it's a fun place to go. We begin with JP Morgan Asset Management releasing its 2026 investment outlook. The team writes, valuations, earnings, and AI look bubbly, but are underpinned by solid fundamentals. Investors should prioritize quality and focus on secular rather than cyclical themes. Joining us, we're pleased to say on set, is Gabriela Santos, JP Morgan Asset Management Chief Market Strategist for the Americas. So, Gabriela, what do you think about this, I don't want to say correction because we're only down 3%, but it's all the talk at our New Economy Forum in Singapore, and John Waldron says we could get some continued modest declines. Is that good?
I think it's healthy. We had 6 back-to-back very strong months of returns, just an unrelenting rally from those April lows. So absolutely healthy to see a 4% pullback for the index as a whole, and then closer to 6-7% for those AI-linked, as well as what had become some memes and themes that had run a little bit too far after the summer. So absolutely normal, and maybe it goes a little bit further, but we don't expect a big bear market or a downturn. I think it's just healthy repositioning. As you read in the piece, we would still lean into structural over cyclical themes. So that means for us, it's still the main AI story driving any of the excitement and opportunity in U.S. markets, rather than trying to chase some of the more cyclical stories in the market that there we think had run a bit too far since the summer.
Is there a chance, though, that this is a narrative that really picks up steam? Because part of what's underpinning some of the losses, you see Oracle debt, for example, spreads widen, especially on their CDS of it and CoreWeave. This idea that there's an overspending happening. They don't have the revenue or the return on investment to back up the amount of capital being put to work. How do you prevent that from turning into a narrative that's not just a correction, but something that's a lot more painful and unhealthy?
And I think what's been nice about this year is we're on the third full year of this AI story, but it really evolved this year. If you actually look at that Mag 7 group, for example, or you put hyperscalers together, which include Oracle, what you see is only 2 of those stocks are outperforming the S&P this year, rather than the whole cohort like the 2 years before. So there's already clear differentiation of, are you monetizing this as an enabler, basically through semiconductors or cloud? Otherwise, the story has moved on to other enablers. There you see industrials, utility as some of the top stocks. And I think next year it'll evolve further, right? So still, which one of the big companies are monetizing the story with low leverage? And then what's next? And there we really think a lot about enterprise adoption of AI and their very solution-specific software, also the physical application of all of this through robotics and automation. And there I think worth looking at Asia for some of that leadership.
So there's really 2 themes here, right? On the AI side, are you going to get the ROI to justify the CapEx that we're seeing and hearing about? Yeah. On the economic side, this K-shaped economy, what are you watching to ensure you that the drag the lower cohorts are putting on the economy doesn't broaden out into a headline problem?
Yeah, we named the outlook for 2026 AI lift and economic drift. A little bit more of the same that we've seen this year. Basically, if you look at CapEx, for example, you're really only seeing that pick up in tech-related sectors, whereas CapEx in any other cyclical sector of the economy is moving sideways, including housing. We expect more of the same next year. If you look at consumption itself, it's actually contributing less to growth than AI investment alone, and it is very K-shaped. So for next year, a little bit more of the same. Growth around 2%, a little bit of a sugar boost early in the year from those tax rebates, but otherwise a good enough economy, but not anything to get overly excited about. And there comes that focus of quality versus cyclicality, high beta, which is what we saw starting to lead after the summer, which we think was due for a pullback.
There is some stimulus, though, that's likely to come in the start of next year. There was a very recent interview with Scott Besson, I believe on Fox News, where it was Fox News because it was Brett Baer asking him, how do you make sure a $2,000 tariff check doesn't result in inflation? His answer was basically, well, we hope people will save it, not spend it. Historically, what people do is they spend it.
Of course.
In the U.S., for sure.
Especially. Okay, so
exceptional consumers.
Well, 1, inflation concerns, but 2, couldn't that make some of these consumer companies more attractive if all of a sudden people are armed with more cash that they're willing to spend?
And I think that's why when we finally got the One Big Beautiful Bill Act signed, and there was this realization that the tax cuts started this year, but the W-2s or the payrolls wouldn't be adjusted until next year. I think that gave that little pop to consumer discretionary, to small caps, but really we should see it as a sugar rush. Same with additional stimulus checks, which TBD, if Congress would pass that, it would be a sugar rush. And American consumers really are exceptional at spending it, so we do think it would filter through, especially actually to consumer discretionary types of stocks. But then that's all you get. You get a technical bounce in those kind of companies, and then you're back to a slowdown later in the year, something that's a little bit more soggy and still quite K-shaped.
And reinforced moral hazard. I mean, John Waldron was also saying the consumer problem is that people are lending too much, right? And I guess we've been trained to understand we're going to get bailed out by some sort of COVID spending, stimulus falling from the sky. Now it's tariff refunds. are you concerned about the U.S. economy on a broader level, on a longer-term level? Because we're also spending like drunken sailors. No one seems to care, right?
Those two themes are really important for the long-term outlook. This idea that maybe there's a little bit more downside protection, and so you avoid some of the bigger drawdowns in the economy because fiscal's ready, willing, and able. But as a result, you could also get more pops on the inflation side. We don't think it's next year, but further down the line, if we keep stepping on this protein, stepping off the protein accelerator and on the sugar accelerator, then you will get more periods of inflation uncertainty. And that's why we talk so much about the 60-40 plus. Bonds really can't help you outside of a recessionary scenario, and that's why we talk a lot about private markets. Infrastructure is our favorite because it's a good combination of diversifying defense in portfolios, has a negative or basically an existing correlation to stocks and bonds, and it's a way to diversify the AI story through the power surge kind of story, specifically here talking about utilities and independent power providers.
Gabby, this has been great. Thank you so much for joining us this morning. Always wonderful to have you on. Gabriela Santos of JP Morgan Asset Management. All right, to check on markets this morning, about 40 minutes into your trading day after 4 consecutive days of declines. The NASDAQ 100 outperforms thanks to NVIDIA, which is up today. This could all change after the bell when they report. But in the meantime, energy is the big drag on this index. Oil prices are moving lower, but most about everything doing okay, Matt.
Let's get a look at some of the single stocks moving right now. Don't forget that we have retail earnings out today. Target is the latest retailer to narrow its profit forecast as consumers get picky. It says discounts and softer demand are responsible for the divisions.
Low shares, those are climbing. They also reported earnings where they trimmed its outlook, but these things are down 11% this year. They reported strong online sales and growing demand from professional contractors.
Blue Owl is calling off a merger of 2 of its private credit funds. The firm terminated the deal after scrutiny over potential gates that it would have to put on the non-traded BDC to merge it with the publicly traded business, and investors want to be able to get redemptions when they want.
And that's a fair statement. Okay, coming up, we're going to bring you part of our interview with NEC Director Kevin Hassett, happening right now at the Bloomberg Insights and Innovation Summit. Stick with us for that. This is Bloomberg. Let's go live right now. NEC Director Kevin Hassett speaking with Bloomberg Chief U.S. Economist Anna Wong at the Bloomberg Insights and Innovation Summit in Washington, D.C.
GDP growth be sustained at this 3 or 4%, while the labor market is going sideways, basically, with labor share probably going down, probably because of productivity gains in the future.
It could be that. And also, don't forget that there's been a big reduction in illegal immigration and employment from that aspect. And so the population growth is pretty low compared to what it was when we had tens of millions of people crossing the border. And so the break-even jobs number for the payroll survey is, people think, is down like quite a bit to maybe around 40 or 50,000.
Yeah, between
right?
30 to 60,000.
Oh, well, I was 40, 50, you were 30, 60.
Yeah.
I think we kind of were about the same range, right?
Right.
and so that's like another thing that we could have big increases in productivity and big increases in output and a healthy labor market with job numbers like the one that you forecasted, and we'll see whether you're right or not.
So 54 sounds good to you.
I'm saying that
it's not 100.
That's enough to sort of keep up with population. You'd want stronger growth than that and unemployment to go down, but the unemployment rate's a little higher than what's probably the equilibrium unemployment rate in a full employment economy, but not a whole lot.
So Kevin, going back to this productivity boom, I recently tweeted a couple pictures that seems to suggest some emergent micro evidence of how AI is boosting business formations, and St. Louis Fed also has a piece out showing how AI adoption is correlated to rise in sector-specific unemployment. So, just evidence that AI is working through at the micro level. But then the response I got made me realize that it is actually a really polarizing topic. With half of if you survey a lot of people, half of them probably say AI is a bubble. Half of them would say that there's no evidence that there's a productivity boom yet, that productivity is still on trend, and the improvement reflect more of a cyclical thing that happened post-pandemic as opposed to this sustained AI-driven productivity. So we are going to touch on you being the one of the leading candidates for Fed chair. And going back to that 1995, 1996, those two critical years at the Fed, you mentioned that Alan Greenspan was really the only one of the few who saw evidence of productivity boom. And I reread the historical transcripts in December 1995, that particular FOMC meeting where half or more of the FOMC were agitating for holding rates constant, and in 1996, many of them wanted rate hikes. And somehow Greenspan was able to convince all these skeptics that something is afoot without the data to support.
Let me talk about this, because there's an interesting anecdote that I don't think has ever been made public about this. So because computers were improving so quickly, then it was decided by the Bureau of Economic Analysis, a lot of great professionals over there, that they needed to what we call hedonically adjust the computer price, which meant that if you had a computer chip that was twice as fast as the one from last year and it costs the same, then that's like a big reduction in the price of computing. And so that in a typical year, right around when we were starting to have to make the judgment on this,
all right, that is NEC Director Kevin Hassett speaking with our very own Anna Wong in Washington of Bloomberg Economics. You can continue to watch that conversation on Live Go if you have a Bloomberg terminal in front of you, LIVE Go. And I mean, I think I would. It's so fascinating to see. Anna Wong has a reputation for standout calls. She's absolutely brilliant. And Kevin Hassett, he used to be a Bloomberg contributor, used to be the AEI.
Possibly the next Fed chief. Trump saying recently he thinks he's made up his mind and you think he'll go with the politically correct choice, I think.
Yeah, although he said he'd rather pick him. And he pointed to Scott Bessent.
Right, but Scotty doesn't want it. Scotty B. Anyway, still ahead, Raj Dhanda of Ares Management on cracks and opportunities, what he's seeing in private credit. That's all coming up next. You're watching Bloomberg Open Interest.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Credit events like Tricolor and First Brands are showing signs of some folks and some competitors that are probably getting out ahead of themselves and aren't doing the proper amount of diligence in researching their investments and structuring their investments. And I think, just like Mark said, there's going to be good asset managers and bad asset managers.
That was Fortress co-CEO Drew McKnight speaking with us in the last hour. Let's continue the private credit conversation with Raj Dhanda, Global Head of Wealth Management at Ares Management. Raj, wonderful to see you.
Thanks for having me, Danny.
And look, you perhaps have the wonderful and difficult task of going to a broadening set of investors who are interested in private capital. Increasingly, this is part of the conversation, that there is a divergence. In the words of Drew McKnight, there are good managers and there are bad managers. Just how stark is that divergence getting, and how much more difficult does that make your task of educating people on this asset class?
Well, Danny, it's actually core to our education. I was talking to a top advisor this morning, and manager selection has always been at the forefront of our narrative. I think in these markets, you'll see a higher dispersion of outcomes. You'll see the best managers, and through history, the best managers are the ones that can discern between noise and fundamentals. And we think this is the time when you're going to need to do that, and you're going to need to be with managers that have been doing it for 30 years, have broad deployment, and can deliver the investment experience that they targeted.
So how has underwriting changed now versus, say, 2021? Are there terms you're just not willing to give that you see competitors doing?
You know, the underwriting process hasn't changed, and we benefit at Ares from a significant amount of our loans being with incumbent borrowers. Over half of what we do is with a borrower we've known for many different cycles or through different cycles. And so our approach has been consistent, and we've been fortunate that our credit portfolios are healthy, highly diversified, and they're built for environments where you get this idiosyncratic noise.
By the way, in terms of this environment, it's not just this noise, but it's the fact that we're also about to embark on a rate cutting cycle too. And, you know, we spoke to John Gray about this, that I did just mathematically, it means that returns start to shrink for private credit. How much more difficult is it then to find alpha in an environment where you get that compression?
Well, so I'd step back. Our approach to the private markets is to build an investment solution that's for all markets. Private credit in particular, the tailwinds to declining rates are pretty substantial. You get wider spreads, you get more deal flow, you get higher fees. And so actually private credit will benefit from a lower rate environment. But what we're trying to do is present the suite of solutions. We think there are opportunities in real assets, there are opportunities in sports. We think that the important role we play.
ओके गाइस, इन्वेंट्री आने वाली है ये नेचुरल गैस में. जिन लोगों ने सेलिंग का ट्रेड लिया है तो अपना एसएल कॉस्ट पर रख लो. पुट योर एसएल एट कॉस्ट टू कॉस्ट. इन्वेंट्री मुझे नहीं पता कहाँ ले जा सकती, हो सकता है बेरिस आए, हो सकता है बुलिस आए. फोरकास्ट देखोगे लास्ट टाइम जितना आया था उससे कम एक्सपेक्ट कर रहे हैं, तो फोरकास्ट तो बुलिस है. अब देखते हैं क्या होता है. ठीक है, अपना एसएल कॉस्ट पर रख लो, फिर देखेंगे दोबारा एंट्री री एंट्री कर लेंगे. पुट योर एसएल एट कॉस्ट टू कॉस्ट इन नेचुरल गैस सेलिंग ट्रेड. इन्वेंट्री आ गई है. इन्वेंट्री इज न्यूट्रल ही है क्या? कैंडल तो फ्लैट ही दिख रही है मुझे. ओपन इक्वल टू हाई, हाँ फ्लैट ही आई है क्या? थोड़ा प्रेशर तो दिख रहा है सेलिंग का, बट अगेन वी डोंट नो येट. न्यूट्रल है. फोरकास्ट था आपका 14 बुलियन, कम आना चाहिए था 14 बुलियन से. एग्जैक्टली 14 बुलियन ही आया है. तो नेचुरल गैस इन्वेंट्री इज न्यूट्रल फॉर नेचुरल गैस प्राइस. ना बुलिस है ना बेरिस, न्यूट्रल कह सकते हैं. नेचुरल गैस इन्वेंट्री इज न्यूट्रल फॉर नेचुरल गैस प्राइस, इसलिए फ्लैट ओपन हुई है. थोड़ा प्रेशर जरूर दिख रहा है, बट वी डोंट नो कि क्या रिएक्शन देते हैं. यहाँ पर एक सपोर्ट था, ये बड़ा इंटरेस्टिंग चल रहा है आज प्राइस एक्शन नेचुरल गैस में. यहाँ पर जो ये सपोर्ट था इसका ब्रेकडाउन यहाँ पर हो गया है, देख पा रहे होगे. ऊपर जो रेजिस्टेंस था वहाँ पर पहुँचा है प्राइस, बट एक इंटरेस्टिंग चीज़ कि अब इसने फिर से एक नया सपोर्ट बना दिया है लोअर एंड पे. कि एक सपोर्ट ब्रेक कर रहा है नीचे से, एक सपोर्ट ब्रेक कर रहा है नीचे, नया सपोर्ट बना दे रहा है. ऊपर एक रेजिस्टेंस ब्रेक कर रहा है, नया रेजिस्टेंस क्रिएट कर दे रहा है. वेरी इंटरेस्टिंग. ठीक है, इस कैंडल पर री एंट्री मत करना. अब इन्वेंट्री वाली कैंडल है, थोड़ा सा वेट करो कैंडल क्लोजिंग का, फिर देखते हैं. इन्वेंट्री वैसे देखोगे इन्वेंट्री इज न्यूट्रल, बट स्टिल we have to wait for this news based candle. रेजिस्टेंस पे जरूर है, बट अभी जो नीचे लेवल मैंने बनाया है that is now support. ये अब सपोर्ट हो चुका है. ये एग्जैक्टली नहीं बनाया गया. बहुत ही ज़्यादा फाइट हो रही है आज, आई डोंट नो व्हाई. पहले काफ़ी देर यहाँ पर इस पर्टिकुलर जोन पे प्राइस रुका रहा मॉर्निंग पे. यहाँ पर सपोर्ट था, काफ़ी देर होल्ड किया सपोर्ट से. पहले कल 2-3 बार बाइंग आ गई थी. फिर यहाँ पर एक रेजिस्टेंस बनाया छोटा सा, काफ़ी देर फाइट हुई. फिर रेजिस्टेंस पे सेलर का असर उड़ाया, ऊपर गया. फिर सपोर्ट पे आया, थोड़ी देर बाइंग हुई. फिर एक रेजिस्टेंस बनाया, उसका भी असर उड़ाया. फिर से एक ये रेजिस्टेंस नया वाला बना दिया, यहाँ पर अभी रुका हुआ है. इस फाइट में फाइनली सेलर्स जीते, नीचे सपोर्ट था वो ब्रेक हुआ, ये रेजिस्टेंस इंटैक्ट हुआ, अब फिर से यहाँ पर सपोर्ट बन गया है, तो अब ये रेजिस्टेंस ये सपोर्ट, इवन दो सपोर्ट एक नीचे भी है जो हम वेट कर रहे हैं, तो काफ़ी पास पास बन गए हैं सपोर्ट रेजिस्टेंस। होता है कभी कभी ऐसा भी, प्राइस दोनों ही पार्टी लग रहा है बायर्स और सेलर ट्राई कर रहे हैं कि अपनी डायरेक्शन पे प्राइस को लेके जाएं। लेट्स सी, अब देखो इसको नीचे आना है ये बड़े टारगेट के लिए, तो ये ब्रेक डाउन जरूरी है। अभी मान के चलो इस लेवल के नीचे एक कैंडल क्लोज होनी जरूरी है, अगर इस लेवल के नीचे क्या है आपका लेवल 395, 395.5 इसके नीचे कैंडल क्लोज नहीं होती है तो और नीचे जाएगा नहीं, इसी रेंज में घूमता रह जाएगा। यहाँ से बाइंग आ जाएगी, फिर सेलिंग, फिर बाइंग, थोड़ी देर को फाइट करेंगे, फिर या तो अपसाइड का एसएल निकलेगा या डाउन साइड का, फिर नीचे आएगा नेक्स्ट सपोर्ट तक। इन्वेंट्री न्यूट्रल है, क्रूड में भी निकल सकते हैं, क्रूड का बुक कर सकते हैं, ठीक है, क्रूड ऑयल में भी प्रॉफिट बुक कर सकते हैं, चाहो तो थोड़ा ट्रेल कर लो, थोड़ा सा और रह गया, रेजिस्टेंस को ऑलमोस्ट हिट ही करने वाला है। भी ऊपर दो रेजिस्टेंस जोन है, एक तो यहाँ पर लगाया हुआ है मैंने, इसके ऊपर एक रेजिस्टेंस जोन ये भी है, तो दोनों का ध्यान रखना, दोनों ही रेजिस्टेंस हैं। हो सकता है प्राइस दोनों की लिक्विडिटी एक ही साथ ले ले। थोड़ा सा इशू रहता है प्राइस में जब सपोर्ट रेजिस्टेंस बहुत पास पास बन जाते हैं ना, तो इस तरह का थोड़ा बहुत हमें इशू देखने के लिए मिलता है, नेचुरल है, हमेशा नहीं होता, बट ऑब्वियसली इंट्राडे में अगर प्राइस ट्रेड कर रहा है तो यू कैन एक्सपेक्ट कि वहाँ पर ऐसा होगा ही होगा। हायर टाइम फ्रेम होगा तो वहाँ पर ऑब्वियसली कैंडल क्लोज होने में, बनने में टाइम लगता है, ठीक है, इसलिए थोड़ा सा अगर लेवल दूर दूर हो ना तो ज़्यादा बेटर रहता है एक्चुअली में। जैसे कल था क्रूड ऑयल में, नीचे सपोर्ट से देखोगे रेजिस्टेंस काफ़ी दूर था, इवन तो एसएल बड़ा था बट टारगेट काफ़ी बड़ा था, तो उस वजह से कोई ज़्यादा इशू नहीं आएगा वहाँ पे। बट सपोर्ट रेजिस्टेंस बहुत पास पास बन जाए, या फिर सपोर्ट है, सपोर्ट से बाई करें, जस्ट ऊपर जाके रेजिस्टेंस क्रिएट कर दे, तो अब क्या करोगे सर, रेजिस्टेंस से सेल करोगे, सपोर्ट से बाई करोगे, अब कुछ भी कर लो, प्राइस लेकिन किस डायरेक्शन पे उसके बाद जाएगा नोबडी कैन प्रिडिक्ट दैट थिंग। वहाँ पर एक ही चीज़ कर सकते हैं, एक साइड के एसएल निकलने दो, दूसरी साइड स्ट्रांग हो जाती है, फिर उस लेवल पे सेल करो या फिर बाई करो, बट उसमें भी ध्यान रखना है कि ऐसा ना हो कि फिर वहाँ पर हम सेल कर रहे हो और फिर प्राइस वहाँ से थोड़ा सा नीचे आ रहा है और फिर नीचे आके सपोर्ट बना दे रहा है या फिर रेजिस्टेंस क्रिएट कर दे रहा है, क्योंकि फिर हम एक्सपेक्ट करेंगे कि प्राइस और जाएगा, बट वो जाएगा ही नहीं, ठीक है। अभी आप देखना नेचुरल गैस में ये लेवल प्राइस का फिर से शायद होल्ड कर जाएगा। अब कोई डेटा तो नहीं है आज, आज का डेटा कंप्लीट है। करते रहो guys. Don't forget to like the stream. जिन लोगों ने नहीं किया like अभी तक. Like कोई फायदा नहीं है. It will hold after that.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Nathan Hager. A relief rally is on Wall Street with tech stocks leading the way. Right now, the S&P 500 is up 1.7%. The Dow Jones Industrial Average is higher by 1.4%, and the tech-heavy Nasdaq Composite is soaring 2.25%. The 10-year Treasury yield is down 2.5 basis points to 4.11%. New optimism around artificial intelligence is outweighing a delayed jobs report that could keep the Fed on hold with interest rates. The September non-farm payrolls report showed 119,000 jobs added before the government shutdown. That was more than twice as many as economists expected. But Labor Secretary Lori Chavez DeRemer says another rate cut is what the labor market needs.
When I travel around the country talking to businesses, which I have hit 36 out of 50 states on my 50-state tour before, the Democratic shutdown happened, those business owners are wanting to borrow more money at a cheaper rate to invest in their workforce. That is what they're asking. And so I think another rate cut is exactly what we need to really grow this workforce.
Labor Secretary Lori Chavez DeRemer appeared on Bloomberg Television. You can catch the full conversation on the Bloomberg Talks podcast. Fed officials aren't so sure. Cleveland Fed President Beth Hammack spoke this morning.
Inflation has been running above the Fed's 2% objective for 4.5 years. Lowering rates to support the labor market risks prolonging this period of elevated inflation and it could also encourage risk-taking in financial markets.
Those comments from Cleveland Fed President Beth Hammack are being echoed by Fed Governor Michael Barr. He says the central bank should proceed with caution, with inflation still running a full percentage point above its target. But again, tech stocks are in the driver's seat, led by NVIDIA. Those shares are up 4% after the AI chip giant delivered a 62% revenue gain in the latest quarter and projected $65 billion in sales for the next 3 months. Bloomberg's Ed Ludlow interviewed NVIDIA CEO Jensen Huang after those numbers. He says markets believe him when he says AI is not in a bubble.
We're in this ironic position where we went into this earnings print with very high anxiety about how high the bar was to clear. Now, if you read the sell side notes, people think that actually this figure they've given of $500 billion by the end of next calendar year is a little bit conservative.
That's Bloomberg Tech host Ed Ludlow. And the tech story continued with earnings from Walmart. The world's biggest retailer boosted its full-year sales outlook and says it's grabbing more customers through its e-commerce marketplace. David Bellinger is a senior equity analyst at Mizuho.
The really good number was paid delivery was up 70%, 70. Thought that was a typo when I first saw it. Really good, and it shows you that the mid-upper income consumers spending a lot at Walmart.
Mizuho's David Bellinger was a guest on Bloomberg Surveillance. In a sign of the focus on tech, Walmart plans to shift its listing to the NASDAQ starting December 9th. Walmart shares right now are up 6%. And we have one more economic indicator from the National Association of Realtors. Existing home sales rose 1.2% in October, their fastest pace in 8 months, while the median home price rose 2.1% to just over $415,000. In Ukraine, President Volodymyr Zelensky is facing pressure to accept a peace deal that the U.S. worked out with Russia. He's meeting today with Army Secretary Dan Driscoll and other U.S. officials in Kiev. A source tells Bloomberg the U.S. is signaling Zelensky should take the deal, but European officials are pushing back. David Van Veil is Foreign Minister of the Netherlands.
This is up to Ukraine. It's about Ukrainian territory. It's about Ukrainian sovereignty. So without a buy-in of Ukraine, you won't get the support of the Europeans.
Dutch Foreign Minister David Van Veil spoke to the BBC from a summit in Brussels. The 28-point plan is modeled on the Gaza ceasefire. It includes long-standing Russian demands that Ukraine has deemed unacceptable. Tomorrow, President Trump meets with New York City Mayor-elect Zoran Mamdani at the White House. It will be their first get-together since the Democratic Socialists win on an affordability platform. We get more from Bloomberg's Tyler Kendall at the White House.
The White House has felt under pressure when it comes to affordability, and we know that not all of their plans are landing well within the Republican Party. We have new reporting out from Bloomberg News that some Senate Republicans are pushing back on the administration's plans to release tariff rebate checks. Of course, this has been one of those proposals floated to get more money into consumers' pockets amid those slew of losses that Republicans saw earlier this month when it came to the elections across the country. But at this point, those Republicans are saying that they would rather have that money be put towards paying down the deficit instead of going to those checks.
That's Bloomberg's Tyler Kendall reporting from the White House. And bipartisan dignitaries are gathering at Washington National Cathedral for the funeral today for former Vice President Dick Cheney. His former boss, George W. Bush, will deliver the eulogy. Former President Joe Biden is there as well, along with 4 former vice presidents. President Trump and Vice President J.D. Vance reportedly weren't invited. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
In our new podcast, Everybody's Business, we talk about the business news that concerns everybody. From
देखो अब ये नेचुरल गैस का हो गया ऐसा कुछ कि ये साइडवेज हो गया। यहाँ पर एक कोई अगर सेलिंग का ट्रेड में बने रहना चाह रहा है तो क्वांटिटी थोड़ी कम कर देना। रीज़न इतना ही है क्योंकि इसमें अभी नीचे जाने के लिए ना इसको ब्रेक डाउन करना ज़रूरी है। हो सकता है ब्रेक डाउन करे, हो सकता है ना करे, हो सकता है अपसाइड पे ब्रेकआउट कर दे और फिर उस केस में फिर ये सपोर्ट स्ट्रांग हो जाएगा। दिस लेवल इज नाउ एक्ट एज अ सपोर्ट। वो कैंडल इन्वेंट्री वाली तो क्लोज हो गई, इन्वेंट्री फ्लैट ही आई थी। सो इट इज़ अ रेंज नाउ, ठीक है। ये रेजिस्टेंस है, ये सपोर्ट है, दोनों साइड जा नहीं सकता। एक साइड ब्रेक करना पड़ेगा तभी मूव करेगा, अप साइड ब्रेक करेगा तो नीचे सपोर्ट स्ट्रांग हो जाएगा, अप साइड ब्रेक करेगा तो डाउन साइड ब्रेक करेगा तो फिर ये स्ट्रांग रेजिस्टेंस रहेगा, फिर री एंट्री कर सकते हैं। मेरे अकॉर्डिंग तो अब इसमें कुछ नहीं करना चाहिए, अवॉइड करो बेस्ट रहेगा। रेंज है, अब रेंज में घूम रहा है तो कुछ कर नहीं सकते। ट्राई कर रहे हैं लेवल पे बाई सेल करने का, बट वही है कि सडनली एक लेवल पे रेजिस्टेंस बन रहा है तो नीचे बहुत पास में सपोर्ट बन जा रहा है तो फिर टारगेट मिलता नहीं है कुछ। अब वही देखो ना, यहाँ पर सेलिंग आई, नीचे से फिर बाइंग आ गई, फिर सेलिंग आएगी थोड़ा ऊपर जाके हो सकता है, फिर नीचे से यहाँ से फिर बाइंग आ जाएगी। तो मेरे अकॉर्डिंग अगर इसमें रुकना चाह रहे हो, एज आई सेड, वी डोंट नो कि किस साइड ब्रेक करेगा, किस साइड के एसएल पहले जाएंगे, तो क्वांटिटी कम रख लो, नहीं तो निकल जाओ किसी एक साइड पे, निकल जाने दो, क्लोजिंग आ जाने दो, या तो ऊपर यहाँ एक क्लोजिंग आने दो या फिर इस लेवल के नीचे एक क्लोजिंग आने दो। जिस साइड पे क्लोजिंग आएगी उस साइड का लेवल रिमूव करके अपर साइड पे सपोर्ट या रेजिस्टेंस को फिर मार्क कर लेना। दैट इज़ अ बेस्ट वे टू ट्रेड दिस काइंड ऑफ साइडवेज मार्केट। बाकी अगर रुकना चाह रहे हो तो फिर रुके रहो, थोड़ा सा एसएल लेवल के ऊपर रख लेना यहाँ कहीं और, सो दैट ऐसा ना हो कि एसएल उड़ाए और फिर नीचे आए। अगर नीचे का ब्रेक करेगा तो टारगेट मिल जाएगा, बट एज पर माई व्यू अवॉइड करना चाहिए अब यहाँ पर। ठीक है, तो मेरे अकॉर्डिंग अब यहाँ पर कोई ट्रेड नहीं है। दिस इज अगेन अ रेंज, किसी एक साइड ब्रेक करेगी तो फिर देखते हैं। ठीक है, ऐसा नहीं कि यहाँ से सेलिंग नहीं आ सकती है, फिर रिपीट कर रहा हूँ, ये है तो रेजिस्टेंस ही अभी भी, बट ये सपोर्ट भी है नीचे, तो अब इस ट्रेड में रुकना बेवकूफ़ी है। रहे हो तो एसएल थोड़ा सा क्वांटिटी कम करके एसएल थोड़ा सा बढ़ा लेना, ऐसा ना हो कि बिल्कुल टॉप पे आके एसएल उड़ाए और फिर नीचे आए। Natural gas users awaiting inventory data.
From vacuums to viral skincare, Shark Ninja has turned old school infomercial magic into full-blown TikTok gold. Because for this $6 billion company, the wow moment is everything. Like when someone uses their Shark Facial Pro Glow and proudly shows off all the gunk pulled out of their pores. Gross, sure, but also oddly satisfying. This is the company behind the Artisan 5-in-1 pizza and outdoor oven, the Ninja Slushie, and the Cryo Glow face mask, all sitting on shelves at major retailers. Not bad for a brand that started in the 90s selling vacuums with gimmicks like dumping sand on carpets and sucking it all up. Because when something works, why change it? Shark Ninja still sells the wow, but now it's wrapped in sleek design, viral unboxing, and influencer hype. The formula is simple. Keep it flashy, functional, and fun to watch. But this year, things got tricky for retailers in the US. Liberation Day tariffs hit, so the company got creative. After initially identifying a tariff hit of about $350 million, employees at the company brainstormed 1,500 ideas to cut costs. Still, not every gadget lands. Some are 3-in-1, others seem like 8-in-1, some can even feel like 1,000-in-1. They promise endless possibilities and leave you with a full cabinet of parts. But Shark Ninja's real trick? They've convinced millions that even gadgets like ice cream makers and slushy machines can feel like a must-have.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's Thursday, November 20th. Today, the US tells Ukraine to give up land in order to end the war with Russia. Trump signs off on the release of the Epstein files. Nvidia smashes earnings expectations, allaying fears of an AI bubble. And an off-the-cuff Taiwan comment from Japan's Prime Minister triggers a bust-up with China. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. The hum of generators powering rescue equipment accompanies emergency teams searching for survivors in the rubble of an apartment block in the Ukrainian city of Ternopil. Now, with Russia advancing, the US is urging Ukraine to accept a draft peace deal, giving up some territory and reducing its military. That's according to sources familiar with the plan. It's a plan they've apparently been working on with the Russians. Foreign policy editor Don Durfee has more.
Russia has been making military gains in eastern Ukraine, and Zelensky is facing a major corruption scandal within his own administration, right? Sort of making him a little bit weaker domestically. And it appears to be that the U.S. feels that this is a time when they may be able to, impose a deal on Ukraine and, in their minds, hopefully bring an end to this conflict.
The deal has not been officially acknowledged by Ukraine, nor by the White House. But Don says if the conflict is coming to an end in Russia's favor, it could send a message to the whole of Europe.
For Europe, it's not a matter of simply ending this conflict. It's a question of what comes next and what does it mean for Russia's position vis-a-vis the rest of Europe. Europe has backed Ukraine really strongly, not just because they're in favor of the Ukrainians, but because they are also worried about increasing Russian aggression. So there's a real desire among the Europeans, among U.S. allies in Europe, to see an end to this conflict that doesn't set Russia up for further aggression in Europe. So the Europeans will be very curious to see the details of this proposal and may have very strong pushback, depending what's in it.
President Donald Trump has signed the bill to order the release of the Epstein files. Attorney General Pam Bondi says the Justice Department will release the files within 30 days, but hinted that the files are unlikely to be fully disclosed.
We will continue to follow the law with maximum transparency while protecting victims.
The legislation passed by Congress to release the files allows the department to hold back personal information on victims and anything that would jeopardize an active investigation. The documents could still shed light on Epstein's ties to powerful figures, including Trump. Nvidia's latest earnings are calming fears of an AI bubble, at least for now. The chipmaker surprised Wall Street, reporting strong growth after several quarters of slowing sales, with shares in the world's most valuable company raising more than 5%. And as technology correspondent Stephen Nellis explains, because Nvidia is seen as a bellwether of the AI industry, the money that big tech companies are carving out for their chips is crucial.
So the company has said that they have $500 billion of business booked between now and the end of calendar 2026, which translates to more than 20 million of their chips. And more than that, they also talked about how the spending plans of major technology companies that invest in this, these are companies like Microsoft, Google, along with newer companies like OpenAI and Anthropic. The capital spending plans of those companies is up tremendously over the course of the year. So NVIDIA tried to make the case that these results are going to be durable, not just for the next quarter, but well into next year. So NVIDIA made the case that we're on the cusp of a generational transition in technology. They see a world where these chatbots that mostly talk or create images or do other things that are sort of digital will connect to the physical world in the form of robots, self-driving cars, other things where NVIDIA could sell many, many, many more chips over time and would become nearly ubiquitous.
But Stephen says there are skeptics.
So what we hear a lot from analysts are that NVIDIA is executing really well. They've got their supply chain really dialed in. They reaffirmed that all their chips are on time, but there are other aspects of this. Can you find the electricity for these major data centers? Can the global supply chain come up with enough memory chips to enable what NVIDIA wants to do that are beyond the control of even the largest company in the world?
A federal ruling blocking Texas from using a new congressional map that favors Republicans is shaking up next year's midterms. Judges there ruled that the state racially gerrymandered its new map in violation of federal law. Those maps were drawn up at the request of President Donald Trump to boost Republicans' chances of holding on to Congress. As our political reporter Joseph Axe explains, that plan hasn't worked out the way the president had hoped.
The Texas map was really the centerpiece of Trump's national push to get Republican states to redistrict. And so this ruling is a major setback. Now, it will get appealed to the Supreme Court. It is possible, maybe even likely, that the Supreme Court will put that ruling on hold and let the map go into effect. But it highlights that even if you assume that's the case, Trump's push has not succeeded in the way that I think he and the White House expected. First of all, California was able to put a new map in place that voters approved that is designed to flip as many as 5 Republican seats, which would basically counteract whatever happens in Texas. It appears that Virginia Democrats are going to install, or at least ask voters to install, a new map there that could net them 2 or 3 seats. And while some Republican states like Missouri and North Carolina have redrawn their maps as well after Texas, those states only added a seat each. And there's a number of other states where Republican lawmakers are so far resisting the Trump administration's pressure.
Japan and China are locked in an escalating standoff that's shaking political and economic ties between Asia's 2 biggest powers. The tension flared after Japan's new Prime Minister, Sanai Takaichi, warned that a Chinese attack on Taiwan could trigger a military response. Remarks Beijing say cross a red line. China Bureau Chief Kevin Krolicki has more on Beijing's response so far.
We've had the cancellation of academic exchanges. We've had the cancellation of planned screenings of Japanese films here. And most importantly, because of the economic value, we've seen state media urge Chinese travelers not to go to Japan. And that's important because they're the largest source of foreign travelers in Japan. They have been in the last year. If they were to disappear, it's a big enough change to make a measurable difference in Japan's economic growth. If this continues to escalate, the real damage could be for Japan's reliance in its manufacturing on other exports from China. China has used its control of rare earth minerals, the export of rare earth minerals, and control of the licensing regime for those in recent months against the United States. And back in 2011, China had throttled back rare earth exports to Japan in an earlier trade dispute. So if we get there, that's when I think this becomes very serious.
And finally, we usually use this spot to give you a recommended read, but today it's a recommended listen with this week's Reuters Econ World. It's all about Argentina and how a $20 billion swap line with the US may buy President Javier Milei some time, but it doesn't solve the problem of what to do with the peso. Host Carmel Crimmins breaks it down with emerging markets correspondent Karen Strohicker.
Argentina is a massive exporter of soybeans, for example, also to China, of beef. So in some of these, they are competing directly with US farmers who now find themselves, maybe not being able to export and who are asking the question, why do you help those guys down south when, we struggle here?
There's a link to that episode in the description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
The views expressed on this podcast are those of the participants, not of Reuters News.
If they have to do things that are basically unpopular, in the short term, can they get it past their own backbenchers, let alone, get re-elected at the end of it? And so that is a real binding constraint, I think, on the government.
It's perhaps comforting in its way that no matter what else is happening in the world, tariffs rising or falling, AI mania roaring or sputtering, markets up or down, Britain's chief finance minister will forever be under the gun for contemplating unpopular actions for Byzantine reasons. Rachel Reeves, the current holder of the office of the Chancellor of the Exchequer, is preparing to deliver the government's annual budget statement. She has to navigate a course between a confusing tangle of economic forecasts, fiscal rules her own ruling Labour government has made tougher for itself, and election promises to not raise corporate and income taxes. Not surprisingly, flighty investors and wealthy residents are nervously awaiting what she comes up with. How she will dodge a £20 billion gap between projections and policy, and what it all means for the UK economy, is the subject of this week's Viewsroom. Welcome to the Viewsroom, the weekly podcast from Reuters Breaking Views that dives into the knottiest topics in economics and corporate finance. I'm Jonathan Guilford. Flying solo this week as Amy Donnellan, my co-host, is in the US promoting her new book. Ever since former Prime Minister Liz Truss won a race against a rotting head of lettuce to be thrown out of office, it might seem a simple assumption that a return to political orthodoxy has calmed markets and set Britain on a stable path. That's not quite the case. With the 10-year benchmark sitting at 4.6%, UK government debt yields are the highest in the G7. The number of employees has been shrinking since late 2024, public debt is approaching 100% of GDP, and the government is trying to control a swelling budget deficit despite historically high levels of taxation. Amid it all, Reeves has weighed plans to hike key income taxes and then, according to the Financial Times, recently abandoned them. So, why is this happening? Fortunately, I have two guests sitting in the heart of the country's financial nexus to talk me through it. Jonson Drew is our global economics editor, and Peter Tal-Larsen is Breaking Views editor-in-chief, both in studio in Canary Wharf. Peter, John, welcome to the Viewsroom.
Thank you.
Hey, Jonathan.
All right, maybe let's start with the pressing issue before we step back as to what it all means. There's a lot of jargon around this that's a little bit confusing for anyone who isn't conversant in the argot of UK policy bandering, right? There's like a budget hole, which always sounds to me like somebody's implying like somebody lost money down the couch cushions, or there's some kind of like cooking the books going on. There's headroom and all this other stuff. I mean, in plain language, what is the situation that Reeves actually faces as she prepares to lay out the UK's fiscal policy for the year?
Well, I mean, it is confusing because it's set out in a confusing way. So basically, she has two fiscal targets. The one that we talk about the most refers to balancing day-to-day expenditure with receipts. But when we talk about the black hole or the budget hole,
ऊपरा लेवल 412 से 416 के बीच में है.
if you look at the past fiscal year, we're talking about 2.6% of GDP, a bit less than 80 billion pounds of difference between these two things, if you also account for depreciation of investments. But actually, that's not what the target is. The target is this measure 5 years from now. So at the end of the parliament or in the fiscal year ending in 2030, that's what the rule refers to. And then the question is, well, but then how do we know whether she's deviated from it or not? We know it because this all of these measures that the Treasury wants to implement, they have to run them through this independent fiscal watchdog called the OBR, the Office for Budget Responsibility. They plug it into their economic models, and based on the forecast for productivity growth, forecast for demographics, and whatever you want, they come out with a figure. And they say, well, you are this close to being in current budget balance by 2030. And this is like the famous fiscal hole. It doesn't even refer to what's happening in the government coffers right now. And then on top of that, of course, because all of these projections are so uncertain, and they have actually failed in the past, markets expect the chancellor to have a bit of a margin on top, which is a famous headroom. So in recent budgets, this headroom has fallen below 10 billion pounds, and thus markets think quite reasonably that it's the same as thinking that none of those projections might actually happen, and thus, the fiscal consolidation won't happen. So you have to then signal to the market that you're far above whatever the OBR says. And I think the market expectation right now is that she has to increase this headroom from 10 billion to 15. My personal view is unless she does 20, she won't get, a favorable gilt market reaction. Given that what we know is that the OBR will probably project a fiscal hole of 20 billion if everything stays the same, you have to add these 20 billion on top of the 20 billion headroom, and you get to the roughly 40 billion, some people would say 35, that she needs to make up.
Right. This just strikes me as crazy. Obviously, we have stuff like the CBO in the United States, right? And every country has its like independent, kind of like statistical forecasters and whatnot. And people are wary about budget windows and impacts and whatnot. But this whole thing of like the UK finance minister has to play this careful game of like how far is she within the margin of error of this like extremely error prone like forecast of the future, and like betting on whether she'll be given like the leash by markets to be able to do that. Like when I sit in the US and what happens is just like Donald Trump does something insane every day and it just happens, like it feels kind of crazy. Like, Peter, is this like reflective of a different reality between the two countries, or is this kind of just some bizarre?
Yeah, I mean, it is. It's reflective of a couple of things. I mean, partly it's just the political system, right? I mean, you have a sort of, you basically have a parliament which decides everything, and the government is the party with the majority, and they just kind of, so they can do a lot of stuff. And they have chosen to basically concentrate the doing of stuff when it comes to taxing and spending in basically one big set piece event every year, and then there's one in the spring which is a sort of an adjustment to that. And so you create this kind of whole circus and this drama. The budget's coming up. What's going to be in it? What isn't going to be in it? What's she going to do? And that's just kind of that's sort of the way the country is run. The more short-term issue, obviously, is also you talked about Liz Truss earlier on. Is everybody, every UK politician is scarred by the memory of that event. The fact that you had a new prime minister who came in, basically decided to do a budget without without waiting for the OBR to weigh in with its forecasts, and kind of, and the market freaked out. Gilt sold off, the Bank of England had to get involved, and the Prime Minister left office within 6 weeks. So that's the other. There is a sort of a political sense there that if you do this in a reckless way, if you don't pay attention to these things, if you don't tick these boxes, then you're going to come a cropper.
Right. And I kind of wonder about that because what you're talking about there, right, is sort of like the famous moron premium, right? It's this idea that the government has become so unmoored from reality that, you get this essentially tax that sits on top of bond yields or that depresses the currency and that makes the day-to-day operation of the government more expensive because you are doing crazy things. And I just wonder, how clean does that story look these days, right? Because, quote unquote, the adults are back in charge or what have you. And the UK still, as we said, has the highest yields in the G7. There's still I know when I eyeball it, it seems like what's actually happening is stuff just really changed a few years ago and has stayed different ever since. If I'm just looking at top line, tax and spending figures for the UK government, for governments around the world, right? Is it just that we're locked in some really weird, just terrible sort of equilibrium state right now? Or is it that there was this thing that was crazy and there was a moron premium and that sat on top of kind of whatever these trends were? I guess what I'm trying to figure out is the moron premium real?
I think it's I don't know what Peter thinks. I think it's real to an extent, but it's mostly inflation. Inflation in the UK was at 4%, above 4% most of the year. It's the most recent reading is 3.6%, so it's coming down a little bit. But of course, the UK has an extremely high inflation rate relative to other G7 countries. Thus, it also has a more hawkish central bank, and this means gilt yields are higher. Bank rate is at 4%, 10-year yields are at 4.6. It's not that different. Clearly, there is a bit of a we don't trust the government's fiscal policy, factor in it. I wouldn't deny that there is, but you have to take into account that it's mostly about inflation. And also the government's budget relates to inflation. And we saw this in the past budget, for example. The government, decided on some measures that were not inflation friendly. For example, both street economists and the Bank of England believe that out of that 4% inflation we've had through most of the year, about 1 percentage point related to administered prices or prices that the government can control directly or affect directly. For example, when they raise national insurance contributions, they raise the cost of doing business, and thus companies pushed up prices. So they themselves have not been very aware of the impact that the budget has on what they should care about the most, which is inflation. So while they talk about we have to adhere to these rules, they often have forgotten that gilt yields are mostly about interest rates and interest rates are mostly about inflation.
So when you formulate it like that, though, right, that feels like what you're saying is there's actually a lock where the only thing that makes sense is for the government to cut spending. That feels like an analytic frame where
raise taxes.
Tax policy is just per se. But what we're saying here, right, is any tax that is going to raise the price of some input, whether that's the input to the labor market
income
or
tax,
whatever, right,
income tax is not, which is why it was the market's preferred. The markets wanted the government to break their commitment to not touch income tax for working people for several reasons. One, because it's kind of silly and it ties the government's hands behind their back, and that's not something the market wants, right? They want the government to be able to react to whatever is necessary in the future, and they also don't trust that the so-called smorgasbord of other taxes that they're trying to raise will not distort the economy. But the other reason is it's because it's deflationary, right? I don't think the UK economy is necessarily overheating at the moment. You see the unemployment rate going up, and it's not a particularly fast-growing economy, but it does suffer from some supply side inflation and from some cost push inflation, and if the government adds to that, it gets worse.
Yeah, but it's also, this is really, I agree with John about the sort of the economic backdrop, but this is really a political problem, and it's to a certain extent a self-inflicted one. And so you're right, John, that basically the kind of the adults are back in charge, right? We don't have people in government who are suggesting ridiculous things, but there is a big question. well, A, they've tied their own hands on certain things. And then there is also a big question about their ability to actually deliver the type of things that they might want to do. And that's kind of, I think that's what really makes people nervous here is, so you've had, as John mentioned, the kind of the government is sort of committed to not raising taxes on working people. So even though actually working people, whisper it, but they actually don't pay, as a proportion of their income, they pay less tax than in a lot of developed European countries. They have so they've sort of ruled out a load of things there, which they may or may not break. Probably not, it looks like at this point. But then they've also got to consider the sort of the knock-on effects of what it is that they might do. And so and this, I think, is where people get anxious. So we saw the big thing that happened really was that the government tried to make some fairly minor but meaningful for the people concerned changes to welfare earlier this year. And basically what happened was that there was a rebellion. So this government, which on paper has a very, very large majority, had to backtrack on that. And that was a real alarm signal, because basically people are now wondering, if they have to do things that are basically unpopular, in the short term, can they get it past their own backbenchers, let alone, get reelected at the end of it? And so that is a real binding constraint, I think, on the government. And then the other thing is, but the other thing is just the kind of the way in which they've approached this suggests a lack of confidence and a lack of sort of determination. And so we had a situation at the beginning of November where Rachel Reeves made a speech where she said, basically, in a nutshell, she said, everybody's got to do their bit and there's going to be some pain and it's got to be shared. And this was widely interpreted, I think correctly at the time, as a sign that they were sort of preparing everybody for okay, we're going to kind of really go for it on the tax front. And I spoke to people after that in the markets and they said, well, this is good, because it means that, back to John's famous headroom, it means basically they're going to take this off the table. They'll have a buffer. They won't have have their forecasts being blown off course by every little bump in the global economy, and they'll basically be able to run the country properly again. And then, 10 days later, we read in the FT a leak, subsequently sort of confirmed that maybe they're not going to do that, and they're going to do this smorgasbord of small measures, and they're going to and they're not actually going to raise taxes. And the people in the markets are just like, what is this? What are they doing, and why are they changing their minds, and what is it that's prompted them to change their minds? So I think part of it's self-inflicted, part of it is the political reality they deal with, and part of it is just their own execution of the policies.
Right. This is what I wonder about the idea of, and why I kind of wanted to get at the whole question of the moron premium and are the adults back in charge and so on. Because right now, does it feel like it? If you're so you have these two binding constraints, right? On the one side, you have whatever is happening in the credit market that is going to constrain you in terms of, where a government borrowing cost is going to go, or on, just the literal sort of economic consequences of what you're doing. Are you going to end up with a more inflationary environment or not? Then you have the other side where employment is declining, where affordability issues are really, really paramount, kind of across the developed world. You have ministers across the G7, all hitting these constraints in various ways, right? We had issues with pensions in France and so on. I guess I just wonder, is this all peripheral fiddling around the more fundamental question of what's going wrong and what's going right? Because it doesn't jump out at me that there is some overarching vision for jumping the rails for the UK, onto some kind of fast track where, this general kind of low growth minimum that everybody has been kind of sitting in ever since the Great Recession, with the slight interlude of COVID and whatnot, is actually going to fundamentally change. And, there are various other countries where you hear oh, we're going to have an AI-led investment boom, or we're going to be, we're a small open economy and we're going to lean into that. There's going to be a manufacturing renaissance, or et cetera. I'm just I'm not sure what the story is in the UK. You know what I mean? What am I missing?
I think that's right, and I think it's related to what Peter was just saying. I think the lack of a clear vision is the key here, right? One component is inflation, the other component is nobody knows where they're going, and I would argue that trying to stick to these numerical numbers to ultimately has meant that their vision is less clear, not more. They were selling that we know what we're doing because we're gonna hit all these OBR rules, but actually ultimately we don't know where they're going. One argument in favor of things getting better from here is that if inflation keeps going down, you've seen a lot of scaring among consumers who still have today a very high savings rate. You see this across Europe as well. If you have inflation meaningfully coming down, interest rates meaningfully coming down, house prices going up at a faster pace than they are right now, you might see a rebound in the cyclical element of growth. And this might put the government in a better position, not just fiscally, but also to claim that they're achieving something. The problem is that longer term, the UK is in a complicated position. So exports of goods, for example, after Brexit, have remained very subdued. The big advantage the UK has had is that exports of services, mostly professional services, have actually increased at a very healthy clip. But this brings us back to the UK still retains the same comparative advantages as before in these sort of, urban services. And it is not very clear how the government can rebalance the economy as they intended. I mean, what they mostly want to focus on beyond the headlines of industrial strategy is planning. They want to get this country, which is not usually very fond of building too much, to build stuff, right? So they have a bill that is being discussed in Parliament right now, that the idea of that is that you will fast track not just residential housing, but also infrastructure and this kind of thing. So there is an element of saying, well, if we manage to better connect certain urban centers, we might kickstart growth. You add that to the increase in defense spending, which is another of the UK's strong legacy industries, and maybe you'll get some long-term growth out of that. But of course, I still think it lacks ambition is the problem. These types of very bounded policy prescriptions that have come from the current government, they just don't I think they lack the scope that is necessary. And a clear example of this is that expensive gas prices are behind a lot of the UK's current troubles, both in terms of inflation and low growth for many industries. And yeah, I mean, this is a country where admittedly you cannot install a lot of solar panels, but there is definitely scope for the government to do a lot more when it comes to renewable energy planning and building, and also enhancing the power grid. It seems like a low-hanging fruit that the government's aware of, but I don't think we're going to see enough of that.
I mean, look, ultimately, though, I would say if we're looking for a sort of a silver lining in all of this, expectations are incredibly low, right? I mean, if Rachel Reeves actually just shows up and delivers her budget speech without falling over or kind of sort of and
crying
and there's or crying or as she did, and there's a reasonably credible sort of plan with a bit of extra tax here and a bit less spending there, and sort of and they sort of cobble it together. Actually, people will kind of go, oh, okay, it's not too bad. So but look, you're right. All these fundamental questions about the economy remain. And look, and ultimately, this is a government whose vision, if there is one, is that they want growth, right? But they don't really, growth is a very hard thing to achieve. You can sort of set it as an objective, but actually delivering it is difficult. And I think until they sort of solve that question about what is it that they're trying to achieve and how are they going to go about it, I think we will unfortunately be sort of stumbling from one problem to the next.
Okay, so as long as the Benny Hill theme isn't playing in the background of the budget speech, victory for Rachel Reeves. On that note, we will wrap it up. John, Peter, thank you so much for joining me on the Viewsroom.
Thanks, Jonathan.
Thank you.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. We have a new email address where you can send us feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and reuters.com.
Barclays Investment Solutions allow you to look to the future with confidence.
Well, thank you all very much.
And, you think about the reserve.
Well, thank you all very much. And it is a privilege to be here talking about exorbitant privilege with all of you and this great group of guests here to my right. And I want to pick up with what was said at the end of Francine's conversation about the great realignment. And that is that this debate over dollar dominance is not a new one. It's been going on for many decades, and there have been these kind of signal moments along the way. I think of the advent of the euro, China's efforts to get included in the SDR and internationalize its currency, global financial crisis, COVID, the list goes on and on. Jenny, I'll start with you. I'm just curious, does this moment, when you think about the primacy of the dollar, feel notionally different than those?
Look, dollar dominance, I always come back and say, well, where else are you going to go, right? So start with that. And, if you think about the reserve currency, you're looking for stability, you're looking for strong economies, you're looking for a trust. You have to have a free-floating currency, capital, you can't have a lot of capital controls. So I don't think there's a question about the dollar dominance. I think there's a question about how much it gets chipped away, right? And you definitely see that. And you see that, and honestly, I actually think there's a lot of discussion about how tariffs and can you trust the U.S. has impacted it. But I actually go back to, in talking to some central banks, when Russia invaded the Ukraine and the U.S. froze assets of Russia in U.S. dollar, there was this, oh, this could be us. And so I actually think it started a little bit there where people said, okay, we need to start to diversify this a bit. And then you've obviously had the comments on, how can we trust the U.S. in how they behave in certain ways. And you see it, right? You see, like when when Russia was taken away from SWIFT, you now see contracts being done. India's buying oil from Russia in rupee, denominated invoicing. China and Russia are operating in the yuan. So that's the chipping away component. You still have the dollar dominance.
Valerie, let me bring you in because you've been living this day to day. Jenny talking about sanctions, and you are sitting on these frozen assets from the Russian central bank, and everyone trying to figure out what can become of those. What is your sense of the role that sanctions policy, the aggressive use of sanctions, has played here in kind of the reconfiguration of currencies globally?
Well, I think we understand all the objective of the sanctions. And I think in the context of the Russian-Ukraine war, I think the objective was very clear. But I think one thing that often politicians do not always understand is the long-term implications of those sanctions. In the short term, I mean, it makes a lot of sense. But, there is an erosion of trust, which is really driven by those decisions. And I believe that, and that's part of the role that I play for the last 3 years now, is really to educate, to some extent, the politicians about the consequences. I think also another thing which is very important, and especially in the current world of uncertainty, is that continuing to defend and respect the rule of law, the legal certainty is key for the trust in the financial markets. And so, yeah, sanctions, I mean, always there are different sides to the story, and practitioners who are there to really highlight what needs to be protected, and definitely the legal regime must be protected.
Danny, I want to ask you about the role of Washington in all of this. And I was thinking back on something that Hank Paulson, friend of the Forum, former Treasury Secretary, said a few years ago, that the greatest risk to dollar primacy has less to do with what's happening in Beijing and more to do with what's happening in Washington. So we're at a moment now where there is this aggressive trade policy that Jenny brought up. We have a Congress that passed a tax and spending bill that's going to add $4 trillion to the debt. We're seeing that ratio of debt to GDP growing to 150% here in the next few years. What do you make of that? Is there just a level of complacency in Washington and among investors as we see those numbers continue to rise?
Absolutely. I think on that front, the U.S. today is running a fiscal deficit of between 6 to 7%. The last time the U.S. ran a deficit above 5% was World War II. And then it was the GFC in 08-09, and then COVID, right? But today, the CBO estimates that the U.S. deficit will be above 5% for the next 30 years, with the S&P close to lifetime highs, with the U.S. close to full employment, 5%, right? So, to your point on, are they pushing the limits, it's one thing that would be, of course, worth discussing. But I guess the alternative is, what choice do they have? On the topic of de-dollarization, we've been, talking about it for many years now. Right? And I think, first of all, we have to go back a little bit further to 1971 at the end of the gold standard and of Bretton Woods, right? And I think it's kind of boring to go so far back, but you kind of just need to set the stage, right? So back then, the U.S. government debt at that time in 1971 was about $380 billion. I mean, that amount is like the one-day mark-to-market swing of the, Mag 7 and the stock market. Right? 380 billion. Today, it's 38 trillion, as we all know. It's grown 100 times in the last 54 years. And coincidentally or not, gold prices at that time was $40, and today it's just over 4,000, also 100 times. Right? But like I said, 54 years ago, kind of boring. So let's bring it closer. So 10 years ago, and I think you can see de-dollarization from this point. The IMF data, basically about the composition of official foreign exchange reserves, said that the U.S. comprised 66% of all reserves globally 10 years ago. Today has fallen to 56%, where the euro has gained 2%, China has gained 2%, the yen has gained about 2%. And also 10 years ago, the dollar index, which is a measurement of the US dollar strength, was at 99.5. Guess where it is today? 99.5. It hasn't moved, right? So on that basis, you'll be like, hey, there's no de-dollarization, even though the weights have come off, but the dollar hasn't weakened somehow. But that's one part that is missing. This FX reserves that we're talking about doesn't include gold. If you add gold to it, using the numbers from the Gold Council, of reserves, then 10 years ago, the dollar component, including gold in the whole basket, would have been about 57%, and gold would be, 13%. Today, the dollar has fallen to 42%, and gold has almost doubled to now 25%. And if you look at the price of gold from 10 years ago, it was just over 1,000. Today, we're at 4,000. It's gone up 300%, right? So I'm saying that de-dollarization, or maybe to be more fair to the U.S., it's about a move away from fiat currency, right? Because it's about a competition of who's less ugly, right? I mean, like every country is doing a lot of, basically the fiscal ill discipline that you talked about in Washington. It isn't just confined to the U.S., right? It's confined to many of the Western nations.
Valerie, on that point, how competitive environment are we in right now? Again, there have been moments in the past where you've seen China take a more aggressive tack. Perhaps this is an opportunity for Europe, looking at what's happening in the U.S. Is it a moment of global competition, or is this a moment in which other countries are content to sort of watch the U.S. go down this path, see central banks changing the composition of their assets, and just see how this evolves? How competitive is the environment as you see it?
So given the franchise that we have with central banks and the fact that we cover, the world with the financial institutions, we have some views on indeed some movements. But a little bit back to what has been said earlier this morning, I think it's more a gradual evolution, a gradual erosion of the dollar. There is no really very strong shift, but we do see that when financial institutions are redeeming their securities in dollar, instead of replacing them by dollar securities as it was in the past, they start diversifying their portfolio. And also when I was traveling to Asia last year, Europe was always an anecdote. Now Europe and the capital markets in Europe start to become again back on the agenda of the financial institutions in Asia. What we also see, and that's also a movement which is very gradual, in the past when investors in Asia were going outside the domestic markets, usually they were going to the US market first and then to the Western world. Now we do see that there are more and more investment flows within APAC countries. So when they get out of their economy or the country, they go closer, and not necessarily to the dollar. So I wouldn't say that dollar is, completely losing and there are a swing, but there is a gradual, revision of the portfolio allocation. There are also, for example, what is also interesting because that's newer, there is also, a usage of more European players. Some people, used to very much work with U.S. custodians, U.S. investment managers. Now they start also to diversify. So I would say that the game is about hedging and about diversification.
Jenny, I saw you nodding as Valerie was speaking. When you look at flows, are you seeing the same sort of thing?
Well, I think you got to remember, over the last 5 years, the U.S. market has been so strong, right? Since 2022 with a couple of hiccups. I also think part of this is a little bit of rebalancing. And then it all depends on your perspective. I mean, if you were in Europe and you invest in the U.S. market, even though this has been a pretty strong market this year, you pretty much were wiped out because of the depreciation of the dollar. So I think part of this also is where you sit, because currency is always a risk that you have to weigh into your portfolio. But I think that, I also think like U.S. investors are looking around the globe as well to say, where are there other opportunities that we should be thinking about? A third of our clients come from outside the U.S., and so our view is we have to have the right products for all markets. So you might get U.S. investors who say, well, I'm not going to invest in China and technology because I'm worried that there may be a policy change. On the other hand, you have Asian, European, Middle East investors who say, look at how the performance of the Chinese market. I think there's great opportunity, great innovation here. I want to invest here. So I think a lot of it depends on your seat.
Deanna, we had this Liberation Day moment, and the way the market reacted, I think, was different than a lot of folks thought it would. And I'm curious what you make about that as I talk about signal moments in recent history. What did that portend? And then picking up on that, the level of uncertainty that we have in the U.S., I'm curious how that has led investors to look to Asia, look for opportunities here in a way that they might not have before.
Interesting. It's like, a very similar experience to Valerie and Jenny. Since Liberation Day, we have found that global investors, but mostly those outside of the U.S., have a mindset of every incremental dollar to their savings pool, they want to try to invest it outside of the U.S. Right? And so I think that it's not about the end of U.S. exceptionalism. It's not about turning bearish on the U.S. It's just about understanding that, all these assumptions in the past where the U.S. was just the deepest markets, most liquid, easiest option, and the most, the best performing asset class. I think that was that wake-up call to say, oh, maybe you need to stretch a little bit more to add a bit of diversification to your portfolio. Which then brings me to your point on the increased complexity, which to Valerie's point is the hedge is diversification. As in, policy is going to continue to evolve globally, and every country has to, end of the day, look after its voters. And the policy that you see in China, which has had, zero inflation for the last 3 years, versus the US, Europe, and Japan, which today are maybe on the cusp of doing more stimulus. Right? So you see these two extremes. As in here, you have no inflation in China, where the theoretical textbook on economics you should be stimulating, right? But they're not. And over here, you have inflation. For the US, 3% inflation. I mean, US inflation has been above the so-called target of the Federal Reserve, of 2% target for the last 5 years. And you're still doing the same amount of easing and fiscal spending and more stimulus. Right? So then I would say, one needs to compare, and I wouldn't suggest trying to pick winners or losers, but just diversify your bets.
Valerie, you brought up the rule of law a moment ago, and we had President Trump just a few hours ago in the Oval Office once again talking about Fed Chair Jerome Powell casting aspersions at the U.S. Central Bank. Obviously, there's a lot of uncertainty in the country broadly, but there's uncertainty over Lisa Cook's position on the board. What do your clients say about that the U.S. had been this bastion of having a very rules-based order when it came to central bank policy and others? Now that's eroding. How much does that weigh on them? How much is that a part of the conversations that you're having?
Well, I think it's definitely an area of concern because, indeed, I mean, for 60 years or 80 years, the markets have been driven by, very certain legal regime. Really based on the independence of the different central banks. So I would say that it is an area of concern, and this translates also very quickly on volatility. I mean, when there had been this debate about Powell, well, you could immediately see, of course, the volatility in the securities business. So I think it's definitely an area of concern. And, gradually, I mean, all these questions about legal regime, about certainty that people had when they were investing, I don't think it is something positive for the financial markets. And that's something with which the politicians have to really realize, that you don't play with the trust as such. And when you see, I mean, I'm European, so when you see the gigantic amount of financing that Europe needs, because we're talking before about the European sovereignty, the necessity to invest in defense, in energy, in digital, name it, climate changes. It is at the time where politicians also need to understand that they should not, threaten investors. On the contrary. And so I feel that sometimes this is a little bit overlooked.
Jenny, what about the Treasury market in light of all of this? Can't talk about the kind of depreciation of the dollar without getting into Treasuries. And I'm curious sort of what you're seeing there and how much anxiety that brings up for you as we see that debt grow in the degree which Danny was talking about a moment ago.
Yeah. Look, I mean, I think the U.S. deficit is a concern, right? But it's not a concern until it becomes a problem. And so I think that it's proven to, like I say, the Fed can control the short end of the curve. They can't control the long end of the curve. And, of course, the concern is, if the U.S. is adding $2 trillion a year in debt, and Japan and China are two largest external holders of U.S. Treasuries, and they haven't been increasing. And between the two of them, they basically own about $2 trillion. You're going to have to find buyers. The good news is it's still sort of viewed as the risk-free investment. So it's more around what's the price that you get buyers versus, any kind of failed auction. So I think that it's still, my worry is over the longer run, does it crowd out other investment opportunities, not that the U.S. can't get funded?
Danny was talking about gold, non-fiat currencies. I want to ask you about digital assets, digital currencies, and maybe inelegantly wed this to treasuries. So there is now, it seems like, more interest in stable coins, and it strikes me that if that persists, that would be good for the U.S. Treasury market. How do you think that through?
Yeah, the funny thing with stable coins is it basically shifts funding to the U.S. Treasury away from the consumer in a bank, right? Because what are you competing with? You're competing with bank deposits, bank checking accounts, right? And so the stable coins are mostly backed by U.S. Treasuries. So for sure, and I think but the number's still like 300 billion or something in backed on the stable coins. And so, I think the longer term question is, do the banks use the technology there of blockchain to then be part of their deposit mechanism, and does it shift it back to the bank balance sheets? I would get worried if too much money left banks into the stablecoin market, and such that the funding mechanism is the U.S. government versus the end consumer, right? Because what do banks do with that money? They go lend to people. They lend to corporations. They lend to individuals. And so that's where I think more of the stablecoin issue. And then I thought you were going to sort of on the Bitcoin as a diversification on the reserve currency. Look, I used to be negative on Bitcoin in the sense that I'd say, well, as soon as it gets too big and threatens the U.S. dollar, then the U.S. will just make it illegal, like China did. But then kind of came around when I talked to folks. I remember talking to somebody in Israel who said my parents and grandparents had the government take away their money. They'll always keep a percentage in Bitcoin. Not in Bitcoin ETFs, but Bitcoin
the actual
keys,
thing,
where nobody can get to it. I had folks in the Middle East say, if I say the wrong thing, I worry that my accounts would be frozen. So it is still a fear currency that is out there in markets, big buyers in Turkey. Countries with big inflation, you tend to get big buyers of Bitcoin. So I think that is still, it is a viable currency, but not a threat to the dollar.
in the minutes we have left, let's look forward a little bit. And Danny, I think we all agree here that reports of the dollar's demise or displacement are greatly exaggerated, to borrow a phrase from Mark Twain. But I'm curious sort of what the world looks like. I think we used to talk about the dollar being displaced by another currency. Now it sounds like there's going to be more, in all likelihood, more fragmentation in the global currency market. What is the effect on that for investors? If we don't have one currency that's occupying by a yard a place of primacy, what does that mean for investors broadly?
I think most countries will have to continue to do significant fiscal deficit spending, right? Like in the US, in Japan, they're just about to embark on stimulus as well. In Europe, there's a lot of investments that need to be made. And then the question is, how does the government fund it? And during the last two crises in the GFC, followed by COVID, they always started the quantitative easing tool, right? And today, even in the US, they have just stopped quantitative tightening. And I believe in the next 3 to 6 months, very likely to start QE again, because you need to do that in order to keep funding rates low, or the deficit just continues to balloon even faster. So I think that, number one, my view is QE is here to stay, or in some ways the stealth modern monetary theory, which has happened in Japan. In Japan, the Bank of Japan owns, at the height, half of all the debt that was outstanding by the Japanese government, right? In the US, at the height, it was about 30%. It's fallen to about 13% right now, but it will go back up, right? So, and this means that ultimately you don't want to be keeping your savings in fiat, that you want to invest in something that has any form of scarcity, right? So it could be gold, it could be Bitcoin, it could be, high-end real estate and equities as well, right? And so I would say, again, for me, the long run is most governments will have no choice, especially if we have more job disruptions down the road, with technology. Then you need more, essentially, universal basic income. And to fund that, you need to print.
Let me ask each of you a question about exorbitant privilege. And I go back to what the foreign minister said this morning, that the U.S. has played this role of kind of a beneficent hegemon for a very long time. Valerie, talk a bit, if you would, just about the burden of having that exorbitant privilege. And I'm genuinely curious if you think it's something that maybe this administration, maybe there are people who think the U.S. should slough off. Maybe it's not worth it. I'm curious how you think about that.
Well, I think it is true that the US has provided the markets. When you see the ecosystem in the States versus the European, for example, it's striking to see that the depth and the breadth of the US market is really overpassed, many of the other parts of the world. Now, I think the arrival of Mr. Trump has created a wake-up call for Europe. We talked for many years about capital markets union, so now we are shifting more to savings and investment union. But it's not the change of name which matter, but it is the realization that there is a lot of money in Europe. You have a lot of savers. You have 13 trillion of savings in Europe, but it is not used really to fuel the economic agenda. And so there is a need to transform European savers into European investors. I think that's crucial for the European autonomy, but it will certainly require some time, because there is a change of market organization, there is a change of society, there is a necessity for a financial education. So unfortunately, I think that it will take some time, but I believe that going forward, you will have more and more, regional pools, but it will still be important to continue to interconnect these different pools of liquidity, because that's also how the economic growth is about. So,
Jenny, picking up on that, I wonder if you could make the case for dollar dominance at a time when I think that there are people in Washington who don't understand it fully. So maybe you could give us your perspective on what would be lost if it were to erode further. So we've talked about all of the deficit spending that's underway, the comfort that brings policymakers, in part that they're able to do that. Were it to vanish, what would that mean? Why is this something that policymakers in Washington should be fighting for at a moment when it seems like there is erosion?
Well, first of all, it's cheap financing of our debt, which is,
Pure and simple.
I mean,
Yeah.
we could not possibly operate as a country without, and already you look at the percentage of the U.S. budget that's now going to pay interest payments. If that goes up, it really crowds out everything else. And then the only thing I would say about Europe, the Draghi report comes out, how much was really addressed? Is Europe really going to stomach the reforms that it needs to do to be able to compete? Honestly, how many German entrepreneurs ended up in the U.S. because they'll say, I can get capital there, I can get innovation there. It's not that the talent isn't there, it's just that the market isn't there and the mechanism and the regulatory environment isn't such that people can be successful there. And so if you look around the world, I mean, it's really U.S. and China that has the great innovation that's happening.
But let me still be hopeful.
You can still be hopeful. And every European I talk to is like, yes, but. And I'm like, yeah, well, show me one. That's staying there.
And as European player, we are trying to do all our bit, so.
But it's still a fragmented market, which is what's difficult.
Daniel, I'll give you the last word here. I started by asking these two guests just about the moment that we're in. How do you see the stakes of this moment and where things are headed from here?
I think you have to contrast the lack of inflation in China or deflation versus inflation in the US and the rest of the world. And take a step back and see that it's ultimately about political will, right, in terms of what the government wants to achieve. That China has no inflation because they took active action to deleverage 3 years ago. Not great for capitalists, but actually good for the general population. And now the question is, does the West have that same will to bring down deficits, to bring down inflation? Or, the most likely easy out, politically easiest option is to just keep printing money.
On that note, thank you all very much. I appreciate it.
Thank you.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Nathan Hager. So much for worries about an AI bubble. Tech is leading a rally on Wall Street this morning. Right now, the S&P 500's up 0.9%. The Dow Jones Industrial Average is higher by 0.7%. And the tech-heavy NASDAQ Composite is leading the way, up 1.1%. Strong earnings from AI chip giant NVIDIA are overshadowing a shutdown-delayed September jobs report that's weakening the case for another Fed rate cut. 119,000 new jobs were added in the month. The unemployment rate ticked up to 4.4%. Labor Secretary Lori Chavez-DeRemer says they're solid numbers.
We'll have to see how November numbers come out in mid-December, but I think that this is good for the American people. We know that more people are wanting to work and they're actively seeking those jobs. And so it is my responsibility to make sure that we have that skilled workforce.
And Labor Secretary Lori Chavez-DeRemer tells Bloomberg another rate cut would encourage even more hiring. But Cleveland Fed President Beth Hammack is sounding a note of caution with inflation still above the Fed's 2% target.
Easing policy in this environment could support risky lending. It could also further boost valuations and delay discovery of weak lending practices in credit markets.
Cleveland Fed Chief Beth Hammack's words are being echoed by Fed Governor Michael Barr. He says after today's jobs numbers, the labor market is in kind of a rough balance. Morgan Stanley now says it no longer expects a Fed rate cut in December. The next round of jobs numbers doesn't come out till after that next meeting. Ukrainian President Volodymyr Zelensky is meeting in Kyiv with Pentagon officials led by Army Secretary Dan Driscoll. Sources tell Bloomberg they're sending signals that Zelensky should accept a 28-point peace plan that the U.S. worked out with Russia. It includes long-standing demands that Ukraine has considered non-starters. European officials are pushing back, including the EU's top diplomat, Kaja Kallas.
For any plan to work, it needs Ukrainians and Europeans on board.
European Foreign Policy Chief Kaja Kallas spoke to the BBC from a summit in Brussels. The U.S.-Russia peace plan reportedly calls for Ukraine to give up territory in its eastern Donbas region, remove sanctions from Russia, and drop war crimes investigations. Zelensky's office says it has received the plan and that he expects to speak with President Trump in the coming days. Funeral services are getting underway in Washington for former Vice President Dick Cheney at the National Cathedral. A bipartisan group of mourners has gathered there, including former President Joe Biden, ex-House Speakers John Boehner and Nancy Pelosi, and former Vice Presidents Kamala Harris, Al Gore, and Dan Quayle. Former President George W. Bush is delivering the eulogy. President Trump and Vice President J.D. Vance weren't invited. President Trump is saying a group of Democratic lawmakers should be put on trial. He's even suggesting they face the death penalty after they released a video telling government employees to refrain from following orders that break the law. In a social media post, the president called it seditious behavior at the highest level. He writes, quote, "Each one of these traitors to our country should be arrested and put on trial." In a later post, the president added, "Seditious behavior punishable by death." The video from Democrats was organized by Senator Alyssa Slotkin, a former CIA analyst from Michigan. Several of the lawmakers who took part are military veterans. Tomorrow, President Trump meets at the White House with New York City Mayor-elect Zohran Mamdani. It'll be their first encounter since Mamdani's election win on an affordability platform.
I want to just speak plainly to the president about what it means to actually stand up for New Yorkers and the way in which New Yorkers are struggling to afford this city. And frankly, cost of living is something that I heard time and time again from New Yorkers about why they voted for Donald Trump.
Mayor-elect Zohran Mamdani appeared on MS Now. President Trump has threatened to withhold federal funds to New York for electing a man he has called a communist. Don't call it a bubble is the message investors are getting from NVIDIA after its earnings. The AI chip giant boosted its sales outlook for this quarter to $65 billion. None of that from China. Bloomberg's Kriti Gupta has more.
We know that the White House has been urging Congress to say, loosen those restrictions. Congress really actually trying to tighten it, saying that we don't want to talk about selling our really high technology to China, to the Middle East, to other places around the world. The White House trying to seek those curbs. But at the end of the day, Jensen Huang saying, look, that 0% number on the Blackwell chips is actually a massive safety measure.
Bloomberg's Kriti Gupta reporting, and right now NVIDIA shares are up 1.5%. Walmart shares are higher by more than 6%. The world's biggest retailer boosted its full-year forecast for the second time this year, even though it sees rising costs. The company also says customers are willing to pay up to get stuff faster online. Walmart's moving its stock listing to the NASDAQ next month to reflect its focus on tech. It'll be the biggest loss ever for the New York Stock Exchange. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
We've got behind-the-scenes conversations with sports' greatest business people and athletes, from Serena Williams and Stephen A. Smith to Bill Belichick and Mellody Hobson.
Having been on the inside as a former global head of trust and safety at a large social media platform, do I think the main social media platforms today, with the current level of protections, are safe for children? No. There's more than enough evidence to show otherwise. Are the tech platforms that I've worked for aware of the examples of underage users who've been very negatively and often tragically impacted by the use of the platforms? Yes, of course they are. But they're petrified of being held responsible for the deaths of minors. It's a perfect storm of corporate greed for maximum profitability.
We're outside the Senate Judiciary hearing right now, and we're really expecting kind of a bit of a confrontational hearing.
This is such a relevant issue right now. Every parent knows when their kids go online, they worry about their safety.
First, I'd like to start by thanking all the families that are here today, all the parents who are here because of a child they have lost.
The families of Sammy Chapman from Los Angeles and Daniel Puerta from Santa Clarita.
Parents like Bridget Noring from Hastings, Minnesota, lost her teenage son. Amy Neville is also here. Her son, Alexander, was only 14 when he died.
Does the name Mason Edens ring a bell? He was a 16-year-old Arkansan. After a breakup in 2022, he searched for things like inspirational quotes and positive affirmations. Instead, he was served up numerous videos glamorizing suicide until he killed himself.
Mr. Zuckerberg, you and the companies before us have blood on your hands. You have a product. You have a product that's killing people. There's not one law on the book that's meaningful protecting the American consumer. Nothing will change until the courtroom door is open.
Welcome, everyone, to our May in-person meeting. I want to introduce the newest member of our team. He's going to be our summer intern.
Welcome, Patrick. Laura Marquez-Garrett. I've been here since February of 2022. I do, I guess, a little bit of everything.
I'm Glenn Draper. I'm one of the attorneys. Matt and I have worked together for years. I came on out of retirement to SMVLC last June.
I'm Matt. Set this firm up because I think that unless the civil justice system gets involved and holds these companies accountable, we're going to have several lost generations of kids. The social media companies know what their products are doing to young people. They know the levels of addiction. They know the levels of suicide, but they have no legal brakes on their behavior. These are not easy cases, but we have clients whose stories are resonant, whose harms cannot be swept under the rug. Hey man, just want to let you know I'm thinking of you. In the next month or so, we're really going to get the sense of whether we get to go forward on these cases or not. You know, the defendants have done well in the past getting out of this, but they put most of their eggs on the Section 230 basket, and if that basket's not available for them, they're going to have a hard time explaining why your daughter needed to receive those videos. Okay, hang in there, man, and give my love to Brandy. That was Tony Roberts, whose daughter, England, died 3 years ago today, hanged herself after being encouraged to do so online. So it's very real and very hard to think about somebody losing their child 3 years ago. I can't imagine.
Today just feels very special that everybody showed up. It's hard at the same time because we know we're missing someone, and that's why we question what happened.
I am so glad that we had 14 years that God gave her to us. I am a firm believer that we'll be together again one day, and until then, I think He has given us a mission and us to continue to fight. We had no idea what the social media platforms were doing to her. She never shared with us. She never told us that she felt bad. We found out these things afterwards. This was on her phone. Behind the social media life, nobody knows the real me, and how much I struggle to make sure everyone's good, even though I'm not. And when things are going wrong for me, I just become so suicidal. I looked through her phone about a month after she passed, and I found a video on her phone of a lady on Instagram modeling self-strangulation. And exactly what that lady did on that video is what our child did.
The social media companies know that our children are so vulnerable. To me, I feel that the only way that they're going to be forced to change is through a lawsuit. So that's why we're joining this fight.
We have clients who are so righteous in their claims, who are so pure in their desire to make a difference. Our strength is the voice of the children coming back from the grave, holding these companies accountable. And those children's voices cannot be quelled.
Are you holding it?
I'm okay. What about you?
Tough. Very tough.
Brandy Roberts from Louisiana.
Thank you for being here.
Thank you.
It really means a lot. Tony Roberts, Louisiana. Thanks for having us.
It's very meaningful that you're here, and I thank you. So let me turn it over to you.
Riley died by suicide on March 30th, 2021, after he was targeted through Facebook Messenger by a sextortionist who got him to send compromising images and then blackmailed him.
This is my son, Mason. He will have been gone for a year in about 2 weeks. On November the 14th is 1 year. I can't bring my son back, but I sure can do whatever I can to make sure that no other mother has to go through it. We have gone through it.
I'm Brandy Roberts. This is my husband, Tony Roberts.
Hi, and thank you all for having us.
We lost our daughter, England, in September of 2020.
This is a video of a lady with an extension cord around her neck tied to the top hinge of the door frame, and that's how we found our daughter. It's on Instagram right now. This is our daughter in the hospital. I want the world to know you do not want this pain. Nobody, no child should have to go through what our children went through. Give it to me, I'll take it all day. But when you're a parent and you look forward to dying every day so you can hold to God's promise that we'll be together one day again, I'll accept that fate too. Thank y'all.
I'm Glenn Draper from the Social Media Victims Law Center. There are thousands of kids across the country who have been harmed just like this, across every income level, across every educational level, in every state in the country. There are tens of millions of American kids who are spending hours every day addicted to social media, and the social media companies are targeting them to keep them online so they can show them another ad, so they can make another penny. And it's wrong that we continue to let this happen. So this has to be a top priority. Thanks.
Thank you for your persistence and for continuing to share your stories. I think it means more than you will ever know.
You know, these are all beautiful children. When the product design kills people, and they know it kills people, they ought to be held accountable.
Social media platforms have developed and created and programmed a very different type of algorithm that is not operated based on user choice. They are choosing what our children see. And they are choosing what will engage them at any cost, which it just so happens is extreme. These are children that have been addicted by these apps, and once addicted, they are being force-fed harmful, violent, terrible stuff to keep them hooked. I cannot tell you the number of young children under the age of 16 I've spoken to who will tell me they have been shown live suicides and murders on Instagram, Facebook, and TikTok.
Hi, Jenny. Yeah, good to see you. Yeah.
All right, so go upstairs and I'll show
Yeah,
you
okay.
his room. We gotta go this way.
Oh.
This is Mason's room. Pretty much the way he left it. The only thing that's different is the carpet and then the board that I've made. Those balloons are still left over from a celebration of life, but the kids don't want to get rid of them, so I don't blame them. Mason was a happy, silly kid. He played football, he was on track, always just smile on his face and goofy and funny. And just a kind, genuine person. This picture was taken on October 14th. He was gone a month later. This was taken the night before he took his life.
Can you maybe go back the last 2 weeks or so and then work up to...
Yeah. So Mason had some anxiety. He was going through a breakup, but we just thought it was normal teenage stuff.
Tell me about Mason's social media use.
4 months after Mason passed, I was poring over his phone, looking for answers. I started going through the TikToks the last 2 weeks of his life. And one after another, after another, after another were videos glorifying, promoting, normalizing suicide.
And you had no idea that he was seeing...
I had no idea.
Suicidal content?
Nothing. Mason never searched suicide. Never. He was searching for, my girlfriend broke up with me. I have a broken heart. He even searched for positive affirmations. Imagine feeling rejected, feeling that sadness, feeling like what you need to turn to is social media, TikTok, and you're searching for help, and what you're getting is suicide content. This one, it's very disturbing.
Today, we're going to be exploring the top 10 reasons why I want to...
My hand, my head. Are you okay? No. That's one of the bad ones, but it's not even the worst of them.
When did the dark stuff start?
November the 1st. And then he was gone by November the 14th. It was that quick. I remember every single second that night.
Tell me exactly what happened.
I'm trying to give him CPR. I need to give him CPR.
Okay, but that's
I'm trying to give him CPR.
Ma'am, I need you to take a breath. I need you to
He
be happy.
blew his head off.
Okay, all
He blew his head off.
Just how old is he?
Listen, he's 16.
I'm going to count with you.
Please.
Okay, start counting loud now. 1, 2, 3, 4.
1, 2, 3, 4. 1, 2, 3. I think he's dead. I think he's dead.
I feel like TikTok just put the gun in his hand and told him, pull the trigger. I mean, that's all the videos were telling him, to blow his head off. And then that's what he did. That's what TikTok did.
The committee will come to order. Our witness today is Mr. Shou Chu, Chief Executive Officer of TikTok. You're recognized for 5 minutes.
Chair Rogers, members of the committee, thank you for your time. There are more than 150 million Americans who love our platform, and we know we have a responsibility to protect them.
Mr. Chu, despite whatever action you take to protect teens, your algorithm continues to promote harmful content. Wouldn't you agree that indicates there is something inherently wrong with the algorithm your platform employs?
I do respectfully disagree with that. The algorithm drives a great user experience for many, many users.
2/3 of all the youth in our country are on your app. And you know, research has shown that TikTok is the most addictive platform out there.
It's not a fair fight, is it? I mean, the algorithms are on one side of the screen. The human brain is on the other side of the screen, drowning, in many instances, at an age where the brain's not even fully developed yet.
We do want to be leading in terms of safety of our users, particularly for teenagers.
Okay, the rest, I'm sorry. At the age of 18, I landed my first full-time job at TikTok. When I joined, there was a total hype around TikTok. I was actually quite proud to work at the company because I was part of this big mission. Then in the summer of 2021, I saw a Wall Street Journal article testing how TikTok is creating echo chambers, especially for young people that really have a significant negative impact. So I started my personal experiment, screen recording the new account to see how much time it takes for me to then be personally affected by these videos.
In Germany, we don't say.
TikTok is designed for you to spend more and more time on the app. And with every minute that you're on, there are 3 to 4 advertisement slots in your feed. So TikTok earns money with you spending more time on the platform. The algorithm identifies how much time you spend on a single video. You could have searched for inspirational quotes, but in the end, your feed is not reflecting what you searched for, it's what you spend time on. So I could see 6 videos that I just swiped through, and the 7th one has a really sad message, and I spent time on it. It took me 15 minutes with just a few triggers of likes and comments under different postings to make sure that my feed was just dark quotes, breakup content, and even people motivating others to support self-harm or eat disorders. When I saw these videos over and over in my For You feed, they had an impact on me, and I still remember a few days where I was just sitting right before midnight in front of my feed crying. I tried contacting a guy in London that was high in the hierarchy of the company, sending him my example of the screen recording and saying, hey, can you have a look into this? But he didn't even give me a single answer while I was at the company. I think TikTok as an app has a positive side when it comes down to impacting culture. But what I see is that the platform is really not a safe environment for anybody within the young audience.
When it comes down to choosing between the safety of the kids and the amount of advertising revenue that they can get, time and time and time again, the companies choose profits over safety. And do they know that kids are going to be hurt? Their own documents say, yes, they know. And brave whistleblowers have come forward and specifically put the documents in the hands of the executives.
We are gathered today to hear testimony from a whistleblower. He resoundingly raised an alarm.
In 2019, I decided to go back to work for Instagram. I kept thinking, well, surely the executive team doesn't know the extent to which teens were experiencing harm on the platform. And so I kind of made it my job to make sure that they were aware. So we did a study done by their own world-class research team that couldn't be disavowed. We asked hundreds of thousands of teenagers, have you ever received unwanted sexual advances on Instagram? 1 in 8, 13 to 15-year-olds. Yes, in the last 7 days. Have you ever felt worse about yourself because of other people's posts on Instagram? 1 in 5 kids said yes in the last 7 days. And once we had all of the data, I wrote that email, which is the one where you tell the executives that there's a critical gap in their understanding and measurement and approach to the harm that people are experiencing, in particular teenagers. And I sent that to Mark Zuckerberg, Sheryl Sandberg, Chris Cox, the head of product, Adam Mosseri, the head of Instagram.
In that memo, you disclosed to them that according to your own research, 1 in 8 children now, had experienced unwanted sexual advances within the last 7 days. Is that correct?
That's correct.
Those numbers are astounding. I just want to let that sink in. 1 in 8 within 7 days, a third of children outside of that window. Mark Zuckerberg, did he reply to you?
He did not reply.
Did he meet with you?
He did not meet with me. In my 30 years in the industry, if I sent an email like this, the next day I would have a meeting with the executive team. Every time. This was the first time I sent an email like this that I didn't hear back.
They sloughed it off. Money was more important than protecting children.
I think you should ask them that question. These companies will only work on the things that they're incentivized to do. Today, they're incentivized to maximize the amount of time people spend on a product. They're incentivized to maximize the revenue that they make from that, and we as a society have to pay the price.
The meeting is adjourned.
These companies have more money than small countries. Every case, every issue, they are going to throw everything they have at it to distract, to delay, to continue business as usual. But you have public interest organizations and nonprofits and scientists and researchers and parents coming together trying to make change. This is something that has to get done.
You know, if you think about what addiction does to a 30-year-old adult, right? Now put that on a 10-year-old or a 12-year-old. As a society, we are still just scratching the surface of what these companies have done to our children.
So in other words, if it is addictive, is there actual withdrawal?
Yeah, there have been a number of scientific studies now for addiction. Remarkable number of kids, over 50%, are reporting at least one clinical symptom of withdrawal, tolerance symptoms, or dependence.
It's important to remember that kids can try as hard as they can to stop using social media, but they're up against brilliant people who have invested billions of dollars to keep kids engaged for as long as they can. AI is pushing content that they know will be provocative, something fearful or anger-inducing, because we know that the more kids are steered towards this emotional content, the longer they'll stay online.
Yesterday, we got 8 new cases overnight. So we have 1865 open cases as of last night. By harm, the biggest change is the wrongful deaths. It went from 7% to 10%, a huge, huge jump.
Okay. Matt, we got 2 fentanyl poisoning cases in just this morning. 1 died 3 weeks ago.
2 today?
2 just this morning already, in the last hour. 19-year-old and an 18-year-old who died 3 weeks ago.
An important theme for the fentanyl cases is that this is a Snapchat-specific issue.
And we have to be very clear and very careful in our wording, right? But we're not saying people don't sell drugs on other platforms. But when you're talking kids and you're talking counterfeit pills, the most dangerous, that's when they go to Snapchat.
You know, this is going to be probably the most important brief we file.
I just saw a case come in 4 minutes ago where he bought drugs off of Snapchat and he survived.
Oh, thank God.
So I just...
Let's try to set up that call quickly, babe. Sorry, by the way, that's 3 fentanyl poisonings in one morning. It's not even 11 o'clock.
It's just, I can't believe
it's insane.
One thing that's different about the way Social Media Victims Law Center approaches these cases is that we try to really dig into data that's stored on a child's device. And an integral team member on that for us has been Jason Tanner, our forensic data manager.
I've worked in crime labs. I managed the forensics lab at Oracle. So got a wealth of experience there, and that's why they brought me on. And I was absolutely intrigued as a parent. I mean, I was getting choked up about it, just talking about it, just because in my life, like 12 years in the Marines, 4 years in the Secret Service, 15 years in e-discovery, this is the most important thing I've ever done. Hands down. Hands down. For example, this phone right here, this is from a 16-year-old kid who OD'd on fentanyl and nearly died. The goal is to be able to capture whatever evidence I thought was compelling, present it to the attorneys, and help give them the ammunition they need to do their job. Here's Snapchat, and this is the list of chats. Snap is useful when you don't want people to see what you're doing. So you see here, chats delete immediately, or I can change that to 24 hours from now, delete all that conversation, right? This is what Snap Map looks like. But you can see, I'm like, let's say I'm a dealer. I can easily locate you and, hey, I'm gonna be at the park around the corner. You can come meet me here. God, it's like the platform was built for that. So let's try to log in the web version of Snapchat. Working in Snapchat always makes me nervous. Just me interacting with it, but potentially make things just disappear, whether I wanted to or not. I'm going to take a screen recording of this. I mean, this seems a little bit suspect to me. Yeah, cannabinoids, CBD, THC. You're seeing a lot of drug-related content. This is this guy, Cart Plug. Plug means dealer. And this is all weed. How many edibles in a pack? Yeah, you got weed. How much is it? Is it like this? Is it like that? Here's another one. Can you pick up tabs 6 for $85? I mean, this is just making arrangements to purchase drugs. And you're seeing that over and over, various different chats. This is a drug menu posted by a dealer on Snapchat. If you were to ask me, out of the hundreds of cases that I look at and I review evidence, if it has anything to do with drugs, it's going to be on Snapchat. This is where it is 90% of the time.
We have a number of lawsuits pending here in the Los Angeles County Superior Court against Snapchat, and we should know a lot more about whether the courts are going to allow us to go forward by the end of the summer. We're hoping that by requiring Snapchat to face up and take responsibility for the people that it's injured, that they'll change their behavior, and that's what this is all about.
We're doing this for all the other kids out there that are going to fall harm to the same thing today, tomorrow, the day after that.
Amy Neville is the lead plaintiff in the Neville v. Snap case. She is one of the group of parents who tried to work with Snap. They tried to make change from the inside. They had ideas of how they could fix the product. They were told they couldn't sue, which for a long time they believed, until they realized that's crazy. There has got to be a way for us to force these companies to change those products.
I'm Chelsea with Channel 11.
Hi, Laura. Nice to meet you.
So many stories on this.
Yeah.
You guys are getting so many cases.
Sometimes 3 or 4 a day we get.
There was a time period we were getting on average 1 a day, consistently for weeks.
And when you say those numbers, are those people who've been harmed? Or
People whose children are dead because of drugs.
Families who've lost their kids.
From drugs being distributed, primarily through Snapchat. I think out of 104 cases, there's only maybe, we're up to 104. There's only 3 that did not involve Snapchat. If I'm a dealer and I want to sell something that I know is dangerous and I want to find a kid, I'm going to Snapchat. You just find one high school kid in your area, you add them, and then you add all their friends, and then you add their friends.
Because the app suggests them to you, right? And since all of your messages disappear in 24 hours, it's very low risk. Snap could change so that they keep this data on their servers without changing the user experience at all. All be invisible to the users, so it works exactly the same way for the users. But if there's a problem, police could come and get it later. If Snap did that, 90% of this drug dealing on Snap would disappear overnight.
I have spoken with over 100 families of every socioeconomic status, every race, religion, 2 parents, 1 parent, and the only thing all these families have in common is that their children died of fentanyl poisoning thinking they had purchased a Percocet or an Oxy that they get on Snapchat. You know, we don't condone drug distribution of any sort or purchasing. These were children who made mistakes and didn't deserve to die for it.
From the beginning, we asked to see what has Snapchat done to mitigate and eliminate predators from its platform. Today, we are begging Snapchat to fix their product. We want proof that it's been done. We want the death to stop.
This lawsuit is going to change the way Snapchat and other social media take advantage of our kids. And that is the best thing that we can get out of this.
You know, they selectively quote one section from Section 230, But Section 230 says it is a policy of the United States to encourage the development of technologies which maximize user control over what information is received by individuals, families, and schools.
That's just it. You know, and all of Snapchat is designed to take
thwart
that control away.
Thwart that.
Yep. 230 talks about user control. This case, we are alleging the opposite of user control. We are alleging that Snap created a dangerous situation and then manipulated these kids. This is the opposite of user control.
It's hard to think of any example of American jurisprudence where a statute has been interpreted so differently than either its plain language or legislative intent. But that's where we are. It's just a travesty because this is not what Congress intended in the Communication Decency Act in 1996.
We live in a highly technological society where access to information is critical.
We're here to have the law catch up with the technology.
Section 230 of the Communications Decency Act was enacted in response to the internet being born when social media platforms did not exist. Back in 1996, you had a system where you'd get online, you'd look for what you wanted. You had online bulletin boards, right? They're chat rooms. They're places where you, the user, have control. The goal of Section 230 was to incentivize platforms to take down harmful content without the risk of liability if they didn't. The provision stated that no internet service provider could be held legally liable for what users say or do on their platforms. Much later, young folks out in Silicon Valley developed new technologies, but they were technologies we didn't understand.
When we first launched, we were hoping for, maybe 400, 500 people, and now we're at 100,000 people, so who knows where we're going next. We've gone from having around 150,000 people in the fall to right around 3 million now.
Are you on Facebook yet? The site is up to 60 million users so far, with a projection of 200 million by the end of the year.
When social media came out, remember, we all thought this was going to be a new beginning. Isn't it great we can go on Facebook and find our high school girlfriend, or isn't it great we can connect with people around the world? And it was only when these products developed into algorithmically driven addictive mechanisms that the harms really became manifest.
Stark warning from one of the founders of Facebook. The site's first president, Sean Parker, is now admitting that Facebook was designed to be addictive.
The 38-year-old mogul admits he, along with other pioneers of social media, knew what they were doing.
It's me, it's Mark, it's the, Kevin Systrom at Instagram, it's all of these people. Understood this consciously, and we did it anyway.
Because of Section 230, because of these companies not being truthful, not being transparent, nobody knew what they were doing behind closed doors.
Over 3.5 billion snaps are created every single day. It becomes such an important part of your life. It's hard to imagine, communicating another way.
We are locked into these things, and kids are using them for 8+ hours a day. Children are waking up in the middle of the night and going to get their cell phone when their parents are sleeping so they can be on them because they cannot turn them off. For over a decade now, these companies have profited by taking what we create and post on their platforms, then feeding it back to us in endless streams of content that they know we can't look away from.
Facebook is under fire tonight following testimony by a former employee.
Almost no one outside of Facebook knows what happens inside of Facebook. The company intentionally hides vital information from the public, from the U.S. government, and from governments around the world.
Frances Haugen testified before Congress, and I realized this is very analogous to the tobacco industry. If you look at cigarette company internal documents from the 70s and 80s, they said things like, the base of our business is the high school student, and today's teenager is tomorrow's potential regular customer. And they knew that smokers start in their teens, and they actively marketed their addictive products toward minors through things like Joe Camel, knowing that those were going to be their lifetime customers. In the case of social media, you have internal Facebook documents released by Frances Haugen saying tweens are herd animals. Kids have an addict's narrative. Our products make girls feel worse about themselves. You have the same kind of corporate misconduct, knowing disregard of the life and safety of others, and a intentional decision to put profits over people. And so For the first time, I thought that the way to attack these social media companies is as product manufacturers, to try to adapt product liability theory to social media, and on that basis provide for the first time a legal handle from which injured people can hold them accountable and hopefully incentivize them to design and produce safer products. We're just opening our actual office. We're going to have our monthly meeting. There are 4 major hearings between now and November, so the next 2 months is going to determine whether or not these cases can go forward. Up until now, social media companies have been very successful in getting cases dismissed at the pleading stage, before there's been any discovery, before plaintiffs have had any attempt to gather evidence. If we can get discovery, you could uncover unethical or illegal activities. It would deter these companies from engaging in wrongful conduct going forward because they would know that their internal decisions could be scrutinized. Oh, look at us all. Oh my God. We're a real law firm. Can you believe this? Hey, how you doing? All right. What court deadlines do we have this week and the next week?
We do have a deadline. It's 10 days before the hearing in SNAP, and it includes a discussion of discovery.
And then in the Buffalo case, our response is due the 14th of October. The Social Media Victims Law Center does not have a lot of power. We don't have huge law firms behind us. We don't have a lot of money. But we have brilliant staff that have decided to devote themselves to making a difference.
These efforts to hold social media companies accountable, it's all consuming, not just because so much needs to be done, but because, and I know I speak for the whole team here, our whole team, because there's nothing else we would rather be doing. Before I started doing this work, I was an equity partner at one of Seattle's finest, most reputable firms. I had the corner office. I loved my colleagues. I love my job. I met Matt in January 2022, and by February of 2022, I was at the Social Media Victims Law Center. I have asked myself before, am I risking my children's college funds? Am I risking, economic stability? Am I going to make it more difficult on my wife? But the way I look at it is all the money in the world, if my children are in harm's way, if my children are harmed, if I can't protect them, it doesn't matter. Historically, if your child was sleeping soundly in their bed, you knew your child was safe. These companies have upped the stakes. They're now in your children's bedroom, right? It's invasion of your home. These kids have no safe place.
Last year, I was probably on the road 38 weeks out of the year, going into middle schools, going into high schools, talking about the dangers of fentanyl and also social media harms.
I think we're probably okay to get started, yeah? Okay. We are going to be talking about the fentanyl crisis. It is the #1 killer in Orange County of 17 and under. It's 3 years in a row now. We had to learn this the hard way after we lost our 14-year-old son, Alexander. This would have been his high school. He would have been 18 this May.
Alexander, by all accounts, was a pretty adventuresome kiddo who loved to learn about things. He was obsessed with the Civil War at one point in his life, and we would go to Civil War reenactments. That was his idea of a good time.
You're not gonna look, Alex?
I don't really care. I know what happened.
As he got older, I wasn't all that concerned about Alexander's use of social media because I wasn't losing him to it for hours at a time. He ate meals with us. We'd watch TV together. He was out skateboarding every afternoon, and we would spot check his phone maybe every week or so.
But we were looking for sexual predators and bullies because that's what the social media companies told us to look for. I don't keep it a secret that this kiddo wanted to experiment. That was the space that he was in. But we thought we were prepared for that. And we talked about drugs with Alex. We had all these safeguards in place, and yet we still ended up here. Some things I want to point out, there's this, we think kids are partying and taking drugs, and that's where these things are happening. But Alex died right down the hallway from me. It was supposed to be that, you say goodnight and you think your kids are safe, and it's just not the times that we're living in anymore. We give our kids these smartphones, we let them have these apps, and that is the equivalent of dropping them off in the worst neighborhood in our area and saying, good luck tonight, I'll see you later.
Your kid, when they're on a social media platform, is exposed to more predators than you ever knew existed. We have Instagram cases where children have been blackmailed by criminal gangs, and they've caused several suicides. In an effort to extort $50 from your kid, they're going to scare your kids so badly that they kill themselves. In the case of 17-year-old Jordan DeMay, one night in March of 2023, he was contacted by extortionists posing as a teenage girl. They messaged him on Instagram using the hacked account of Danny Roberts.
Generally, when we respond to suicides, within the first couple hours, usually we can figure out the reason why it occurred. But in this particular case, the obvious answers were not present. You've got someone like Jordan DeMay, the former prom king, the football star, the basketball star, and you wonder, how can this happen to someone? When you start reading these transcripts and looking at the interaction between the suspect and Jordan from Instagram, I guess you can see why.
Jordan thought he was talking to a girl by the name of Danny Roberts, and it wasn't until the extortion started that he then realized that who he thought he was talking to was not reality.
It's just kind of like a banter back and forth, and then eventually they disclose that they want to trade some pictures. So at the point that Jordan had sent some naked images of himself, the suspect account came back with this statement: I have screenshotted all your followers and tags and can send this nudes to everyone, and also send your nudes to your family and friends until it goes viral, ... All you have to do is to cooperate with me and I won't expose you. Are you going to cooperate with me? Just pay me right now. They don't want to give that victim time to think. They're going to put that pressure on until they comply. Jordan responded with, I'm killing myself right now because of you. The perpetrator says, good, do that fast, or I'll make you do it. I swear to God. I mean, once this starts, it just doesn't slow down. That's the scary part of this whole thing. It was roughly 6 hours from the time of initial contact to the point where Jordan had killed himself.
His bed is how he left it the last day he was here. It still smells like him in here. A mix of like teenage boy sweat and cologne and whatever. The way that his age group of kids interact was through social media. I remember he came to me and said, I can't talk to any of my friends because we don't text. We don't have each other's phone numbers.
Jordan spent most of his time on Instagram and Snapchat. They're communicating on those platforms all the time throughout the day.
Social media provided a place for these people using this hacked account to contact Jordan
and basically gave them a safe space to commit a crime.
There's a lot of things that went wrong that night, but ultimately Instagram is the reason it happened. Social media is the reason it happened.
Social media is hyper competitive amongst the different social media platforms. What they're selling is your kid's attention, and every minute that your kid is on TikTok is a minute that they're not on Instagram or on Snapchat. They have the most sophisticated minds on earth working on this to help them design these features. And this is true about all of the platforms, but it's particularly true about Snapchat. Snapchat has features that can incentivize your kid to be on more. One of them is the Snap score. The more people you communicate with, the higher your score gets. Kids like to compare their Snap scores. If you got a higher Snap score, that means you've got more friends on Snapchat. Well, how do you get more friends on Snapchat? One way is you accept the quick ad recommendations that Snapchat sends you. They have incentivized kids to accept these friend requests, and the friend requests include all manner of people that you don't want your kids talking to. So we are on our way to go see Michael Brewer. Michael was 13 years old when he took a fentanyl-laced fake Percocet pill that he purchased from a Snapchat dealer. And he was literally dead and was revived and suffered some pretty egregious injuries. This testimony is going to show the judge that Snapchat's full of it when they say that we don't know how it works. We know how it works. I bet this is them right there, actually. Hi, Michael. I'm Glenn Draper. Very nice to meet you. Yeah, thank you for doing this. I really appreciate it. We're going to make a difference. Come on in. Michael is pretty unique in our Snapchat fentanyl cases because he's still alive. He is somebody that could tell us this is how it really happened. Let me just tell you how it'll work tomorrow during a deposition. You'll be under oath, which means you'll be sworn to tell the truth. That's really the most important thing, that you tell the truth. Okay? Yeah. What did you like to do before you were injured?
I liked playing football.
Uh-huh.
I liked playing video games. I liked beating up my brother.
You were 13 years old. So you're at the head of the table here.
Stand by.
If you could raise your right hand. Do you solemnly swear that the testimony about to give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes.
Thank you. And down.
Michael, when did you first open a Snapchat account?
Around 10 or 11.
How long after you started on Snapchat did you start to receive this drug-related content?
When I was like 12 and a half. I got this guy who on my quick ad, his name was like Mary Jane and the tree emoji. When I quick added him, he originally like responded 2 days later saying, what you want? And then I was like, what? What do you mean? And then he sent me a photo of his drug menu. After that, quick ad. 5 or 6 out of 10 were dealers.
How often were you receiving drug menus in your stories feeds on Snapchat?
Every hour there were new drug menus.
What happened leading up to Christmas Day of 2020?
I was looking for Adderall, and then I asked this one guy, and he said, no, but I have Percocet.
Did he bring the drugs to you?
Yeah.
When did you take one of the supposed Percocet pills?
Pretty late on Christmas Eve, like 10, 11 p.m. I kinda blacked out after 30 minutes. My mom woke up in the middle of the night, and I was foaming out the mouth. I was cold to the touch.
Michael, thank you for talking with me this afternoon.
Thank you.
I want to thank our attorneys for having the vision right away for this case and believing in us and what we had to say after the many times we've been told you can't sue Snapchat.
Good morning, all.
Good morning.
These cases ask some very profound questions concerning the 2023 world of interconnectedness. Big picture abstractions aside, these cases involve, for some dozens of families, a terrible loss. All right, defense. Are you prepared to proceed?
Thank you, Your Honor. And Jessica Grant on behalf of SNAP, Inc. I think Section 230 immunizes internet service providers like SNAP from any claim, whether it's strict products liability, whether it's negligence, any public nuisance, et cetera. And you started your comments, and I want to echo them, Your Honor, by something that I think needs to be acknowledged in this courtroom, which is that we all feel empathy for the plaintiffs and their losses. This case is no doubt tragic. Although we all feel empathy for the losses that plaintiffs have suffered, the legal theory or the theories that are being put before you have been tried many times before. All of these cases, the content here was created by the drug dealers. Snap, its only role was an intermediary for the exchange of those two messages. So quite frankly, if those same communications had happened via text, via email, on the phone, would AT&T be liable for that drug deal? No, of course not.
Can I
Yes.
interrupt you, please? I hear you. I understand your argument, but I'm thinking to myself, maybe the better way for some or all of these issues to be decided is on an actual factual record where the court receives evidence from witnesses and documents, and the court gets an inkling of what's true and not true.
You don't need any discovery or any evidence. These are pure legal questions. Nothing will change the fact that the harm here is 100% dependent on the content.
Okay. Plaintiff side.
Your Honor, we are in the midst of a fentanyl crisis. This is the largest killer of young people, according to the CDC. Snapchat is involved in more of these cases than all other products combined. The design of the Snapchat product, which is separate and distinct from virtually every other social media platform, facilitates drug dealers to evade legal responsibility and evade and hide the evidence of their crime. For that reason, Your Honor, we believe that Section 230 does not immunize Snap, and at the very least, we ought to be able to conduct discovery to learn more about the nature of these products, the nature of how they interact with each other, and what Snap knew and when it knew it.
Let's take a break, okay?
That would be fine, thanks.
See you soon.
And I cannot believe that she would say that Section 230 immunizes them from any liability. Any liability. You know that's not true.
Yeah.
We've alleged that Snapchat is involved in more of these deaths than every other social media platform put together.
Yeah.
He gets that. So his point is, do we need discovery now on that issue?
She gave me a real gift with the telephone. If the telephone company says, hey, here's a drug dealer, here are you, hey, call you up, there's a drug dealer. I mean, this is not a passive intermediary.
I think we just keep pushing him where he's already headed.
Okay, we are back on the record. What would you say to Ms. Grant's point that one could say the same thing about Verizon or AT&T? Because these same communications between drug dealers and minors could occur on a cell phone.
I don't believe it to be analogous, Your Honor, unless Verizon and AT&T give drug dealers the phone numbers of vulnerable kids who might be potential customers.
If, hypothetically, I get past the 230 argument, and now we are in the world of, quote, products liability, is there binding California authority that says, Judge Riff, you've taken an oath to follow the law, this is the law, follow it?
I think there's a well-trodden path for you to follow in terms of if you're following the law and the great weight of authority. No one has held that these apps are products. They've held that they are intangible services. But maybe you could share with me, what exactly are you suggesting that Snap would be liable for?
I'm not suggesting anything. Plaintiffs are suggesting a pretty detailed collection of legal theories.
Right.
You know, negligent failure to warn, strict liability failure to warn, that the risk of harm outweighs the benefit of the design, et cetera, et cetera. And I mean, that's their theory.
Well, that's their theory, but of course we have to look at the actual facts. I mean, you can have a products liability theory what is causing the harm?
I know. And again, that's why I asked the question, and I'm struggling.
Judge, Snapchat could leave every bit of content regarding drugs on its platform and not be subject to liability, because that's not what we're talking about here. We're talking about the manner in which it is designed. What we have here is essentially a virtual equivalent of a video arcade with a room in the back where kids go to buy and sell drugs, and Snapchat is aware of that and profits from kids going to the video arcade. Well, for that reason, Your Honor, we believe that these cases should be permitted to go forward and explored through discovery.
I need to think a lot more and decide what I'm going to do. I just don't know what I'm going to do yet. Thank you very much. You're free to go.
This judge is very smart. He gets the gravity of what's at issue. I would say I'm cautiously optimistic, but you know, I think you know, I don't think we're out of the woods either.
I just want to say I think it's fantastic that all of us could be here together because I think there's power in numbers. Yeah. And I do feel like, you know, when the judge just gets to take a look at all of us and know that, you know, the pain that we're all enduring. And thank you. Thank you.
In that courtroom, we had a fair judge that was listening to both sides. And that's a beautiful thing about our system of justice, that at that moment, those families were equal to the billionaire companies that they were arguing against. And I got to be their voice. And that's something I'm going to be very grateful for, no matter what the outcome. We're here to bear witness to the captains of industry sitting in front of Congress. The last time something like this happened was 1994, when the executives of the tobacco companies were called before Congress and were asked under oath whether nicotine is addictive.
Gavel, guys. Everyone back. Gavel.
Social media is a very powerful tool, but we're here because every parent I know, and I think every parent in America, is terrified about the garbage that is directed at our kids. And each of your companies could do a lot more to prevent it.
We approve the content that is recommended on our service using a combination of automated processes and human review.
We made these choices after consulting with doctors and safety experts who understand the unique stages of teenage development.
The existing body of scientific work has not shown a causal link between using social media and young people having worse mental health outcomes.
Mr. Zuckerberg, did I hear you say in your opening statement that there's no link between mental health and social media use?
Senator, what I said is I think it's important to look at the science.
Really? Let me just remind you of some of the science from your own company. Here's some information from a whistleblower who came before the Senate, testified under oath in public. He worked for you. I know you're familiar with these stats because he sent you an email where he lined it all out. I mean, we've got a copy of it right here.
It's been years since I sent that email, years since I've had that conversation, and things have not changed because Mark feels that the company is doing enough.
Mr. Zuckerberg, why should your company not be sued for this?
Senator, I view my job and the job of our company as building the best tools that we can to keep our community safe.
Well, you're failing at that.
Well, Senator, we're doing an industry-leading effort. We build AI tools
nonsense. Your job is to be responsible for what your company has done. You've made billions of dollars on the people sitting behind you here. You've done nothing to help them.
Until they get compelled, it's not going to change because of the hubris of the people who run these companies, who really feel that they're doing a good enough job, or there's all of these kids that are proof that they're not.
Mr. Spiegel,
There are a number of parents whose children have been able to access illegal drugs on your platform. What do you say to those parents?
I'm so sorry that we have not been able to prevent these tragedies. We proactively look for and detect drug-related content. We remove it from our platform, preserve it as evidence, and then we refer it to law enforcement for action.
None of those efforts are keeping our kids from getting access to those drugs on your platform.
This is about making sure this doesn't happen to other children. I know because I've talked to these parents.
We need to stop buying the BS that these social media companies are telling us and take back the power from them.
You made a conscious decision that growing this business, expanding your revenue, that was the priority. The children were not.
Their own policy states that they don't allow self-harm. They don't allow child trafficking, drug sales, and things like that on their platforms. And every one of them lie.
To all the victims who came and showed us photos of your loved ones, don't quit. The damage to your family's been done. Hopefully we can take your pain and turn it into something positive so nobody else has to hold up a sign.
Have suffered a legal harm, have a place to go to seek a remedy.
This is really happening. We're really moving into discovery. This lawsuit is moving forward. This is another small step in moving the mountain to changing these things.
Hey there. Javier Milei has really made a splash since sweeping to power as Argentina's president. He's famous for waving a chainsaw about to highlight his opposition to government spending. And Milei's libertarian agenda has clearly won him lots of friends around the world, none more powerful than US President Donald Trump. So when the peso came under huge pressure this fall, Trump's treasury did something remarkable. It stepped in, buying pesos and promising billions of dollars in support. That was a big deal for Milei because he has Argentina in what's called a currency band to help fight inflation. And without US support, Milei might have had to abandon that band and let the peso drop dramatically. But what exactly is a currency band? What's the US promising? And what does it all mean for Argentina's economy and the US taxpayer? Let's try and find out. I'm Carmel Crimmins, and this is Reuters Econ World. Every week we go deep on the economic principles and ideas driving the biggest news around the world. So on this week's show, the Currency Lifeline. So to discuss all things currency, I'm delighted today to have Karen Stroecker, our Chief Emerging Markets Correspondent into Econ World. Karen, hello. How are you?
Hi, Carmel. I'm very well. Thank you for having me.
Can we get straight into the nerdiness, straight into the wonk? What is a currency band, Karen, and how do they work?
So a currency band is when a government, a central bank, would like to keep its currency in a certain range with regards to other currencies or other singular currency, maybe against the US dollar, for example. And there's somewhere in the middle, there's various FX regimes. You can have like a floating rate, which is like total free float that is dominated by market forces, determined by market forces. And you can have a peg, which is on the other end, which means there's, a currency is pegged at a certain level to another currency, usually a big one like the euro or the dollar or something like that. And currency bands are somewhere in the middle, right? They help governments to keep the currencies sort of in a corridor, but give a little bit of leeway to move either side of it.
And how do they actually do that? How do they keep the currency in that band?
So there's a few ways in which central banks and policymakers can do that. The most obvious one is direct intervention, right? If you see that your currency is weakening, you could just go to the market and buy it, create artificial demand, take some of your FX reserves, your hard currency, sell that on the market, buy your own currency. That will make it strengthen. Or if you see it's getting too strong, vice versa, right? Sell it on the market. But there's also, of course, other levers as well, like you have interest rates, for example. So if you raise your interest rates, automatically investors are keen to go into your markets and buy your debt because they're going to get a higher interest rate. They're going to get paid more to hold your debt, for example. And that will create inflows that create a demand that will prop up the currency and help it strengthen.
Right. Why would a government do this in the first place? Why wouldn't they just let the market decide what value the currency has?
There's a few ways of thinking about that. One is that it's much easier if a currency is stable, right? If you as a government, you have to pay for your imports, or if you're a country that exports, or your country, that has a lot of producers that import and then export, if they don't know what the currency is going to be like within certain levels, it will make their planning and their trading and their commerce very, very difficult, right? So this is just for planning purposes. Having a stable currency is generally seen as a good thing. As a policymaker, if your currency weakens a lot, that will make often imports a lot more expensive. So you can generate inflation, which is, exponential and running on its own. So you want to be careful about that as well. So helping your currency, stabilizing your currency is something that is very much desired.
So what you're saying, Karen, like with these currency controls, with currency bans, in theory, it sounds like a good idea. You're giving people certainty, investors, exporters, importers, certainty about where a currency's level is. But they've fallen out of favor, haven't they?
Yes, they have. I guess one big issue with currency bans and also currency pegs is that you really need to have a lot of firepower to make sure you can hold them. Because if they start unraveling, if they start going, they go in a really spectacular way. And the crash is then much, much more dramatic than anything else you might see. We really saw that in the Asian financial crisis. There was a time in the 90s, early 90s, when economies like Thailand, Malaysia, South Korea, Indonesia were running red hot. Mm-hmm. All the investors piled in there. They bought stocks, they bought real estates. Currency was really quite stable and gave an illusion of stability that was possibly not there. Because at the same time, a country like Thailand, for example, had huge deficits and they actually did not have the reserves to defend the currency if any sort of pressure would come. And as investors started to think a little bit more about those vulnerabilities and were a bit cautious, it started to unravel really, really quickly. It forced the Bank of Thailand to spend billions in trying to prop up their currency. Eventually, they lost that battle. They had to unpeg. They were pegged to the US dollar. They had to unpeg. The currency in the wake of that fell 50% in the months thereafter. And that has all the painful effects that you can imagine. Like there was a huge amount of corporate bankruptcies. A lot of them had borrowed short-term. A lot of companies had borrowed short-term. US dollar debt, couldn't pay back, went bankrupt. The country had a really severe recession. And that was just one of the blocks in Asia, right? And after that, these sort of currency pegs and very rigid structures to keep your currency very closely linked to a certain level fell very, very much out of favor. Policymakers now want to let them adjust to the macroeconomic backdrop to make sure that there's a natural level that the currency can find where possible.
Okay, quiz time. Argentina's economy has been going through a bit of a rough patch, but it wasn't so long ago that Argentina was one of the wealthiest countries on earth. In fact, at the turn of the 20th century, some data suggests Argentina was wealthier per capita than Germany, with a gleaming capital city to rival any major European city.